Good morning. Emergence starts today with a keynote. Please welcome to the stage Maarten Botman.
Hi, everyone. Good morning. Thanks for joining me here at the earliest session of the day. My name is Maarten Botman. I'm the CEO of GMCI. We are an index provider in crypto. So for the next 10 minutes, I'll be telling you about our indices, about our methodology, about how we price things, about what you can do with indices in general. A bit of background on myself. I used to be an index trader in TradFi for the last 15 years. So I was heading an ETF team of one of the biggest market makers in the world. I traded index options, I traded index futures, anything there is to trade on the indices. And one of the first things when I left TradFi and joined the crypto space was thinking, why is there no benchmark? Why is there no S&P 500 of crypto? And the simple answer is there isn't. There is simply no real benchmark that everybody is talking about. Everybody's talking about prices of Bitcoin and Ether. And that was it. So together with the block and Wintermute, we decided to start an index provider. So to start an index provider, first we need to understand why do we actually have indices? First and foremost, it's a barometer. It's an economic indicator. It simply shows what the health is of the industry. If the market is up, if there's a bull market, it's a healthy market. People are bullish. Then you can make passive investment products on indices. Many people simply want to have the performance of the index. Pension funds, asset managers, people simply want to see if the market is going up, that they follow exactly that performance. They can do so by buying index funds, by buying ETFs. Asset managers, they can track their portfolios using the benchmark. They can check what their performance is by benchmarking it against the index. They might be up 10% over the year, but if the index is up 20%, they're simply doing a bad job. So everybody should measure their performance against an index. There's sector benchmarking that shows the health of every sector of the industry. And with one click, you can simply diversify your portfolio and buy an index. It's simply the easiest way to trade. And of course, it's a key reference of derivatives. So for options and for futures, they're all based on indices, at least in TradFi. So we decided to make crypto indices. What are the essentials of a solid index? How do you actually build an index? How do you actually decide what's in the index? Well, it's all about the weights and what, of course, you put in the index. So what kind of assets do we include in the index? How do we make sure that there's no garbage in the index? Well, we have three inclusion criteria. Firstly, there's exchange accessibility. We only want to have constituents in our index that are listed on top exchanges. Secondly, there should be custody support, because we want to also issue cash products on indices. So we must make sure that there's actually custody support so that we can build cash products. And thirdly, there's a liquidity requirement. There's no point in adding constituents to our indices if they are illiquid, if they're not being traded, because then the pricing wouldn't mean anything. And then the weights. How do you actually weigh the constituents of the index? Well, we base our weights on the circulating market cap. But to make sure that Bitcoin and Ether are not dominant in the most broad indices, we decided to cap every constituent at 25%. So Bitcoin and Ether can never be bigger than 25%. This is also to have a broader index and to give the smaller constituents also the chance, let's say, to have an impact on the price of the index. We backtested this, and in let's say, a 4-year period, this has by far the best performance as well. And then, how boring it might sound, regulation is also a very important factor, because in the end, we want to have TradFi products on our indices. So we are fully BMR compliant. What does it mean? We have to stick to rules. Like the team that's composing the index, we can't trade, for example, during rebalancing. We can't trade during, let's say, any event that causes us to have insider information about what tokens will be in and what tokens will be out of the index. So now we have this. We have all the, let's say, the essentials of a solid index. We made our top 30 index. That's our flagship. We also have sector indices. How do we actually determine what a sector is? How do we make sure that if we make an L1 index, what's going into the L1 index? If we make a DeFi index, what's going into a DeFi index? I realize the letters are very tiny in this slide. What I'm trying to indicate is we have a very sophisticated taxonomy model that's developed in-house. It's thanks to the research team of the block and also our head of research. We have made a model that we can easily pinpoint to what sector and what tech stack a token belongs. This way we can make sector indices on DeFi, on DePIN, on meme, on gaming, and we can also make sectors based on the tech stack, so we have an L1 and an L2 index. So how does it actually look? What I get a lot from people is they say, well, Bitcoin is the benchmark, right? And they say, actually, it's so correlated, all the crypto. Why would you even need an index? Because, you know, it's all moving up and down at the same time. The performance that we have per sector shows it differently. You can see the GMCI 30 index, it more than doubled. Obviously, after the US elections, the whole market went up. This is actually an old snapshot of our website. This is of last Tuesday. We're already up a lot more. But you can see L1, it's actually underperforming versus the GMCI 30. L2 is not even on par from where it started at the beginning of the year. Meme, it almost went ×6 this year. So this actually shows that there's so much difference between these various sectors, and it's super interesting to trade on these. People don't realize that they actually can in a very easy way. So yeah, you can see it also in the meme index over there. You can see from March, it massively outperformed already the rest of the market. And you can see the L2, it actually from March onwards started really to underperform. So now we have all these crypto indices. What can we actually do with them? Well, that's the best part of it. We made them available for trading. There's perpetual futures on our indices. So with one click, you can diversify into the top 30. It rebalances every month. So every up-and-coming token is included every month, and every underperforming token is kicked out every month. You can trade narratives. We have a meme index. We have an L2 index that you can trade. Yesterday, we went live with the meme index on BitGet, for example. So if you don't know what meme to buy, just buy the meme index. Every month, we'll include the up-and-coming memes, and we'll kick out the underperforming ones. And you can do spread trading. This is something not many people do in crypto. So if you believe that your token will outperform the rest of the tokens, but you're not sure if the market is going up or down, why don't you set up a spread trade? Why don't you buy, for example, IMX and sell the gaming sector if you think that it will outperform the gaming sector? Even if the market is going down, you will capture the outperformance of your token. So it's a delta neutral trade, it's market neutral. Pair Protocol, that's one of our partners, offers these kinds of spread trades. It's fantastic. You should really try it out. And people ask me, the liquidity of an index perp, is it actually good? Like, who's making sure that it will be liquid? Well, we have 2 market makers that are supporting our products on exchange. And the liquidity of the underlying basket is reflected into the liquidity of the index perp. Why? Well, our index market makers, what they do every time they trade an index, they hedge themselves with a basket of tokens. So the basket of tokens liquidity is reflected into the liquidity of the index. An index is as liquid as its underlying basket. So where can you find us? The live pricing we give away for free. You can find it on Coinmetrics, on Pith, on Stork, obviously the website of the block. We have a couple of Bloomberg pages as well, full with historical data, with live pricing, and with everything. Trading, we're available on BitGet with the GMCI 30 and the GMCI meme index. We're available on Woo, on Vertex, on Unidex, and on Pair Protocol you can do the spread trading. There's many, many more exchanges to come as well. So we're steadily growing, and we have a bunch of really exciting announcements to make in the Q1. You can follow us on gmci.co. All the historical data is available, all the live pricing is available, the index methodology is available. And we have a stand here, of course, at Emergence. So if you have any more questions, please join us at the stand and we will answer all your questions. That's it.
Crypto meets AI. What are the opportunities? Our first panel discussion is hosted by Wendy Ye, Her guests are Rob Haddock, David Pachman, and Carlos Salort.
Good morning, everybody. What a good day, right?
Yeah.
Every day here in Prague is good. And our topic is crypto meets AI. What an exciting topic. And joining me today are Rob from Dragonfly and Carlos from Forta Foundation, I should say. David from Coin Fund. So we got like investors and also builders in this industry, which make this panel especially fun. And so I think I will kick off this panel by asking a very fundamental question. No matter you are investors or builders, that is, how do you see the relationship between AI and crypto? So Rob first.
Yeah, so we're getting right into it. This is great. I think it's important, or at least my mental framework is, what is bringing AI into crypto, i.e., things like a lot of what we're seeing on the agent side is stuff that exists outside of crypto that is making, interacting with blockchains or doing trading or, et cetera, better, right? So there's that piece. Then there's, what about crypto is uniquely enabled, or what can crypto uniquely enable in AI? And I think that piece is maybe, we've seen less product market fit so far, and it's less clear on what we're looking for forward. And so I try to, think about the world in those two kind of buckets, right? And I think it's been clear that so far AI has been, it's been helping accelerate, anything from, some of these like trading applications to, just like, building generally, having the same sort of value add that it's had in software development otherwise. But I think it's really unclear about the other side. And that's where, hopefully we'll dive into it a little bit. But I think there's potentially, more, money to be made from an investment standpoint, but because it is so non-consensus.
So very kind of a two sides thing, promising and also some like a challenging side. How about you, Carlos?
Yeah, so I think AI coming into crypto is about, in theory, they are two technologies, whatever you want, however you want to call it, that should have a lot of synergies, right? Like they are things that are like state of the art, they are like very modern. AI needs a huge amount of data. Crypto world has a lot of data, at least theoretically. So they really feel like they should be really synergetic. And then that brings a lot of people who are interested into one and the other, like, yeah, let's grow into the hype, let's do these things. And then they are coming into crypto and then starting doing some LLMs, some meme coins, some this usage that you can discuss whether they are that useful or not. But like, there is like a very clear synergy of why they can work together and like at least how it can start working together.
Yeah.
I also think about this intersection in two main buckets. AI is a massive software technical revolution, hardware too, actually. But and so we're building a lot of software in Web3, and we should benefit from the use of AI in a bunch of different decentralized applications, both in infrastructure, in security, and in the way user apps behave. So we need to bring a bunch of AI tools to software developers in crypto, and that's happening. But then there's this other conversation about like, can we or should we decentralize some parts of the AI stack, and is that good and practical and useful? And I think it's where most of the funding has gone in this space. And this is a non-consensus view in the AI world that, because the overwhelming majority of all the development in AI has been centralized. It's largely, the resources are controlled by 6 or 7 companies. Most of the most knowledgeable people about AI development work for those 6 or 7 companies. Not all, but most. And so if we want to have a future of highly centralized AI, then we should continue on the current path we're on, and we could debate today whether that's really good or not. But if we want maybe an alternate future where like compute resources to train really large AI models are more decentralized and maybe democratically distributed for access, then we should talk about the wonderful ways that Web3 does at decentralizing and democratizing access to tech stack or hardware. Maybe we want models to be more decentralized. Maybe we want costs to be reduced. So I think there's some really novel thoughts about how to bring decentralization to AI. But I would just point out that that's largely non-consensus in the traditional AI world and also unproven. So like it's a really good time to talk about it, but none of us know the answer yet.
Yeah, it's kind of a very balanced idea, I should say. It's not that bullish things. So I want to follow up David very quickly. I think in the interview you did like a year ago, you said that there will be a significant activity, like talking about investment of coin fund. So how significant it is in the past year? Can you share something with us?
This is the problem with having a moderator who's done their research, because you can't escape your words. Did I say that? Yeah. So, CoinFund has been very active in this intersection of crypto and AI. We've made 7 investments at the seed stage, so really early stage companies that are taking novel approaches to solving the sort of second bucket I was talking about, like decentralizing key components of the, let's call it AI infrastructure stack. So I'll just give 2 examples. There is the notion of, like if you are an AI researcher today, and I think Carlos maybe could confirm this, and you want to research or build your own, I don't know, 400 billion parameter LLM, the costs of training that model today it's probably $5 to $10 billion of hardware infrastructure, but then like the compute time itself, I don't know, I'm going to pick a number, $50 million, $100 million? Yeah. Am I in the right magnitude?
Yeah, probably.
Okay, so like that's expensive for a lot of startups, right? So you don't have a lot of startups building 400 billion parameter models. And by the way, I don't know what the next version of the big cutting edge transformers are. They're going to be more than 400 billion parameters, right? So more expensive. Okay, well, and only like 6 or 7 companies have access to those compute resources. So can we, look, when we built Ethereum as a proof of work network, what did we do? We built a decentralized GPU network where we plugged our GPUs in as nodes and we started solving a math problem and we got paid for it. So we've invested in some companies that are building the decentralized model training stack, right? Decentralized GPU. The issue is that's a very hard technical problem because of the latency of separating all those GPUs far apart. When the state of the art of training these massive models is to move them much closer together. So it's a hard technical problem. We've invested in some startups, I think, that are solving that, and we'll see if they're rewarded by, lower cost access for training models to anyone who wants to participate. The second is around training data, and one of the problems with the current state of the art of AI models is that they've scraped the entire internet without anyone's permission and without any compensation to the copyright holders, to the owners of the content, and that's being litigated in courts. What if we used decentralized technology to build opt-in marketplaces where data owners can put their money into training data sets, can put their content in training data sets, and then users can pay for it. And so that's just 2 examples of decentralized approaches to AI.
Yeah. How about Rob? What's happening at Dragonfly? I know you touched a little bit about the bearish side, but are you still looking at AI project? What kind of the use cases excite you most?
Yeah, so we're definitely still looking at the space. I think we've been less active than CoinFund. When we think about investing, we only have one fund. So we have one venture fund. CoinFund has a seed fund and then a venture fund as well. We tend to be, I think, a little bit more. We're not always at these really early ideation stages. It's not necessarily the right place for us to play in the way our fund works. So we like to see a little bit of product market fit, or we like to see that there start to be a real market that exists around these things. And so for some of the kind of call it maybe really cutting edge stuff, we've set that out, and I think we've been. I wouldn't say, well, maybe I would say bearish, but we've been really skeptical of this idea that there is going to be a market around things like decentralized training, or there's going to be a market around doing anything around models on chain or ML on chain. We have made a few investments, but they've mostly been around this decentralized compute kind of theme that David has talked about. One specifically on the edge compute side, thinking about local models. models where they're specifically for, call it latency insensitive workloads. I think, if we think about what does the future look like in crypto, I think there's likely to be, not in crypto, but in AI, I think most workloads will actually be latency insensitive. That's not what is happening today because we've seen just this rise of like ChatGPT and things like that. And so in that market, I think it makes a lot more sense because like latency doesn't really work in decentralized GPU marketplaces today, and GPU marketplaces exist outside of crypto as well. And so, so we focused on that, and then we have done, what I would call like one investment around like the agent side, decentralized kind of launching of agents. That's a place where I think it is probably a winner-take-most or winner-take-all market. I think there's going to be tens of millions, if not hundreds of millions of dollars in crypto venture that goes into that space. I think almost everyone will lose a lot of money. I think it's going to be a little bit of, this cycle's 2021 version of gaming, where we had like one or two things that came out and made people money, and everything else was just a complete wash. But it's interesting. It has a lot of mind share. There's a lot of people focused on it, and so we want to continue to experiment in that space. I think beyond that, probably the one area where I am very interested is how we think about coordination of global payments on chain, and especially a lot of payments that will happen, call it agent to agent or even agent to human. That's something we're spending time in. That market doesn't really exist yet, so we were trying to solve a problem that doesn't exist, which is typically not where I like to invest. But I see it being an obvious solution to just the pain points of payments, which is just and anyone who spent time in that space is just awful. And so that's kind of how we're seeing the world right now.
Yeah, that's fair enough. How about from builders' perspective? We're talking about like crypto meets AI. Technically speaking, I think we all mentioned there are kind of two directions, right? We can either bring crypto to AI or we bring AI to crypto. What you're doing actually is quite different from most crypto plus AI projects we're talking about. You may briefly explain what you're doing with AI and then trying to answer this question which direction do you think more feasible or more valuable, at least from a builder's perspective?
Yeah, I think what makes sense is to bring AI to crypto. I really feel that crypto, yeah, it's a technology, it's software, but in the end, what you have is a huge ecosystem with a lot of things to do inside, right? And AI, in the end, it's a tool. It's a very good tool, and there are several different flavors, and there are a lot of things that we can do, but it's a tool that you can use to get better at many things. I think that there's going to be a lot of power coming from AI, but it's not going to come into AI agents doing LLMs, doing meme coins, and this type of things. There's going to be a lot of value coming from AI on helping developers actually program. This type of LLMs that are helping you program, that's extremely useful, saves a lot of money. It comes with downsides, of course, right? But that's a way that crypto can benefit from AI tremendously. Security, and here absolutely no bias about what we do, but you can use AI to detect when a protocol is being attacked, when a transaction is malicious, and you can use that to stop that. That's super valuable, and it's an underutilized way of using AI because everyone gets a little bit lost on the hype of, oh yeah, LLMs are amazing, they can do everything. No, they are very useful on what they do. LLMs are a very useful tool at what they do, but they are not the solution for everything. Trying to use LLMs for everything is wasting the potential of AI. And I think that what we need to have is more people who actually have real knowledge of AI coming into crypto so that they can try to think outside of the box of just I want to do this meme coin to get rich immediately fast, and provide this value on the extra untapped part of the market where you can use AI to make things better. It's not going to be the super sexy way of oh yeah, we have this meme coin that was created by an independent agent, it's getting however many millions in TVL. Whatever, that makes things, but the value in the end is going to come behind the scenes of people who are trying to think differently and to use the correct tool for the correct problem.
Yeah, but that may be also kind of a non-consensus quote from David. Is that true? We have so many giant companies like OpenAI, Google, building very powerful AI things, and people like Elon Musk are already very cautious about that. And like Vitalik is kind of also say that we should not allow AI to dominate this world. And these people see blockchain or crypto as kind of opportunity to avoid that happen, right? So how do you win on this?
Well, this is, I think, a wonderful question for people in crypto to try to answer, and I think they are trying to answer it. So, like, if crypto didn't exist, if there was no Web3 and blockchains, and we were just looking at the present state and likely future state of AI, I think we have LLM progress and transformer models that are continuing to improve, maybe at a decelerating rate. I would let the experts opine on that, but that appears to be a narrative emerging that we may not get to AGI in the next year or two. Sam Altman says maybe we will, but a lot of other people say we probably won't. But transformers continue to improve, and the cost of training is increasing, and the data sets are probably the most limiting question, because we've trained on all the data we have, and now we're like more and more of the data on the internet is essentially partially synthetic because we're all using ChatGPT to generate our data. So like the data is probably a limiting factor. But still, we have just a small number of companies that control those models and can charge for it and can decide on the usage policies. If that's the future we want, that's exactly the future we're about to have. Or we can try to, again, like, have a different future. And I think most of the people working in decentralized AI believe in a different future. We should decentralize inference, so the cost of inference is lower even than it is today, and let anyone have access to like open source models that you want to, that are already trained, that you want to use in your projects at much lower cost. You don't have to pay ChatGPT to use them. Okay, well, that's like, there's a lot of startups working on that problem. We should have large data sets that are available to be paid for, so you don't have to steal them. And there's Bagel and a bunch of other companies trying to solve that problem. And the real hard problem, we should try to decentralize a training network. This is a very expensive component, the most expensive component today of AI. And we've made 2 or 3 investments, from Jensen to a few others that we haven't announced yet, that are really trying to solve this problem. I don't know that it will be solved, but it is a really interesting future. But let me maybe just change the topic just slightly. One thing we're great at in crypto is like pointing at the next thing and talking about this bright shiny object, rather than like celebrating what is actually working. And so like right now, what's working like more than anything is something we talked about 10 years ago, which is like payments. Like we finally have payments and the use of crypto for payments and money transfers. So one place in the intersection of crypto and AI where I think we could be really helpful today is if we have an agent-based future. Just think of agents as like super personalized automation, software automation, that you didn't have to tell it what to do. It trained on data to learn how to be, autonomous. Those agents will need to interact with money. They will need to make payments on your behalf, or you'll need to pay to use them. Well, crypto is like an ideal substrate to use as a way for agent-to-agent and human-to-agent payment. So there are a couple companies doing this. I think this is a super exciting area, and it like leans very heavily on the things that crypto is like provably good at today.
Yeah,
maybe I would just want to I want to add one thing to what David said, which is to your original question around like, is there going to be decentralized AI, and like, is crypto going to be a big part of that? I think there's what we want the world to look like, and I think all of us want the world to look like that. And then there's what the world probably looks like. And I always think about the world, or I think about incentives around everything. And right now, the incentives are aligned so that everything is a centralizing force, right? There's too much money to be made for too large of corporations and a small amount of people within those corporations that, when you look at where all the developers are, where the cutting edge researchers are, they understand that they are going to make a lot more money in the centralized forces than they are going to in the decentralized way right now. And in some sense, the biggest kind of technological innovation or innovation out of crypto has just been an economic one, which is that we can align people and coordinate through tokens and through kind of free money. But that is like happening, and we're trying to get that to work. But the reward has still been significantly higher on that centralized side. And with those kind of large corporate entities, it is such a big kind of North Star for them that it's reinventing everything they do. And that incentive structure, in my mind, is probably so big and so misaligned with decentralized AI that I find it very hard to believe, and maybe I don't have enough imagination, that we're going to get there. And so I've been, I think, pretty skeptical or pessimistic of that future.
Yeah, you want to add some point on David?
I want to add something about the incentives, because I think that that's the problem, not only in the way that you were phrasing it, but also on why most of research right now, it's based on LLMs, and like we are just keep doing the same thing. The research world is not ideal, right, in structure. And the problem is that right now, if you want to get funding, you need to publish like crazy. If you want to publish like crazy, you need to do LLMs. If you want to be relevant in LLMs, you have to be centralized, big, working for a huge corporation, spending millions of dollars so that you can actually do training. So it's a cycle. If you're like a smaller researcher that wants to do something actually new and not just trying to keep going with the wheel and going into the general like Gen AI, etc., you're not going to have funding. Like, you're not going to be able to have the resources because you are going to fail. You are trying to do something new, and research is difficult and risky, right? If you don't have that ability to fail, because if you fail to publish for 1 year, you stop having your funding and you stop eating at the end of the month, that's really not a good environment to foster this creativity on things outside of the mainstream, right? So on top of like making that, yeah, okay, doing it centralized, there is a lot of incentives, it's easier. It's also easier to go work there, just be another part of the wheel and create this stuff. But I really think that crypto in general, at the beginning, the point was to go outside of the wheel, right? And do this type of things and like take these risks and do the new technology and do the things. We are not doing that. And I think there is like a lot of potential on AI on things that are not LLMs. And I know I repeat a lot about LLMs, but I really don't like them. So a little bit of bias towards there. But I think that there is a lot of power there. People just need to have the ability to think about it, because like there is no incentive to do anything that it's not like a random meme coin that you're going to get like the cloud and appear on Twitter everywhere. Like, we are doing everything for, or like this world works a lot on like the noise that you are making. You are not going to make noise by making things that are like super useful, but not sexy because they are in the background and they are just making people's life easier, but not nicer and cooler and shinier, right? So I think that what you were commenting about incentives really applies in multiple ways into why we are at the point that we are right now in AI and in crypto.
Yeah, I will come back about how to build in project here, but I want to quickly follow up about David's comment about the AI agent autonomous. Do you feel like this like building on blockchain will bring any unique or specific challenges, you know, given the future of blockchain?
Well, I think I would maybe go back to our original framework. So I think a lot of people working in traditional AI believe in an agentic future. Sorry to use their buzzwords. But this is a future where we have deployed thousands, tens of thousands, millions of essentially like personalized automation, we call them agents, on users' behalf or on machines' behalf. And they're very purpose-driven. I think this is a highly likely future because it's a very natural evolution for what we're doing today. We're using AI to personalize. So I would expect there to be like high levels of personal and business automation. And you can see this working in like lots of use cases. You know, like the one Salesforce is talking a lot about is that if you're familiar with enterprise software sales, you know about this concept called SDRs, sales development representatives, who are basically setting up meetings for human salespeople, right, to go take a call. This will be reduced to agents, for sure. And then eventually probably salespeople can, in this context, you could see can become highly automated. And there are millions of people that fall in this category. So I can see a future of software agents, which means those of us developing software in Web3 should have access to the technology that builds highly automated agents. So this is that first bucket of bringing AI as a tool set to Web3 developers. This to me is like obvious, important, and like people are doing it, and we should be present for that. So I would say I'm really bullish that's a worthy investment area. But then you have questions about like, are tools companies great places for venture returns, and are we going to turn them into protocols, or are they really software tools and we're selling them as SaaS? So they're like investor questions. But I think that's like a place that I think we probably could get consensus that we'll see like some economic traction. But I really want to like emphasize what Rob said is like follow the incentives, because that's really where things go. And like does anyone know like the single company that has benefited more from AI in terms of revenue than any other company in the world? I mean,
NVIDIA.
What did you say?
You mean NVIDIA?
Yeah. Well, okay. So NVIDIA would be first, and then who would be second?
Like,
Facebook.
Yeah.
And because they have deployed Llama 3 to basically solve ad targeting, and they're estimated to have like generated probably $10 to $15 billion of incremental revenue, maybe more than that, once the IDFA like tags were dropped by Apple. Like you can't do ad targeting on the phone. So really, the problem that AI is solving that's generating the most amount of revenue today is ad targeting. So I just don't see that as a key component of like Web3's economic architecture today, which is why I think I'm agreeing with Rob. You should follow the incentives.
Yeah, I think here also like naturally flow to the next question about the regulatory. I mean, like AI is also facing uncertainties and also crypto. So when crypto plus AI, it means uncertainties plus uncertainties. So as investors and also builders maybe, how do you navigate? I know like as investors, we sometimes I would not say ignore, but since we're investing in like innovative ideas, right? Sometimes ahead of time, ahead of regulations. But how do you navigate? Do you have any guidance like when you are seeing any project about that?
Yeah, so I don't know if I have a good answer for this, especially on the AI side. On the, call it more, crypto financial services or financial application side, we've got more of a defined framework. I think what is obviously true is that, and we're sitting here in the EU right now, but clearly when it comes to, call it, data and information, there is a lot of regulation that exists here with GDPR and others that I think is going to probably over time hamstring some of this AI development within this region. And so the way we think about it is, okay, well, it's probably likely to be, especially post-Trump and depending on what happens in the U.S., we think that is probably going to be less likely to be true. Maybe in the U.S., less likely to be true in Africa or not. That's not really a hub of AI, but parts of Asia, et cetera. And so we think about it, I think, for a little bit more geographically. Now, when it was, call it financial applications, like it's very clear, like there were people doing illegal shit in like the U.S. and then launching protocols that were definitely illegal, and like they were probably going to be, even if they weren't found out by the SEC or targeted by the SEC, like you were taking a lot of risks there, and we would put a framework around that and not invest there. But the reality is like what I do is I get compensated for taking risk. Right, and so everything is a sliding scale. Everything is a gray area. If it's not something that I'm, think is, like an OFAC sanction, that is strict liability or something like that, we're willing to, take a lot of risk around regulation in these areas specifically. But we do it smartly in, okay, well, we think this region or this locality is better than others, and we do also tell our entrepreneurs sometimes, like, we think you are better off building within a specific place than elsewhere. So. That's maybe not a good answer, but I think, especially in the crypto AI crossover, I'm not as concerned today, post a Trump election, that we're going to have as much of a kind of chilling effect on the market as we maybe had in other parts of crypto over the last couple of years.
Exactly. How about as a builder?
Yeah, like coming from a completely different perspective, right? Like, I think something that can be done to circumvent this is just be bold. And I'm going to come back to something that you were commenting at the beginning about like this distribution of training. Like, for example, distribution of training, conceptually very cool, but like you have an idea how that's going to affect with regulation and stuff, right? But take that idea and you move one step forward and you're going to using centralized resources, okay? But let's distribute the data. Let's make sure that people actually can keep privacy over their own data. Let's go into federated learning and create some type of things that you can make sure that the data that you're using and it's going to be safe, but it can be shared in a way that it's not going to show you around. And it can be created to use these huge models without selling you around. So this type of federated learning, this type of completely different approach, I think it still encompasses a little bit this vision of like having distributed stuff without coming with the huge box of problems that is having distributed training with particular very big models. And it's just going to follow this idea of like, okay, we are caring about like being distributed. We are following our philosophies, but we are doing it in a way that if you go to the EU and you say like, hey, I am able to share your data for whatever you are doing without making sure that any of the data is completely non-identifiable, people can share their medical records to train like a much bigger model. I think that's something that can be at least addressed in a way that we do in crypto on this decentralization. It's just switching all our focus from having the models and like the weird things into let's decentralize the data and keep all the security that we want to have about the rest of the security, in the rest of the blockchain. So it's just like a different focus, and you need to be a little bit crazy about it, right? Like it's very, very difficult to actually be able to do this type of federated learning at scale with these huge playing fields, right? Like you cannot suddenly start sharing all the data from all the blockchain in a way that no one is seeing anything. But that's a way that preserving privacy and like making sure that you're doing things as privately as possible, it's a way that regulation is probably not going to hit as hard as if you go just randomly doing things and letting agents go rogue and do whatever they want to do on the blockchain.
Yeah, speaking of scaling, I also want to ask about the mass adoption. I think we briefly touched about it like in the previous discussions, right? But I want to specifically ask this question. We will not doubt mass adoption happening in the traditional world. It's already happening. But how about a more like a native, we call native crypto plus AI way? Is it mass adoption really happening? Or ultimately, will it happen? Will we see any mass adoption for like so-called native crypto plus AI projects?
Well, we haven't even seen mass adoption of crypto yet. So let's talk about that first. I think most of us are hopeful that this cycle is a cycle of adoption rather than another narrative cycle about the potential of crypto. Now, I don't mean like no one's used it. Like, you know, we've got hundreds of millions of wallets, and we know that depending on the country, there's at least 10 million to 100 million active users, like daily or monthly. Like, and if you really define it broadly, like you include the TON blockchain and Telegram, you know, there's a lot of people, but we're not at 1 billion yet, right? But it does feel like this cycle could be very different for two main reasons. One, like, what's the economic effect of the Lindy effect, right? The more times you see something, the more times you eventually believe it to be true. Well, like crypto has not died so many times that like maybe it's not going to die, right? Okay, so the rest of the world starts to appreciate and accept. But also we have application architectures much better for consumers, better UX, better wallet experience, lower transaction costs, faster transaction time. Prices go up, brings people in, and as Rob was saying, like in the US, a vastly different regulatory picture likely to solve some of the things that have held the space back. So we hopefully are entering a period of like much wider adoption in crypto, and I would argue like going to see that of stablecoins over payment over crypto rails like being the most likely obvious mass use case, and then a whole bunch of other things that follow because of that. So I think that's really exciting. But I don't think this is going to be a cycle where we turn and say, we're also going to see mass adoption of this intersection, with one exception. Like if you're using AI to develop software in Web 2, like which you are, like no one's writing a new Web 2 app that's not using some machine learning today, right? It's a key component of toolset. That's likely to be part of the Web 3 toolset this cycle too. But I wouldn't stand here and say like highly likely this cycle decentralized AI training or inference overtakes centralized.
Yeah, crypto has a problem of taking things that exist really, really well off-chain and making them worse and putting them on-chain and selling them to people that are already on-chain. And we see this across like all asset classes, all narratives, et cetera. And a lot of what is happening in this like AI crypto crossover is basically that. Now there are maybe ideological reasons for that to happen, but again, it's not necessarily the right incentives to do that. But I think will we see mass adoption? I think what is definitely true is if we see mass adoption of crypto, we will see mass adoption of things like agents because, again, this is software, right? And software is made better by agents and by the right toolkits and et cetera. So I think that will follow crypto versus like, i.e., that being the thing that brings everybody on chain. It's not going to work that way, and at least in our mind, that has the direction of travel wrong.
Yeah. One of the signs that we're seeing newcomers from the traditional world, both on the trading front and also on investment front, we're seeing like traditional institutions like VanEck also entering like investment, like investing in crypto and AI specifically. So do you guys have any like words to these newcomers? Any pressure or any other words?
Go ahead, Rob.
Listen, I think like VanEck is, they've done a really good job, and we're an investor actually in a VanEck linked project called Agora. But the traditional institutions, like I think at least in crypto more broadly, so not AI specifically, like it's very clear to me that every single one of them is figuring out and understands they need a strategy, right? That has been, that was somewhat true in 21, but it was a little bit more proof of concept, trying to figure it out, unsure if this made any sense. That, that perspective has completely changed in the last, call it year and a half, right? And BlackRock in many ways led that, kind of mass appeal or the people feeling, more comfortable doing that. So I think it is clear that every single one of them are coming. I hope all the investment firms don't come back in the same way they did in 21 because that was terrible and they had no ability to even think about the space and the correct frameworks. But I do hope it's true that everybody is building here, and I do expect there to be that to be true, and there to be a lot more things happening on public chain. People are starting to really come around to the fact that like private blockchains don't really work, right? Like it doesn't really make any sense. What's the point, right? And so public blockchains, if you are going to do things that are made better by crypto, like you have to be on public networks, and that piece at least I'm very bullish about. So what I would say is, please come on in and call me if you need some help.
Yeah, David.
I spend most of my time on our venture stage fund, Series A, Series B. So like Rob laid out, I'm really interested in proof points. I like finding proof points that other people aren't seeing, but it's not speculation that we're investing in. We're investing in product market fit. Highly confident that we have payment use cases, cross-border payment, money transfer, B2B, B2C, C2C, this cycle as a mass market investable category. There are questions. Is that a place where you can find venture returns, and where in the stack, and does it all go to the stable issuer? So I'm just saying like that's an area of proof so we continue to look for those intersections. I think we have a bunch of candidates for what those can be, but still today, the place that you would find most evidence would be in infrastructure, in Web3 infrastructure. So the big question I think most of us are watching is when the next year's Electric Capital Developer Report comes out, are there more than 8,000 people developing in crypto? Like, can we get to 80,000 this cycle, right? Are there way more, is there more inbound developer interest in building in crypto, whatever your use cases are? And that's the data to watch. I think it's the leading indicator of what adoption looks like.
Yeah, we only have 40 seconds left for this panel. To best use the time, maybe ask each of you to just to give like one sentence for people building at the intersection of crypto and AI. Rob? Oh?
Yeah. One sentence is, AI is amazing, but be scared of anyone that speaks about AI before talking about what problem they are solving using AI.
All right, great. Thank you so much. Thank you for your time, and I hope you enjoy. We have more exciting panels waiting at Emergence. Thank you.
Thanks.
navigating crypto's regulatory seas, compliance, challenges, and innovation. Tim Reed hosts our next panel discussion with his guests Tom Duff-Gordon, Janer Sevinch, and Marina Markovic.
Hello, everybody. Welcome to the regulatory panel. We got an all-star group here representing global crypto, and we're going to take you on a little journey around the world to better understand how regulation is a key issue as a fringe technology really becomes part of mainstream finance. So hope you guys learn a lot about this and it informs the development of your own businesses. So I'd like to have the panel introduce themselves. Tom, you want to go first?
Thanks, Tim. Good morning, everybody. Great to be here. I'm Tom Duff-Gordon. I'm the VP of International Policy at Coinbase. I've been at Coinbase for 2.5 years. Before that, I was in traditional finance for 15 years. So looking forward to the conversation.
Hi, everyone. Good morning. My name is Janer Sevinch, and I'm Senior Corporate Counsel to Gemini. Before joining Gemini, I spent some time in other crypto and payment companies over like 7 years, and I'm happy to be the part of this conversation. Yeah.
Hi, everyone. My name is Marina Markovic, and I'm leading the European Crypto Initiative, which is an advocacy organization based in Brussels. So in the last few years, we've been negotiating, working on the markets and crypto assets regulation. I'm working in the crypto industry for the last 7-8 years, and I'm very happy to be here. Actually, I was at a conference in 2018 here, so very happy to be back in Prague.
Great, guys. So let's dive into it. So each of you has a global view on regulation, and I think it'd be helpful to know why. Why is it important for companies and associations to have a global view versus just focusing on one jurisdiction? Tom?
Yeah, I'm happy to kick that off. When you think about regulation for crypto markets, the good news now is that globally, I think many countries are regulating. So I think even if you look back a couple of years, there were some big jurisdictions around the world that were thinking, is there a way to prohibit this or ban it, or should we regulate? I think the good news now is that we're moving forwards to regulation, and multiple of the kind of the big G20 jurisdictions, but also the smaller ones, are all now thinking about kind of moving forward and elaborating kind of different frameworks. But you have to have a strategy, because no matter how big you are, and Coinbase, we're a big global firm, we're noticing that there's a common theme in a lot of these different playbooks, but there are differences between these different jurisdictions and different countries within those jurisdictions. And for example, there's a balance between how much do you have to do locally versus how much can you kind of do globally. So these are global crypto markets. We want to have give people access to kind of deep liquidity, but then regulators, we can understand, have a concern about, local accountability, supervisability, making sure safeguarding is done at the local level. So it's really important to have a playbook and to think about how do you approach each different kind of like market, given that they're elaborating kind of different rules. Just one example, which has kind of popped up for me recently, is Australia are now kind of doing and saying more. They talked about staking being a collective kind of like investment scheme. In the UK, just recently, they said it wasn't one. So we are seeing a few of these different divergences, which means that you've got to think market by market. And for Coinbase, we have certain markets where we go very deep, and then we have other markets where we tend to service them more from a regional hub. So we go broad. So the strategy is go deep and go broad.
Janer?
Yeah, I think the core of is that, you rely on like blockchain or like specifically exchanges like Coinbase and Gemini. We rely on technology, and then we run an exchange, right? So like global playbook helps you to actually utilize your technology to the extent possible and comply with the regulations with little nuances. So that that's why I think you need to have the core playbook globally to the extent possible with like jurisdiction-specific nuances. I believe that's like the best strategy to run it. because I think Tom beautifully mentioned that there are expectations from regulators, and they may differ. So there is no way that you can have one playbook that fits all, and you definitely need product tweaks. You definitely need team tweaks. You definitely need website tweaks. A good example being in the UK, for example, all global exchanges right now, you see different UK websites for a reason, because we have different rules on financial promotions than Europe. So these kind of tweaks are needed, but I think idea is to use the global playbook or global core to the extent possible, so you can just plug in new website, plug in new team, plug in new technology, and just expand on jurisdiction. So I believe in that. We kind of trying to utilize that with Gemini to the extent possible, and this has been our strategy, I guess.
Fantastic. Marina?
So in a way, this technology has been global from the beginning. We had companies and teams that were working together from all over the world. And I remember very early in 2017, the European Union said, right now, this industry is not big enough. Let's just observe it, and then we'll see if regulation is needed. And now, at the time, 2024, I think most of the jurisdictions are thinking regulation is needed, and it is happening. And when I think about it from a perspective of, let's say, a new startup or a company, of course, there is a tremendous interest of growing, and that also means covering different markets. Those markets might have different rules or will have different rules in the future. And as you mentioned before, we have already seen, for example, the parts in MiCA that kicked in already with stablecoins. Most of the products that we already see right now will probably need to adjust to the specific regulation. So in the future, there might be basically a need to adjust your product at least a little bit to each of the jurisdictions that you would want to be present. And you're doing that because you would want to access the, in a way, users that are present in the jurisdiction. So in a way, I think it's really linked to the growth of the company and the presence at this specific market.
Yeah, just to add on to that, I've had a lot of conversations yesterday with entrepreneurs who are very early stages, and they're really struggling to figure out where to domicile their business for a variety of reasons, from tax purposes to clarity of regulation. I think it's really tough. I mean, everyone on the stage here is working for a very mature organization. And I think it's tough for the smaller entrepreneur to figure out where to go first. Do you have any, I mean, if you kind of put your entrepreneur hat on or founder hat on, do you guys have any opinion on what you would say to them?
Maybe I can, start with that. So I think I've been working on the licensing and regulation like over 7 years now, and whether it's payments, whether it's crypto, everybody asks, where should I get the license? Where should I apply the license? And the first question that I ask, where is your team? What is your product? I hate to say that, it depends, but it actually depends. So it's an important decision. That's one of the most important decisions that you will be kind of you need to make. Mm-hmm. But I think the first thing that you think is, where is my team? Like, where is my core team? Like, where is the mind of this business? And then you have to think about, what is my product? And that's how I can roll and expand this product from that jurisdiction. What are the rules about cross-border? What are the rules about, reverse solicitation to other states or jurisdictions? How open the conversation is with the regulator? Can I just, pick up the phone and call them? Or do I need to just send an email and just wait for 45 days to respond? These are all very important, I think, questions. But my idea is always get like a few questions answered. First, where is my team? Like, where is the actual substance? Second, what is my product? And does it fit with the regulations there? Third, like, how open the conversation is with the regulator. I think these 3 questions are probably the first ones that I would just ask myself, and then come to the decision making after.
I love that, and it reminds me, one of the first things at the company that I'm a part of in Bermuda, when we're talking to companies and fielding incoming questions about why Bermuda versus BVI, Cayman, whatever, which people always get confused. It's my first question for them is, who are you raising money from? You know, you're going after institutional investors, and who are your customers of your product? Because if you're just if you're largely a retail play, and the retail audience, and you're doing like maybe like a Reg A or a DAO to raise money, people probably don't care that much about where you are. So you could go to a relatively easier jurisdiction to set up. But if you are going after institutional money and clients, you need to go with a more reputable, more rigid jurisdiction, and that can sometimes be tough. It can be a slog, but I think you get what you pay for. So, but I think, yeah, having that checklist of sort of, anyone want to pile onto that, or should we keep moving?
I just wanted to add on the compliance part. I think looking into your product, some products do require, if you, for example, issue a stablecoin in Europe, they do require your company to be incorporated in Europe, at least like one of the subsidiaries. So that is also going to maybe change according to your product, as you mentioned.
Yeah. Maybe that's one thing that I may have missed. That's like talent, how to reach a talent, and how to retain that, how expensive is to reach that talent, and to what extent you can outsource or utilize your resources on the other jurisdictions. I think these are also quite important. If you already have, an operation in other jurisdiction, can you just, utilize that with outsourcing or a similar arrangement? That would be a very important. And then, yeah, especially when it comes to compliance, it's very personal. So your compliance team needs to have personal relationship with the regulator most of the times. So finding the right person, being able to retain that, and these are quite important as well, I guess.
I agree with everything that's been said. I would just add that one thing we look for is also a bit of tone from the top. So from the government, we've talked a lot about regulators, but it's helpful for us as well that the government, and whether it's the finance minister or the finance minister, they have a vision with regards to this technology. Our view is this technology is a transformative technology, that using crypto, we're going to totally transform payments, we're going to transform capital markets, but also we're going to transform the internet via Web3. And so whether it's part of the industrial strategy, but understanding that this is a priority from the government is helpful, because I think that provides air cover and support for the regulator as they try and then balance the really important twin prerogatives and objectives they have around protecting consumers and market integrity, but also fostering innovation on the other side. And so I think finding that balance and that support from governments, and I think in Bermuda is a good example of where we have that, but also here in Europe, that's a key component to be taken into account.
Well, and that's, I like it when these conversations just evolve organically. The Prime Minister, ex-Prime Minister of Czechoslovakia spoke yesterday. I know some of you weren't here, but he wants Prague and Czechoslovakia to be the gateway for digital assets for Europe. So case in point. But it's also interesting how that also then can start to politicize digital assets. And again, we see that in Bermuda, where there are believers and non-believers, and it gets political very quickly. And so that's something that obviously the leader has to navigate, and the company getting licensed in that jurisdiction has to be aware of that. And you're in charge of policy, and a lot of you guys get involved with that. So I guess I'm preaching to the choir, but it's just one of those things you have to do, and you have to do it. You have to rinse and repeat that process. Actually, it's not rinse and repeat. It's different in every situation, isn't it?
Yeah.
Does anyone have any quick anecdotes that might be helpful to the audience about how to navigate that? from a political standpoint, as you look at and you say, maybe we shouldn't invest time in doing this licensing in this jurisdiction because it's going to be not worth the time and energy, or maybe it is?
Yeah, I mean, shall I start? I mean, I feel like the elephant in the room is the US political situation, right, when you talk about this. And I think, as you all know, Coinbase, but also, the Stand With Crypto movement and, some of the other bodies, we work very, very hard, right, to try and drive regulatory clarity, political clarity in the US for this industry. We had a situation where we had regulation by enforcement. We had a difficult situation. We didn't have clear rules. And because of the political pressure that was kind of being put on the industry, I think it was important for the industry to react to that, right? And so because there was a kind of political suppression of kind of demand and people didn't want to invest because they didn't see the kind of the clear rules, we had to kind of then step up our political activity. So we stepped up the political activity, working with the kind of community and working with lots of others. And I think as a result now, we've got, a very kind of pro-crypto president-elect moving into the White House. We're going to have a change of personnel, the regulator. We've now got a crypto czar in the US, who I think David Sachs was appointed last night or this morning. So change of personnel, change of policy, and it looks very, very kind of positive from that perspective. So occasionally, I think if crypto is being politicized, then I think you do have to enter into that political conversation. And again, what's funny is that we were advocating and lobbying for regulation, not for deregulation or anything like that, but to be regulated and for there to be clear rules. And in a way, some of the market action, price action that we're seeing, in my mind, shows that demand was suppressed by the fact that politically there was pressure on the industry and we didn't have clear rules. And if you take that away, the kind of mean reversion and the demand that is there, I think, is beginning to come back in. And we're seeing this really positive market as a result of that.
Yeah, and completely agree with that. And I think as an industry, we have to keep pushing. We have to, for example, Stand With Crypto is a great initiative on that. But not only that, all industry bodies, I think we need to keep pushing for clarity, not necessarily for a specific kind of regulation, but for a clarity. I think when there was like a recent change in the UK government, like everyone was like, everyone had question marks in their head. So because there was a consultation, there was like a framework from the previous government, and then we said like, okay, where do we stand now? Like, is it going to be rewritten? Is it going to be taking off from where it was left? And I think industry made a great job to push for a new roadmap just a couple of months after new government comes in. So now we have a better clarity, but it wasn't an easy work. It was industry bodies, pushing for that to the extent they can. It was companies. It was, a whole bunch of different groups coming together, stand as one to get this clarity, and this is how we achieve it.
I think when it comes to policy and advocacy, it's like really interesting to see this co-petition happening. We have like, companies that are doing very similar things and they might be competitors in the market, but when it comes to policy, they come together and we really are like a unified industry representing our interests in front of the regulators. And there is a lot of effort being done. You have probably heard about all the reactions to the enforcement actions happening in the US, and sometimes when I compare the US and the EU, I think about the US as a Hollywood action movie. There's a lot of like things happening in the court, and they're suing, etc. Enforcement actions, but in the EU, it might be a little bit, I would say, slower and quieter. But there were huge changes happening in the last 5 years, and we have managed, together with other organizations as well, to change, I would say, around like 20-30% of the MiCA draft from the one that was first issued in 2020. And that was with continuous meetings, in a way, position papers, discussions with regulators. So it's not really just a giving, it's a result of like countless hours of work and funding, of course, from industry participants for something that we have today as a framework that I would say it's overall positive for Europe.
So perfect transition into diving into MiCA a little bit. Obviously, it's top of mind for many people. obviously there's probably mostly Europeans here at the conference. So I think as a MiCA expert, it'd be great for maybe you to give a quick overview of what it is, just for those who may not know much about it. But more importantly, what are the, how do you view it going? There's some looming deadlines happening, and what are sort of the challenges of implementation?
Yeah,
obviously,
absolutely.
it's a big question.
Yeah, now it's very important timing for MiCA. So MiCA is supposed to kick in to be applicable by the end of this year, and there's so many still questions that we have that are not answered. But I'll start from the beginning. So the Markets in Crypto Assets regulation is a regulation which means it's going to be applicable in the same way all over Europe. And this is, I think, one of the really positive things that MiCA is bringing, that a project that needs a license can go, let's say, in the Czech Republic, talk to your national competent authority, register there, but then have the possibility to passport this license all over Europe. So you have one entry point, but then you can access the whole market. And that's what we were discussing before. You really want to be present in the whole market in Europe and not going to 27 different national competent authorities, plus the 3 ones that are coming from the European Economic Area. So that is a big plus. The other thing that we are, in a way, looking into from MiCA is that MiCA has 2 different parts that are very important. One is regulating crypto assets, or specifically the issuance of crypto asset. Whoever wants to issue a crypto asset, offering to the public, listing on an exchange, they would need to follow certain rules that are mostly linked to an issuance of a white paper. That is a very specific way of how you write the white papers. It's a little bit different from the ones that we wrote in 2017 for the ICOs. And then the other part with MiCA is really covering crypto as a service providers, similar to the ones we have represented here, like exchanges. And those, they need the license. And they need the license to operate in Europe. And actually, the license is giving you access, again, to the users. When you're not having a license, you are not able to, in a way, communicate to the European Union users. And this is very important because we will probably see changes going on. If you are, for example, a user of a company that will not get a license, there will be still, I think, limited possibilities for you to continue using this service. It really depends where the company is based and how it is going to go on with the operation. So this is, in a nutshell, what MiCA is. What we are in and what the situation is at the moment is that since MiCA should be kicking in at the end of the year, unfortunately, we are not ready yet. And I'm not saying that the companies are not ready, but the regulators and the authorities are not ready for most of the ones that are in the European Union. So we have something that we call a secondary technical process that is coming from, standards, guidance coming from the European Securities Market Authorities, European Banking Authority. They're not finalized yet, although they should be by this time. This is the first thing. And the second one is that some national competent authorities have not yet opened officially the application process for getting a license, or they have just done that a few weeks ago, which doesn't really in a way, allow companies to go through the whole process and obtain a license. So we are here at this moment. I think that, unfortunately, is not the best one for the ones that are looking to get a license under MiCA. But I think that what was positive through the whole process of negotiating MiCA was that the regulators, the European Commission, the Parliament, the Council, but also ESMA and EBA, they have been very open to dialogue and discussing with the industry. And I think we will try it, and everyone is trying to find a solution, and they're doing their best. But it's somehow something that happens in Europe in January. When we do have a deadline, not every time this deadline is met, especially when it comes to such a big piece of regulation that is a new one for the industry and for the whole European Union.
Great summary, thanks. How's Coinbase thinking about MiCA?
Well, I was just going to jump on that, and it was a great summary. I mean, Mika is really powerful because it gives you, there's one entry point and access with the Mika license to all 27 kind of like member states, almost, one of the biggest single markets in the world. So it's a really exciting, it's a powerful license. There's a lot of work to get it. I will say right now, across the European Union, the rules are a bit of a patchwork, and you've got AML requirements, which are kind of the dominant requirements. The step from those to Mika is a big step. So I think we're going to see quite a big change in the kind of competitive environment as we move into Mika. And we're all doing a lot of work behind the scenes to make sure that we're ready to be compliant. I will also agree that Mika is very positive. We haven't yet, though, seen the final rules, to your point, and it goes live at the end of December. So I think what we're hoping is that there'll be this period of kind of collaboration and dialogue, not just for the companies that are for the first time going into this licensing regime, but also for the supervisors and regulators for whom this is also a brand new framework. So I think there's going to be this period of kind of adjustment and collaboration that we hope, moving through this grandfathering period for kind of 12 months. So it's a really kind of powerful kind of like license, a big step up from where we were. And I will just add one thing where we also need to work out how Mika interacts with some of the other kind of regulations that we have across Europe. And Europe, there are a lot. One in particular that I'll call out is the Payment Services Directive, which is PSD2. So the way that Gemini and Coinbase, the way that we handle stablecoins or EMTs, depending on whether they're used for payments or whether they're used for custody or for trading, we're going to have to think about what is the overlap or underlap between the Mika license and then payment services license. There are some other interlaps with kind of DORA and various other things, but that's the other thing about Europe. You have to make sure you comply with the singular kind of like narrow license and then think of all the peripheral kind of regulation that applies too. So it's an exciting time, but I think the key point is this kind of collaboration with regulators and supervisors as we move into this brand new process.
Yeah, like I remember when Mika was first published couple of years ago, we said, oh, Mika is like a very important piece of legislation, but we are not there yet. It is funny that it's been maybe like 2-3 years, and we still say the same thing. And yes, unfortunately, that's still the point. But we embrace Mika. We really think that it's important for all the reasons that has already been explained. I think I want to emphasize, like, definitely important piece that how it interplays with other, legislative pieces, not only Payment Service Directive, but like DORA. DORA is a bigger part, maybe kind of shadowed by, Mika and others. But like, if you don't have any other entity that will be subject to DORA, like Mika can be your first entry point to comply with DORA as well. So I think that should definitely be minded. And also during this transitional period, so they have, if you operate in multiple jurisdictions, you have different transitional periods. It's like having a fridge with, ingredients with different expiration dates. Like you have to make sure that you also follow those up for these periods until we have the final rules. So I think it will be hard to navigate, as the name of the panel, just indicates.
Great. So we got about 10 minutes left. Let's toggle over to the U.S. There was quite a good panel yesterday about the impact, but I'd love to get our panel's view about what the outlook looks like. Obviously, we know about all the positive developments, and but what are in your view, having global roles, what are the implications of the U.S. starting to coalesce around crypto from a regulatory standpoint? Anyone?
Yeah, no, I'm happy to start on that. So we talked about the positive developments that we're seeing in the US, and we hope that drives legislative clarity. Maybe we get a stablecoin bill, maybe we get something on market structure within the first 12 months, maybe something within lame duck, who knows? But definitely there is kind of a pro-growth, pro-innovation, pro-crypto agenda now there, which is really exciting. And that is being noticed. So I can give you some kind of anecdotes. Again, I mentioned it before, but I was on the other side of the world. I was in Australia, and suddenly we were doing Stand with Crypto, and crypto then became front page news. And I think it's because people see that the US is now beginning to move. And I think that has an implication for countries that have not yet stepped forward with licensing regimes. It makes you feel like now's the time. We need some momentum. There's price action in the market. We need to protect consumers, but allow them to participate in this really exciting area. And for those like the Europeans that have a regulatory framework, I think it makes them think, how do we capitalize on that, right? How do we make sure that we press home the advantage? In Europe, I think Marina said it really nicely. They've been thinking about crypto asset regulation for, I don't know, since 2017, 2018, which is fantastic, really forward thinking. But we've almost got to kind of now just embed and implement the regulation and then think about how do we commercialize that? How do we use that to attract innovation, bring Web3 companies here? How does this industry contribute to the competitiveness kind of challenges that were laid out by Mario Draghi? How do we use, this new technology to help with the capital markets union? So I think Trump and what's happened over there creates a lot of momentum, and then that leads to positive reflection in multiple other jurisdictions about, okay, either we've got to move forward or we've now got to really kind of capitalize on the regimes that we've got to kind of attract investment and to drive some of this kind of like industry growth and jobs. So it's a really exciting time, I think, to be here in Europe on the cusp of MiCA with the momentum now in the market and from the US. And I think 2025 is going to be very exciting.
Johnner?
Yeah, I mean, I can't really add much. I think it was a great summary. Definitely important from two aspects. First, institutions, they're like now, more comfortable than ever on, adopting crypto. That's a very important point. And the second, it's like, although US and Europe, they seem to have like different approach for like years, but now I think it will just give the same comfort to other jurisdictions as well to just go ahead and just like be maybe like pro crypto. So yeah, we really embrace that.
I would add that it's definitely a very positive aspect coming up with a new, with a new very positive way on crypto in the US. And I think it's also positive that the EU is kind of waking up to that, specifically, as you mentioned, with the Draghi report. I think for the new commission that we have now in Europe, the competitiveness is the number one thought. And how can we do that? And how can, in a way, the crypto industry support that and bring even more innovation in the digital finance area? And the other part is that we should remember that the international organizations were very active in the last years as well. We have some papers on how to regulate crypto assets and how to regulate DeFi, even from IOSCO. We have FATF, etc. And so I think that, the positive aspect coming from the US as one of the parts of the international organizations' representatives might also bring globally a positive aspect on regulating crypto in the future.
That's great. Yeah, there was a quote yesterday from the CEO of Avra saying, "Retail has awakened," which I thought was pretty powerful. So let's get back to globetrotting for a minute, and let's hit on some of the other smaller jurisdictions that we think are getting it right. Tom, do you have any, which ones spring to mind without being preferential in any way?
Well, sitting next to you, Tim, I feel like I have to say something about Bermuda. We have an international exchange there, but I think that's an example of a small country that has, again, been thinking about crypto for a long time. They've got a framework on digital assets, kind of, business, the DABA regime. They've had it since 2018, I want to say, and they have now about 15 or so kind of CASPs or VASPs on the island. So, government support, a very sophisticated regulator in the BMA, and they've had a good rule book. They're also now thinking about digital ID, and stable coins, and it's kind of good to see some of these smaller jurisdictions that are kind of pushing a bit the frontiers. And I think things like digital ID could be a big unlock for DeFi, which we think is kind of the next horizon. But as I look around, I'll just mention a couple of others. Argentina, I think, is interesting because the use case for stablecoins is just so resonant in some of these countries around the world with high inflation. Inflation's coming down in Argentina, which is great under the new government, but still the use of crypto is very, very widespread. There's high adoption, and now they're beginning to kind of put regulatory frameworks, in place. And I think also they're a bit motivated by what they see in the US as well. So I think that's an interesting market to look at. And then what was mentioned on the panel, the UK, I think it's no necessarily not a coincidence that a few weeks after the election, this new UK government is now being much bolder in terms of their support for this industry, which is fantastic to see. And the FCA, which is a very well-renowned kind of global regulator in London, they are now putting out a roadmap for a significant number of consultations next year. So I think exciting things happening both in small jurisdictions, but also, you know, some of the big proximate jurisdictions to where we sit here, I think, are going to move forward next year.
Yeah, I mean, totally agree. That's like, there are some, you know, jurisdictions that has been doing it right for a couple of years, like putting the right, you know, regulations. But I think there are other considerations, like, you know, how open, I mentioned how open the conversations with the regulators. So like, I think regulators needs to, and countries may need to see that as an opportunity to bring at least, you know, institutional investors, bring projects, blockchain projects into their jurisdiction. That's an opportunity. That's a fact, you know. And I think, yeah, look, nobody wants to go to a jurisdiction that you wait, you know, 60 days over an email to talk the smallest topic to a regulator. So there's definitely an opportunity. I think you mentioned the real use cases. I'm from Turkey, so like I can definitely say that's like stablecoins. They're being used in Turkey for remittance because that's like the easiest way. Like we can't really ignore this fact, and they shouldn't be ignoring this fact and just putting the regulations and the approach aligning with those realities that are already in place. If you can ignore that, then it will just you know conclude in a way that you're just, you know, fleeing people.
Maybe another jurisdiction that I wanted to mention is Switzerland, who has been very, I think, clear with their guidance from the beginning. I think FINMA wrote guidance on tokens and token issuance in 2017 already, and has been constant over the time. And I would say the main comparison, if I do compare Switzerland with the EU, for example, is like in the EU, it takes a really long time. We have like a complex governance process. And as you mentioned, we have worked on MiCA for the last 5 or 6 years. But Switzerland has been very much, in a way, quick to respond. They've been able to be agile. And I think there's also a lot of innovation happening there as well.
I just want to also build on something that you were talking about, John, which is access to regulators. I mean, that's unheard of in the US. You just, you know, you don't have access. So you just wait. And one of the beauties when I moved to Bermuda from New York was you bump into the regulator in the grocery store. I mean, you literally do, or having coffee. And and they, you know, that helps a lot. And they get right back to you. It's just a very small, intimate community. And the other thing that they've done, which I think speaks volumes, is they have 3 different licenses for digital asset companies under the Digital Asset Business Act. And you have a T license, which is a test license, where they actually encourage you to come in a sandbox environment and work with you to figure out how to structure your company with proper AML policies and et cetera, and oversight, so that you do grow up into a company, and then you would get your M license, which is your modified license. Then you're officially regulated, so they do go into enforcement mode at that point. But it's almost like they've shown you the roadmap. And then eventually, if you want to take higher risk and do more transactions, you get a F license, which is a full license. I just think that is very thoughtful and very collaborative, and I wish that existed in more places. Which might be a good segue to our final question as we're running out of time, is sort of what is your personal or your company's vision, probably just go with personal vision, for what regulation could look like in, I know, you know, crypto moves fast, but let's just be real, at least in the bigger markets, 3 to 5 years, because there is so much time spent on this multi-jurisdictional approach, right? Time and energy and cost. So I know harmonization is something we talked about in advance. Like, wouldn't it be great if there was a one-size-fits-all? There probably never will be, but MiCA seems like a step in the right direction. But Tom, what are sort of your personal visions for what it could look like where things are really hitting on all cylinders?
Yeah, look, I think harmonization would be super important. I'd start with that. I think right now, expecting harmonization from the first kind of iteration of all these rules, like perfect, identical kind of rules, is unrealistic. But I think after we've done that and we've looked and seen what works and what doesn't work, hopefully in the next kind of few years, we can come back and get these different regimes to kind of talk to each other. So once the US has elaborated what it's done, once in MiCA, we've kind of seen what works, what doesn't work, and then to get more harmonization would be super important. The final thing I'll say is, I think it would be really nice to make sure that we've got regulatory regimes that allow for innovation both on permissionless kind of blockchains and also permissioned. And I think that's a really big idea and debate that's out there right now, which is if we're going to use tokens and ledgers to kind of totally transform financial services, what is the right way of doing that? And should these be single ledgers and more in traditional finance space, or should these be permissionless ledgers with stable coins? And what's the role for CBDC? I would love to see a regulatory framework that creates a bit of a level playing field and allows for competition and allows, really importantly, for innovation. And we think there's a huge role for permissionless kind of like layer ones, in that space.
Yeah, I mean, my idea of a successful global regulation would be a, principle-based, not killing innovation like everybody else thinks. But I think the most important thing is to learn from the lessons. Like regulation or non-regulation, it has been existing for a couple of years right now in different jurisdictions, and we have different lessons learned from different jurisdictions, right? And so I think right balance, this is another thing that we have been talking for like years, is between protecting investors and allowing innovation. You just need to create the right balance. So I would probably think that a principle-based regulation that has learned from the lessons in the past, that would be an ideal regulation.
All right, Marina, you get the last word.
Perfect. So I would really like to see two things. One is the crypto assets being regulated in a way that it's enabling us to basically, exchange them and use them in everyday life. I think very similarly as MiCA did, most of the, I would say, utility tokens that we have today, they are not securities under MiCA. So I think this really allows for the whole innovation when it comes to crypto and also blockchain use cases. And the second one is, as it was mentioned before, I think we should really preserve the lower layer ones, protocol layers, as a technology that should not be regulated. And when it comes to standards and regulations, I would think that maybe we should look more into standards, especially when we're thinking about, security and we're thinking about smart contracts, etc. development, rather than regulation. I think that would allow us to be, in a way, leaner, faster, but also aligned with what is the last, in a way, I think, best practices in the industry.
Great. Well, thank you, everybody. We're slightly over, so appreciate your patience. Hope you enjoyed our journey around the world, and this helped in at least a small way you think through how you and your business are going to sort of prepare for long-term growth with really thoughtful and strategic approach toward regulation. Thank you.
ETFs Unchained, Decrypting Crypto's Mainstream Entry. Please welcome Jay Maracas and his panel, Hani Rashwan, Daniel Seifert, and John Svolos.
Okay. Good morning, everyone. Day 2 in the conference. We have a robust audience here. I like to see that. All right, we're here to talk about digital asset ETFs. We have one exchange and 2 asset managers. I think it's going to be a very interesting discussion ahead of us. I'll just set the stage and then we'll do introductions. Look, the bull run that we're on arguably started with the introduction of spot Bitcoin ETFs in the US. It's the evolution of what we're seeing with respect to finance and the opening of the US regulatory environment, I think. So there's a lot of exciting things happening, of course, today. So my name is Jay Maracas. I run M Group. We're a comms firm in the space. I'm the least important person on this panel. You really don't have to pay attention to me. These are the guys you want to listen to. I'll turn it over to Haney.
Haney Rashwan, 21 Shares. I'm one of the two co-founders. 21 Shares is one of the world's largest crypto ETF issuers. 53 ETFs or ETPs in around 12 different stock exchanges around the world.
Thank you, Hani. I'm Daniel Seifert. Pleasure to talk to you all today. Vice President and Managing Director for Coinbase in EMEA.
John Savalos, I'm a partner and head of research on the investment team at Skybridge Capital, and among other things, we sub-advise a crypto-themed ETF with First Trust.
Okay. So let's start the conversation off at like a macro level here, okay? So since the emergence of the spot Bitcoin ETF, I think at the beginning of this week, roughly the report on inflows were about 38 billion over the course of this year, record-setting pace, et cetera. That's Bitcoin itself. Of course, Ethereum the ETF has been moving the last couple of weeks pretty significantly as well. Just at a high level, a couple different questions for anyone at the panel to start with in just discussion. So what's causing, this movement? Is it sustainable? I guess 3 questions, right? And who's buying? Are we talking about institutional flow? Are we talking about retail trading? Are we talking about RIAs and retirement accounts in the US? Just give your thoughts generally, sort of from a macro level. Haney, maybe you start.
Sure. So if we're talking about the American Bitcoin ETFs, I think 2 things are happening. One is we're starting to see the opening of the American market, which is clearly the most liquid, the deepest, the biggest globally. And 2, we're starting to see other buyers from elsewhere in the world start using the American market to make allocations into crypto. So it's a little of both. On the international front, it's a little bit more institutional. So for example, we have a lot of players in Asia that are using the American Bitcoin ETFs. And interestingly, since we're in Europe, the basis trade, which is a very predictable trade that hedge funds use to constantly get yield on the difference between the Bitcoin price and the futures price, has moved almost entirely really? From Europe to America because it has deeper liquidity. And so that's where you're seeing a lot of the inflows. Now, on the American side, with respect to who's buying, it is almost all retail so far.
Okay.
Although, and we can talk about that later, there's a lot of hope of institutions who are already dipping their toes in the water.
Okay. Daniel?
Jay, just to follow on that, and I did like a lot the numbers that you quoted, maybe just to put some additional context or perspective around this.
Yes, please.
I think the Bitcoin ETFs, the spot ETFs are now something like 100 billion, was you said it 38 billion inflows or something, right, over the course of the year. Just to put this in perspective, gold is only 130 billion and only 2 billion inflows this year.
Yeah.
Just to put this into some kind of perspective, and I think it's a reflection in your question, right? It's sort of a reflection of crypto entering the main stage and the mainstream of finance, right? And I think we should realize this is some of the most conservative institutions in the world that are sort of entering the arena right now. And maybe just to give a bit of context for Coinbase, obviously we're very proud of the success of the spot ETFs in the United States, right? We custody the assets for 8 out of 11 of the Bitcoin ETFs and 5 out of 8 for Ethereum. And it's because of our technology, our track record, and our expertise that they trust us. And I think it's really only the start that we're seeing here, right? This is going to continue. And I think, the sort of this new interest and adoption is going to be good for the ecosystem. It's going to create a wider ecosystem, and it's going to drive innovation in the whole ecosystem.
Okay. John, you have anything to add?
I think it's worth noting that the GLD, the gold ETF, attracted growing flows for 6 straight years after it launched. And I think part of the reason for that is there's a structural adoption in the traditional financial world that is at a very early stage in the US. So we're getting retail, we're getting RIAs, we're getting the basis trade, and some crypto-focused investors. But we're early in the process by which the very large pools of money are going to enable these assets, these ETFs, to be recommended. And I think because of the success of the ETF, that could happen faster than would otherwise happen in a normal ETF approval process, which might take 2 to 3 years. And then beyond that, and I think the most important thing by far is that once the institutional investment community gets an idea as to what the financial characteristics of this thing really, are, like how it fits into a portfolio, what its risk contribution is, then it's going to get into the models, and that is that sequence of events is a sequence that promises enduring growth in flows in the U.S. I think we're very early.
Okay. I wanted to actually hone in on something you said. We were talking about the inflows, and you were talking about the fact that it's almost all retail, right? And John, what you just said was sort of a little bit what I heard at the end there was basically education in terms of portfolio management and where these products lie. What's it going to take to move it from retail? I mean, because what's the holy grail a bit is to bring in more institutional flow and, having it come from some more, like well-established institutions that are bringing it for like retirement accounts, et cetera. Just sort of at a general macro level, what's it going to take to get there? Is it just education and time, or is it more?
So there's the normal process in the large traditional financial institutions in the U.S. is conservatism, right? And as one goes, then I think others will feel more comfortable advancing, and I think there's no doubt that a change in leadership at the SEC will help them feel more comfortable. When the SEC approved the ETF, if you read it, they effectively issued warnings about regulation best interest, about fiduciary duties. It wasn't a warm welcome. And I think the new administration is going to make it easier for those institutions to respond to the demand and to the natural virtues of the asset.
Okay.
So I think it's helpful to just take a very quick step back and actually define how we talk about institutionals and retails. I think the easiest way of thinking from our perspective what an institutional investor is whether it is or not a single decision maker. And by that I mean the process and the structure and the incentives and the regulations are very, very different. So we have family offices that have invested tens of millions of dollars into our products. We don't regard them as institutionals.
Right.
We don't regard a lot of the funds that come in, and the hedge funds and such, because they're trading or they have their own situation. Where it gets really interesting, and I think that the real question that you're asking is, when do we get the bigger checks? When do we get the bigger guys? And especially all right, especially in the case of them being more permanent sources of capital, long-term investors and the like. And what you'll find out there is that these then become the pension fund, the insurance companies. I've had conversations with 2 sovereigns over the past couple of weeks. Sovereign wealth funds, the treasury of the actual sovereigns, as we've seen with countries. And you'll just find that they actually have a really large set of requirements.
Okay.
So it's going to take probably a 6 to 18-month process to start seeing some of these inflows. But when they come, they're going to be in the hundreds of millions, if not billions, because you're talking about allocating even 50 basis points or 1% of a wider portfolio, and these things tend to be massive. They need to understand how long a product has been up. The product has to have specific characteristics, specific liquidity, and then the due diligence process is absolute insanity.
Right.
In addition to everything that they're hearing from the regulators thus far being probably a little bit more negative. And I think that's the journey of what this looks like. And for what it's worth, we have seen already in the United States some state pensions, some fire workers, police unions put money into our ETFs. It's just dipping toes at the moment. But again, we're talking to enough that we know we're putting out seeds and the harvest is probably in a year or a year and a half.
Okay. It's like a bell curve effect is what we're looking at hopefully coming down in the future. Yeah. Anything, Dan?
Yeah, I think like from our perspective, what I would add to this is kind of a bit a rising tide lifts all boats. So we've seen, I think, especially since the start of the year, right? Like we've seen a flywheel of engagement of institutional customers with our Prime offering.
Okay.
And 40% of our institutional customers now engage with 3 or more products that we offer. And then similarly, this sort of reflects on the retail side. I mean, it's obviously hard to make any sort of single attribution, but we've seen tremendous success with our Coinbase One subscription product over the year. We've seen tremendous success with our L2 base. That's now a leading L2 globally with, I think, over $10 billion in total value locked and more than 1 billion transactions. So I think it's sort of this flywheel effect that we're seeing, and it's driving ever greater adoption.
Okay. Okay. Let's shift a little bit to what's a little more sexier and kind of like timely at this minute, so altcoins, okay? So in Europe, ETPs, you can buy for altcoins already. And today we're now seeing applications in the US for Solana, I think XRP. There might be another one or two, I'm not really sure. But it's certainly conversation within the industry. So, I mean, I guess, look, here's the question. What do you think the appetite in the both, let's say, Europe and US, okay? What do you think the appetite will be for altcoins? And, is it where the industry is going to head, right? Like, how sustainable do you think, like, the introduction of these different altcoins will be in terms of the ETF landscape?
Yeah. You want to start?
No, please.
Start.
No.
Please.
No, I just wanted to, I think a very quick reaction or injection before we talk about, altcoins and stuff.
Yeah.
I just wanted to, maybe just quickly realize of how far we've come, right?
Yeah.
Because it's been a 10-year journey for adoption of spot ETFs, right, for Bitcoin and Ethereum. And I think even over the last 5 years, right, we've seen institutions adopt this or get into the ecosystem more and more through the ups and the downs, right? And I think you had industry heavyweights like BlackRock chairman and CEO Larry Fink, who said, this is a terrible asset class. And then over time, he kind of changed his mind and says, it's a very good store of wealth. so I just want us to sort of also kind of take a step back and kind of realize how far we've come before we talk about altcoins. But I think then certainly, when we talk about altcoins, if we look on our platform, right, customers typically hold more than just 1 or 2 assets. And overall on our platform, we list more than 240 assets, right? And I think the important thing here is to offer choice, right? So I think back to your question of where we're going to see this going, I think it's just going to be ever increasing choice.
Okay. Annie?
Yeah, I think the choice is important. I also think that if you take a step back and think about the scale, Bitcoin dominates at 60% of the market. It's another way of saying alt is $1.5 trillion market, right? Of course it matters. Of course it's big. I think a key part of it is we are not sure. Bitcoin is going to be synonymous with crypto for a long time, but we're not really sure about which one of the alts will be crowned winners, how many winners we will have, etc. I remember when we launched our Solana ETP, and about 1.5% of the total Solana market cap is in one of our ETFs.
Okay.
But we launched it at the same time as we launched a number of other assets: Cardano, Avalanche, Polygon, Polkadot. That was the same summer. And there's no way that we could have predicted where the world, innovation, et cetera, would have gone. And so it's very important from our perspective to list these things, to give customers choice, and to enable, at the end of the day, all of these really interesting innovations to continue happening, to continue being supported, et cetera. Now, how long that takes, it depends on the asset. But I think if we look at our history, we listed a basket of the top 5 first, then we listed Bitcoin, Ethereum, Ripple, Solana. And I think we will start seeing something similar, where it took us probably a year and a half to only focus on these things. And then today we have 53 ETPs. And so I think a similar pattern will emerge in the United States. Ripple's not that different from Bitcoin to a regulator. Solana is not that different from Ethereum to a regulator. And so where there are very clear parallels, you should expect to see faster approvals because there's less explanations, less education to do. Where there are certain leaps or things like more innovative yield or staking or things like that, that's where we will have to spend a lot more time. We've gotten it across the line, across the world, so I'm not worried about it, but it will take a little bit more work.
Okay. In other words, the market will sort of eventually sort it out also with given choice, right? Is sort of what you're saying. You think it'll be the same thing in the U.S.
And look, we given choice, it's very clear based on our customers that they want to hold billions and billions worth of alts, and will continue to do so. And so I do think that the choice is super, super important because even if users end up gravitating towards the same 10 or 20 stocks, a brokerage isn't that valuable that only offers 20 stocks.
Right. Right. John, I know you have some strong feelings on the subject as well.
Yeah, you know, in a way, I think the advent of ETPs for the alts is a bit of the tail of the dog, in that if I think of Bitcoin as the, you know, non-fiat store of value, and that premise is being digested by the broad investor community in the US now, retail and institutional, I think of the alts as a technology transition. And it is in need of regulatory and legislative clarity, and there was some effort to try to get that done in the last few years, and if that could advance, then I think you would have the confluence of the promise of this technology and the new organizational structure sort of embedded in a legal system that you could count on. And then you could start to see which are getting traction, which are generating cash flows, and which will be the winners. And yeah, it'll be great for them to be readily available in that circumstance. But I think for the alts, the bigger thing is legislative and regulatory clarity.
Okay. What about for the alts in the US? What about, you know, from a sort of like a risk perspective in terms of retail and their appetite for just really diving in, right? I mean, there's some concern. We're starting to hear in the marketplace now, like, well, alts in the US, it might be a little too risky, even though they're an ETF, or they would be ETFs that are products that are regulated. But sort of the, you know, if once you start planting 20 of them or 30 of them, like you were saying, how is the industry gonna balance out, right? Like, sort of who are gonna be the winners and who are gonna be the losers in terms of the alts? Are there any issues there you see with respect to perception or regulatory front in the US?
No, but there's interesting context there.
Yeah.
We didn't list 30 at the beginning. We listed 30 only when the space, the ecosystem, our own customers, our own research were sophisticated enough to differentiate between here's a very interesting experiment with here's Solana or Ethereum, which are interesting, much bigger experiments, but are more established. There's a base of usage on some of these networks, and there's a lot of hopes of innovation on others, and it's our job to explain, well, which one is a seed stage startup, which one is a growth startup, which one is a Series C startup, etc. But this is why I think it will take a little bit of time.
Okay.
I think Coinbase has shown very clearly, as well as other exchanges, that retail in America and elsewhere is incredibly comfortable learning and buying a lot of experiments as well as the big assets. And we'll continue seeing this, but it does take a little bit of time and extra comfort. Now, as an issuer, part of our responsibility is doing that timing right as well. Okay. And so from our perspective, we're not going to be listing dozens and dozens of ETFs in an immature market from the get-go. We will take our time. We will take our time in educating and explaining to users what this is, and we will launch products in a staggered fashion that makes sense, and we'll replicate what we've done very successfully in Europe and elsewhere. And if we do that, I'm not that concerned.
Yes. Okay.
Yeah. I would echo Hani's points. I mean, we see, in terms of the institutions at least, we see very clearly more interest in tokens or assets that have very specific and clear utility cases and that are readily understandable, right? And so I expect the sort of adoption or the curve to go that way.
Okay.
You know, to some extent, we see the older, more established investor community. That's our investor base as a whole, and we're steeped in the crypto community as well, and we're engaged with the development of the alts in those ecosystems. But the RIAs in the US, the people who are managing large pools of money, they're getting their arms around Bitcoin, right? And they don't, I mean, the degree to which they don't understand or haven't really engaged beyond it is, I think, might be hard to internalize when you're in our world. And so I think, I really do think the next stage is going to be the recognition that was cited in the New York Times just yesterday, that it's now undeniable that Bitcoin is a central part of the global financial system.
Okay. Look, we're talking about a lot of growth over the course of the last couple of years. Just sort of generally, what's causing this? Like, at a high level, what do you think is causing all of this adoption now? Right? Is it just the US environment? I mean, ETP's been around for a while, and Europe's been adopting for quite some time, but we're seeing now massive inflows. Is it just the capital markets in the US sort of dumping in, or? otherwise?
I think it's like 50 different things.
Okay.
I think we are seeing an inflection point in the global order for the first time in a long time. I think we're seeing a threat to the reserve currency status of the US dollar. We've seen this before. We've seen it with the Eurobond, we've seen it with the oil crisis, and it's weathered through it. So we're entering a period of probably 5 to 20 years where a lot of people will make a lot of moves, and we'll see how it ends up. That's a key part of it. I think economically, we see a lot of the world rising. This is still predominantly from the usage perspective. If you look at stablecoins and if you look at other things, much more of a global story than an American story, and much more of a global story than even a Western Europe and America story. And we're seeing both the rise of the rest, if you will, in addition to a lot of challenges that the rest would have with inflation. And then a lot of these challenges we're seeing ourselves. And so I think crypto is super interesting because it starts where it makes perfect sense super quickly to some people in some countries, but then actually the way the world is going, their concerns happen to not be that different from people living in England or the US, actually, in a lot of cases. I think at heart, there's a technological element here. Crypto, at the end of the day, is a very elegant solution for a long-standing, decades-long computer science problem, the Byzantine generals problem. And in addition to that, you're seeing regulations, you're seeing parties that are a little bit more anti-regulation, that are more about, free economies, et cetera, come in. And so I think the confluence of so many of these things is probably why there's an accelerant right now. I think it would have been inevitable, but the reason all of this is coalescing at this current moment is probably because there's very good timing from a number of different sectors, economic, political, et cetera.
I would very much agree that it's a confluence of factors. I think, Jay, it's a fascinating question, actually, this sort of, why now kind of question. And I think, there's probably some, let's say, mechanical aspects to it, right? Which is there were certain SEC deadlines and so forth, right? There were multiple applications that were going in at the same time. And, maybe just, again, to take a step back, in Europe, we had seen ETPs and ETFs as early as 2020 and 21, right? So it's not that it's sort of only happened this year, right? Like this has happened before, and these applications and actually even these products have existed in the market, but they didn't see the same success. So therefore, I think it's a totally valid question to ask, like, so why now, right? Like, why this year? And my answer, or I think what we should recognize to this is also there's just a huge amount of very serious names from the United States, institutional players that are sort of putting their weight behind this, that are, and we've seen this, right, that are sort of activating the distribution networks here, right, that I think that is a large part of the answer. But I don't think there's any single factor, to Hani's point, right, it's sort of a confluence of factors.
You mean BlackRock and the like, right? Like these, okay.
It's a novel technology. It's the first ever means of storing value outside the fiat ecosystem that has these characteristics, and that's a gigantic market, right? It's one of the world's biggest markets, and you can start to marry that with concerns about the U.S. financial system, but oddly, the killer app outside of Bitcoin and crypto is the US dollar stablecoin. So at the same time that you could attribute the demand for Bitcoin to concerns about any fiat currency, the U.S. is actually benefiting it through the globalization driven by the dollar stablecoin. I think stablecoin legislation is highly likely to advance in part because it's so obviously favorable.
Right. I also think on this point, it's very hard to be the first person. Yeah. But once you are the seventh or eighth person, you feel a lot of pressure to actually move, right? And I think you see this across all of the different vectors where crypto is getting support. The sovereign one is super interesting to me. We have 193 countries. Who's first? And I'm not that surprised that places like the Central African Republic or El Salvador, where again, like single decision makers is a good way of thinking about those family offices, setups, got there first. But then they seem like geniuses, and it's not a bad bet. And Nayib Bukele is sharing just how the balance sheet of the country in Bitcoin has done for the country. Then we learned that Bhutan has used their hydropower potential. They have about $1 billion on the balance sheet now. El Salvador has 600 million on the balance sheet. And that then inevitably starts a snowball where Senator Cynthia Lummis in the United States has a bill advocating for a Bitcoin strategic reserve. And Brazil, another big economy and a more developed economy, has the same thing in their parliament as well. And so I think it's one of those things that makes it truly inevitable, because BlackRock makes a lot of sense now, but they wouldn't be in here if Fidelity wasn't, getting a lot of attention for doing the same thing, and so on. And so all of these are extra pressures, and the good thing is I see them in every single category and vertical, that I think this thing has a lot of room to run and be part of the establishment.
Right. There's a lot to be said about herd mentality, right?
Yeah,
People go in the pressure to do. Okay, so you're talking a little bit about the regulatory landscape. Let's discuss it for a bit. What do we need, both U.S. and outside of U.S., right? Let's just, whether it's multi-jurisdictional or U.S. itself, what do we need to see from a global regulatory environment, and again, U.S. specific, to keep this momentum, to continue this momentum that we're seeing, right? What specific are you looking at?
Very basic, very minimal, common sense regulations. I think, look, I live in Europe most of the time. Mm-hmm. We do not want excessive regulations in the crypto space that stifles innovation. And I can see very real worlds where that could happen. At the same time, we cannot spend 8 years listing a Bitcoin ETF anymore. Right. And so I think that there are very good models of this. I think the way Singapore has done things has been very impressive. I think the most impressive by far so far have been Switzerland, Dubai. That we've seen some very interesting things in language, at least coming out of the United States and the UK. MiCA's not a bad development, but again, I think we need to, my worry here is that we need to really, really balance sensible regulations so that bad actors are dissuaded from being in our space, while not stifling brand new dreams and innovations and things like that.
Okay.
Well, I think you're going to have to see fairness and disclosure incorporated into the formation of these projects, and if that is, implemented in a rational way, then you can start to see what the capital formation potential of this is, because it's pretty extraordinary on its face. It's unusual how much value has been created, in this structure, even without those guardrails. And then, I think there's now a real focus in the U.S. on trying to make sure that the opportunity associated with that capital formation is embraced, and that's an open-ended transition. I mean, that's a big story.
Sure. Okay, outside of regulation, what else do we need to see?
Yeah. If I put my computer engineer hat on, better apps, better usage, less memes, less shitcoins, less casino gambling. How many people around the world don't have access to good payments? How many people pay stupid amounts for remittances? We are seeking to tokenize all sorts of illiquid things. The most liquid market is the Forex market. How much are we still paying to just transfer between euros and dollars? There are so many things, and I'm just touching on the finance bit of it. Look at what Sony did with NFTs, which is fascinating. Look at all of these actual use cases that are coming out. I think we need 10 times, 100 times those types of innovations and a lot less of the degenerate gambling, meme coin craziness that, again, was very exciting, got us here. I'm happy with a project or two, but at this point, it's just absurd looking at some of these, layer 2s and other layer 1 blockchains and just seeing how much traffic is stupid versus usable and scalable and can actually touch the lives of hundreds of millions, if not billions of people, which that's why I got into this space. It wasn't.
So if we, but I agree, right? If we comment on the institutional space, and that'll tie back to your previous question, right? I think the first and foremost thing biggest on mind of the institution, still regulatory clarity. But then outside of that, I think the really interesting trends, and they're already happening, right, is tokenization. And when we think more about corporates, so not institutional investors, but like corporates, I think almost like one of the most exciting things, payments, right, and the future of payments. So sub-second, sub-cent transfers globally to geographies where it was previously perhaps not as possible or as easy. I think that's where we're going to see a lot of development.
Okay. John?
Payments is clearly very alluring. It's also deceptively complex for anybody who tries to enter it. When we get together in this community, a lot of times the first thing we ask is, what are the useful apps? What's happening that's actually productive, that takes advantage of the promise of it? The tokenization of the money funds by Templeton and BlackRock, I think, is a good example. They argue that they're taking substantial costs out of managing those products. What's interesting to me is that there's a whole wealth of asset managers who compete with them in those products, which are low margin, competitive products, who have not yet sort of gone down this path. And, in a traditional tech world, somebody would be showing up at their door, a software company would be showing up at their door and say, you should be doing this, and we can do it for you, and this is the product. And for some reason, we're not seeing that. And I don't know whether it's byproduct of the lack of regulatory clarity and the capital formation thing I'm talking about. It might be. But, that's the kind of thing that somebody who's been involved in tech for a long time, you're waiting for this next stage to take hold.
Right. Okay. So basically maturity of industry and technology advancement, that kind of, what I mean, for sure. Daniel, no offense by this question, so forgive me.
Oh boy.
Okay, we're talking about buying regulated products, and we're talking about more regulated products on, listed exchanges. Why do we need crypto exchanges? Why do we need exchanges to buy now?
Heavily offensive.
Yeah, I didn't mean to.
No, but I love the question because it was. I think that was sort of the question du jour, or like the sort of $1 million question in January, February, March, right? I think sort of every journalist sort of wanted to discuss that. And, already at the time, we were sort of saying, look, we don't worry about this at all, right? Like, we don't see it that way at all, right? This is the growth of the entire ecosystem. And this is sort of like, this is new people, new capital, new interest kind of coming into the space. And I think, we just all have to be mindful. Crypto is a journey, at least has been for me. I'm sure like many other people will share that, right? Like, so, you get into the space, you first discover Bitcoin, then you discover Ethereum, then you want to get into L2s, and you start to sort of learn about it and play around, you get fascinated, and you try more and use more and see the potential of it. So I think we have certainly not seen that effect, quite the opposite, right? And we expect that to continue.
Okay. I guess theoretically you actually draw more people into the space, right? And therefore more products.
I think just to defend him a little bit more, we're very, very bad at putting ourselves in the shoes of the other. There's two things here. One is more about crypto, one's more about Coinbase. On the crypto side, I started this company with my co-founder because our mothers wanted to buy Bitcoin, believed in Bitcoin. We're from Italy and Egypt, really got it. And we were supposed to find them good ways of doing that. The exchange was too complicated for them. We found a way of enabling them to get access to crypto, and at this point, tens of millions of other customers, through money that in some ways, infrastructurally, is sometimes held at Coinbase, right? Coinbase is part of the ecosystem. We talk about institutional investors. Well, part of what our company does is that it securitizes crypto. Why? Because you'll find out that a lot of fund managers, a lot of institutional investors cannot invest in non-securities, right? And so if we want these people, and if we want the very excited about Bitcoin as a thesis, and bought in, as bought in as any of us, but may not be as technically savvy, or may want different things with storage, then it does make sense for us to offer everything from the deep infrastructure, if I want to hold it on my Phantom or MetaMask, to the exchange, to the ETFs, to funds, to maybe just in my retirement account and I don't even know about it. And if we keep likening this development to gold, look at gold. How do people buy gold? People buy gold using ETFs, certificates, physical, jewelry. How do they store it under the bed, under the mattress, in a vault, in a bank, in securities, etc. And so I think it will mimic all of that, and places like Coinbase will probably make money a little bit differently. But don't be surprised if the Coinbase exchange business turns out to be much more long-lasting than we would assume. We are not, in a lot of cases, representative of every user.
Right, right. I'd actually expect it. I wouldn't be surprised. I think I'd expect it. You know what I mean? Let's be clear. All right, we have a few minutes left. I guess last question. What's next? ETF landscape for your businesses. I mean, we've seen mining ETFs already, et cetera. I mean, what's the next evolution of this? We've gone through altcoins. We have the traditional.
I want to say thanks to the block, and it's been a joy to be here, and in Prague, it's been a joy. Next for us, you know, in particular with this ETF that we sub-advise, is broadening interest and acceptance. And, you know, we're going to be a part with that product as Bitcoin is a part of the broader traditional investment community in this next stage of embrace.
Yeah.
Okay.
My guess would be probably three things, right? I think we already spoke about it a bit, right? We have applications already for multi-asset ETFs. We have alternative coins like, you know, XRP or whatever, right? Solana. I would say in-kind creation and redemption, something that we're going to see, and possibly very soon. And then third thing, I would say, you know, some of these institutions that we've been speaking about, right? I mean, they're very global institutions. I would readily see them not only issue new product, but also go to new geographies and come to new geographies very quickly.
Okay.
The in-kind inflows, outflows are already a model in Europe. It's a matter of time before we get them to the United States. We have a very simple mission at 21 Shares, and we're fixated on simply bringing out more ETFs for more product types across more geographies. Some of the trends that are super interesting besides new assets is our baskets and our indexes. I think as crypto matures, it becomes more interesting to have diversified or thematic baskets. And we've been taking a very long and hard look at yield, safe yield. How do we think about providing yield to our customers? We have the largest product suite of staking ETPs, which is a type of yield that we all understand, but we've been thinking about how best to productize other sorts of delta neutral yields that we could find, basis trade being one of them, but there are also a number of other ways that we could think about doing that. And you'll start seeing more staking ETPs, more baskets, more ETFs from us.
Okay, so a lot of interesting things on the horizon. All right, I think we're just about at time. Thank you, the audience. I want to thank the panel members. This is a really interesting discussion. What's clearly ahead is these guys are here to stay, and I think the movement is certainly onward and upward. So, thank you.
Thank you, guys.
Cheers. Okay.
East meets West, a crypto investment perspective. Our next keynote speaker is Forrest Bay.
Hello. Yeah, thank you everyone to join the first Emergence conference. So I'm also very excited. Yeah. I think Prague is a very good location to bridge East and West. So my topic today is also to talk about the crypto investments to how to bridge West and East. Yeah. I'm Forrest. I'm the founder of Fireside Ventures. Yeah. The first is, I think, because I'm an Asian man, I'm a very boring Asian people, so I want to say Asia now is a very important engine of crypto growth. Yeah. In 2024, Asia dominates the top crypto adoption countries. There's 5 of the top 10 countries, include India, Indonesia, Vietnam, Philippines, and Pakistan. So, to be honest, there is China was missed, right? So I think China is also has a very high adoption rate of crypto. Yeah, and Asia community also drove some trends. This cycle include Telegram meme bots and Solana meme coin and like PayFi and something else. So because Asia is a very big retail market, the transaction volume and the innovation, except from centralized exchange, is also very big in traditional like use case. Singapore recorded like 1 billion in crypto transaction in Q2 2024. It's all the 1 billion is in the traditional use case, like you can buy some coffee, buy some wine in Singapore, and you can use a USDT to grab some cars. South Korea, yeah, everyone knows. South Korea exchange, the trading volume is very, very huge. It's nearly like the top 3 in the world. Every token listed in Korea exchange with KRW, fiat trading pair, will be a very, very significant upside. South Korea also introduced the Virtual Asset User Protection Act. I think in a lot of Asia countries, their regulations are more friendly than US now stage. But maybe after now, when Trump get on board, maybe I think the US regulation also can be more friendly than before. I think Asia, why we choose Asia? Because Asia has lots of different countries, right? And very big population and rich for citizens. There's lots of different culture between different countries. So it's very interesting to do the research about Asia market. For example, China. Everyone knows the government bans mining and trading officially, but Chinese users always can trade crypto underground. They use USDC, they use centralized exchange, very, very big trading volume. Hong Kong acts as a key gateway to the mainland China. It's very from my perspective, it's very similar to the like 20 years ago, like internet adoption in China. Yeah, I believe that Hong Kong will be the first gateway to crypto, and maybe in a few years later, China mainland will open to crypto also. And for the builders, Chinese internet company has lots of well-educated, well-skilled engineers there. So it's very easy to like build some protocol, build some very solid technology from Chinese engineers. And everyone maybe know, yeah, like Shenzhen, we have very mature supply chain about the physical device. So for the deeping, like for the sector like deeping, we are very easy to produce the device for Web3 use case. And the second one is Singapore. I'm based in Singapore, so I know Singapore regulation is very clear and very friendly. Even after FTX, yeah, Singapore government they very, very friendly about RWA. They introduce lots of RWA startups and support Tron, Tizer, and lots of crypto companies. And Token 2049, I think is Token 2049 is the biggest crypto conference in the world. Korea is the third one important market, especially their speculative, like trading actives. Yeah, there is over 20 million Korea citizens. They hold crypto. I think the portion is over half of all the Korea citizens. Yeah, this page we explain like how Asia's innovation will drive global trends. It's a little different in Asia. There's lots of traditional internet giant company. They start to like use blockchain to build their business. Just like Sony, Kakao, and Line, they build their own Ethereum layer 2 already and start to build their ecosystem applications. In Chinese, some like Tencent, like Alibaba, they already like always they don't stop to develop blockchains, but they cannot announce that. They keep very low key. But I think when the regulation open, their action will be very, very quick. For the mass adoption, you can see Philippines last circle. Everyone knows the platform games acquired like tens of million users into crypto. Even now, Vietnam, Philippines, they are all the most active crypto users there. And Grab Pay. In Singapore, you can use USDT or USDC to grab a car. The service provider is a company named AAA. It's also a startup based in Singapore. And besides AAA, there's always like a DTC Pay, FOMO Pay, and Stratis X. There are lots of similar startups. They focus on payment. Japan is a little bit different with China, with Singapore, and with South Korea, because I think Japanese are more similar to European people. They are more conservative. They didn't speculate too much. They buy NFT, they play games, more like a traditional consumer. They just hold and play it. It's not for speculation. Why we need to bridge West and East is also the Foresight Ventures focus, because I think it's very similar to the traditional division of label, right? Because we can build, for example, we can build a brand and raise fund and build innovation in West. And after that, we can build a community. We sell the product in East. Why? Like every HR people, they own like Nike, Apple, Starbucks. All these international brands come from West, but they like that. So I think it will be very useful in Web3 also. What we need to be care about is the regulation, because different countries have different their culture. Yeah. But if you come to Foresight Ventures, we can tell you the difference. Yeah. We know the difference of regulation, of communities, of retails. Yes. For example, in China, you can leverage the underground community in WeChat, even in Twitter. And if you want to do some institution business, some compliance business, you should go to Hong Kong. Because Hong Kong was the traditional finance hub, right, worldly also. So even for now, Hong Kong can become the crypto hub in the world. I believe that. And for example, Hong Kong already have BTC and the ETH ETF. The trading volume already become 1 billion Hong Kong dollars every day. And one of our son company called OSL. OSL is the first licensed crypto exchange in Hong Kong, and it also is a listed company. So OSL provide nearly 70% of custodian for the BTC and the ETH ETF. In Korea, Korea people, they don't use Twitter too much. They use Kakao and some very local application. So you should find a good channel to chat with, to communicate with them. Media and KOL. So for example, we are the we own the blog. We own Fireside News. We own Blocktempo and Coinlist. All of the 4 media companies, they are all top in their local market. So I think why we acquire the blog, why we incubate the Fireside News, why? We want to keep the content very independent to the industry. Because even for now, there are lots of KOLs on the Twitter, but most of their voice is noise. Yeah. So I think if you are a builder, if you are a founder, you should think about how to enter different markets. Because like I said before, you can build your brand, raise your fund, invest, and you should build the community. You should sell your product. It's very easy in Asia market. Asia and the West, I think the market, the trading market is also very, very different because Asia is retail driven. There's more speculated actives in Asia trading platform. So maybe this investor a little bit short term. They care about the return. They care about the emotion activities. But the West, especially in US, there is more institution-driven. So they will be more focused on technology, focused on business model, and more long-term. Every market has their own culture, has their own value. So if you want to onboard the different market, you should learn more about it. You should know the game rules in different markets. This is our good at also. So conclusion is Asia is very, very important and keep growing market for crypto. And we want to be the hub to bridge West and the East. So if you want to learn more about Fireside Ventures, learn more about our network, feel free to come to us. I think there is a lot of time left. So this topic is not what I want to talk about today. I want to say when I come to Prague 3 days ago, I think I come to the venue. There's no people here because we didn't open. And I think that this is our first Emergence conference. It's like a beginning of a documentary. I believe that it will be a beginning of a new legend. So I think about 3 years ago, I just established Fireside Ventures. The first meetup of Fireside Ventures is in Hangzhou, China. Only 30 people come, but everyone in my team is very excited. Second year, we host our second conference in Shanghai, in the tallest building in Shanghai. And the third year, we host the Fireside conference in Hong Kong. Yeah, there is I think over 5,000 people come. Emergence is the brand of the block. It's the first year. I think there is over 2,000 or 3,000 people come. It's already beyond my expectation. I really moved when I talked to Larry. So I think when I saw every team member very, very excited, I feel every effort worth it. I believe next year we will be much bigger. Maybe we will be much more influential. From my personal perspective, I just to set a purpose, set a target, and let our team know which approach is right. We find the right way. We keep doing the right things, and everything will be good. For the vision of bridge east and west, I think there is so many people can do that in this industry. Why we can do that? Because we have 4 media company in different language-speaking region. We have venture, we have compliance business, we have licensed bank, we have exchange. We have almost all the resources in the industry. Even for me, I cannot speak English very well, but I'm practicing. Why? Because I want to talk to the Western audience. I want to educate. I want to communicate with Western audience. Because there is very, very big potential market opportunity in this industry. So in the future, I believe the division of label between West and East will be the next alpha in the industry. So we keep doing this. Yeah. Okay, so I think, yeah, I want to say again, thank you for everyone to come. Yeah, thank you.
Our afternoon starts with a fireside chat about the future of crypto regulations. Please welcome Frank Chaparro and his guest, Anthony Albanese.
Get it on, get it on. Come on, come on. Get it on, 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 get on, get it on. Come on, come on, come on. Get it on,
Dobrý den. Anthony, thanks so much for joining us at Emergence.
Absolutely, I'm very happy to be here.
Everybody's really happy. We crossed $100,000 Bitcoin at Emergence. Probably next year we'll cross 200. How has the renewed optimism that has sort of, manifested in the wake of Trump's re-election victory, how has that optimism manifested in the portfolio at A16Z? Can you describe the shift that you're witnessing? Obviously, prices are up, but what has that meant for the companies that you're working with?
Sure. So thanks again for having me. Very excited to be here today. There's extreme optimism right now, both internally at A16Z Crypto, among our portfolio, obviously industry-wide. We're really excited about the future for crypto. We've had so many builders and entrepreneurs who've been sitting on the sidelines, really afraid of launching new products because of how difficult the regulatory climate has been in the US. So I think the way it's manifesting itself is we're really seeing our builders and entrepreneurs getting ready to launch new products and just bring innovation forward. And that's what we've been waiting for, hoping for, and now it's here.
Now, has that meant that the advice, obviously venture investors, there's a check portion, but there's also a relationship guidance portion of being a VC. So how has the advice changed? And when portfolio companies come to you, ask about regulation or ask about, launching products, ask about hiring, is the advice you're giving now different than 3 months ago?
Yeah, look, I think that the advice is somewhat similar, but we're in a different environment. So I think where entrepreneurs were really so fearful of, as I said, launching products, we're now saying that you shouldn't be as fearful. Of course, you should follow the rules that we do have. We need legislation. We need regulatory guidance. We're hopeful that we're now going to get it out of the new government coming in, but we still need it. But we're encouraging our portfolio companies to move forward, just to do so carefully, cautiously, and within the rubrics that we currently have. And as far as you mentioned advice, as you know, at A16Z, we don't just write a check. We work very closely with our portfolio companies. We have a huge operations team. I'm the COO overseeing operations, but we advise our companies on legal, regulatory, talent, helping them staff and scale, go to market, helping them get products into the bigger institutions, engineering, helping them design their networks, and helping with token launches. So we really advise on all different aspects, and I think that's the real unique and exciting part about our business model.
So obviously people are anticipating these changes to the regulatory and policy framework in the United States. What's the timeline for change in your sense? When do you anticipate these major policy shifts to occur?
So no one really knows. We are hoping that over the next year, we'll make a lot of progress. FIT 21 was passed this past year through the House. Obviously not law yet. We're hoping that we can build on that and have a piece of legislation that gets through both chambers, ideally next year. So we're feeling optimistic. We want to be aggressive, and we're hoping the new Congress will be as well.
Yeah. When you think about, you mentioned that now folks can sort of feel more confident in launching new products. What type of products are we talking about here? Is it DeFi? Is it gaming? Is it something else?
It's really everything. I mean, we invest across the board. We're not focused on one specific area, but it's social media, it's gaming, it's DeFi. We invest more broadly in infrastructure and consumer apps. We're hoping a lot of the consumer applications will come to bear now. So it's really across the board where we have innovators really ready to move forward and bring products to market.
Are they coming back to the U.S. as well, in addition to launching new products?
I mean, look, the vast majority of our companies are in the U.S. We have some abroad. We'll see. I think there's definitely a lot of renewed optimism in the U.S. right now.
So walk us through how an A16Z sort of helps founders navigate challenges pertaining to the volatility of the market, the sort of uncertainty around regulation.
I'm sorry, what was the question?
How do you help them navigate that uncertainty and volatility?
Yeah, look, I mean, I think crypto's obviously a volatile space. You have to be prepared for the ride. I think we help them in the areas I mentioned. I mean, legal and regulatory has really been, I think, the biggest challenge for our founders. And how do you navigate, especially since we don't have legislation and we don't have clear regulatory guidance. So how do you navigate that world and make sure you're compliant? We help them a lot, advising them on, how to be decentralized, what it means to be decentralized, and how to launch products. Again, we're hoping for more clarity going forward, but that's one way in which we help them navigate the road and deal with the volatility.
There's a cyclical nature to crypto, right? Big ups, big downs, and during these more optimistic periods, we've seen historically unbridled enthusiasm translating into a lack of discipline, perhaps.
Yes.
And so I guess, how do you sort of help companies sort of maintain focus and build something sustainable that doesn't necessarily follow the same big ups and big downs as price?
Well, look, we try to, as best as possible, not focus on the price swings because, as I said, crypto is very volatile and you're always going to have highs and lows. I know we're at a high point right now, but you can't rest on that, and it will always be volatile. So we try not to get too focused on the price movements and just focus on the technology and building great products that use blockchain. And so that's really what we focus on. And you'd be surprised if you were with our team, even during the downturn, there's optimism because we believe in the technology and we believe that, better days were ahead and it's a crypto winter. You'll get through it. Don't let it get you down, but focus on the technology. And that's what true believers typically do. And our team is filled with true believers.
Walk us through your background. How did you find yourself in crypto and at A16Z?
Yeah, it was a very unusual path to get where I am today. So I started off as a lawyer. I was a partner at a large...
We'll forgive you for that.
Yeah, please don't hold that against me. I was a partner at a large firm. I then made the shift from practicing law into government, and I actually helped launch the New York State Department of Financial Services. I was there when we launched the agency under the New York governor. I was the #2 at the agency, and then I became... I ran it for a period of time, which was really exciting. It's actually when I got into crypto, because we were the crypto regulator for New York State.
Yeah.
So those were early days in crypto. We started the agency in 2011. I left in 2016. So those were really kind of earlier days in crypto, really learning about the space, figuring out how we could regulate it. I then from there went to the New York Stock Exchange, where I was the chief regulatory officer for almost 5 years, and really a phenomenal position, a great institution, and then decided I wanted to get into tech and crypto. And so found my way, roundabout way, to A16Z Crypto, and it's been an incredible ride ever since.
Well, it's super interesting because it allows me to ask the question, what does the government think of crypto? How is that changing? And then also, how is TradFi thinking of crypto and how that's changing? New York Stock Exchange obviously has a very long history being involved with crypto. I think they invested in one of Coinbase's earlier, I think Series B.
Backed, yeah.
And then backed, of course.
We did that, and then we launched Backed, yeah.
But how have you seen Wall Street and government warm up to crypto?
Well, significantly, and it's funny, Frank, when I decided to leave the New York Stock Exchange and go into crypto.
They said you were crazy.
They thought I was crazy. They really thought I was crazy, and
he's not crazy, by the way.
they just couldn't understand it. It was, and again, it was over 4 years ago. It was a very different time, and today many of my colleagues have since left, not just the New York Stock Exchange, but TradFi in general, and moved into crypto. So there's a very different view about crypto today than there was 5 years ago. So yeah, I've seen, to answer your question, I've seen an enormous shift. And I think especially now with the new government and the optimism around crypto, we're already talking to our friends in the big TradFi institutions, and they're now excited about getting into the space. I mean, there was so much concern among the TradFi world about getting to the space, and we understand it because you had regulators that were really going after everyone that got into the space. You're a big financial institution, you've got to weigh risk, and you don't want to assume that risk. But now that there's a different view about crypto, we're really hoping and even seeing early days that a lot of the bigger institutions are going to move into the space, and we're excited, and that's a big part of our focus for 2025, our go-to-market team, which again helps connect our portfolio and products with the bigger institutions and help them go to market. We're really excited about our go-to-market efforts and again, bringing TradFi and just the bigger tech institutional players into the space next year.
Given that you were at the New York Stock Exchange, I'm wondering if you have a view on crypto and how it can impact market structure. When you think about the business of exchanges and the business of trading, I know you're more on the regulatory policy side and not necessarily a market structure wonk, but curious if you have a view.
Look, we think it can make it better, faster, more efficient. I mean, I look at some of the processes we had at the New York Stock Exchange and even at just the bigger financial institutions. I think that crypto blockchain technology can really improve those businesses. And I think a lot of those more traditional financial institutions know that, or they see that, or they hope that. Again, they've just been reluctant to get into the space, and I think we're going to see that changing now.
Yeah, that makes a lot of sense. So when you think about the next 3-6 months, what are you most excited about?
Really excited about...
Internally or externally?
What'd you say?
I said internally or externally.
Look, I think we're really excited to, as I said, see the entrepreneurs who've been on the sidelines come off the sidelines. And we're just really excited about seeing the launch of a lot of new products that we know are waiting in the wings. And I think we're going to start seeing that pretty quickly. So I think that's what we're most excited about. And look, the optimism around crypto now, I think, will produce just a lot of positive effects. So very excited about that.
Does that mean, you know, when you think about deploying capital into new companies, new entrepreneurs, do we have to pick things up? Are things going to get competitive again in terms of some of the larger VCs re-entering? You know, many of them left after the SBF meltdown. Do you see venture getting more competitive?
Well, look, we never stopped deploying. We've been deploying throughout the crypto winter, throughout the downturn. So for us, we're always deploying. We're always looking for great opportunities. I think there are some folks that left the space that will come back into the space. I think you're right. And we think that's great. We think the more people in the space, the better. We want to see people building in the space. We want to see people investing in the space. So our view has always been the more the merrier.
Yeah, of course. And so what does, when it gets more competitive, obviously we welcome competition because it validates sort of your existence in operating in a certain field. But it does mean maybe you need to be more creative in certain ways or hire more people to do X or do Y. As the sort of operator, as it were, what ways, you know, what sort of bows in your quiver do you have to compete against new entrants?
Look, I mean, first of all, we love competition. So we're excited, you know, as I said, for the more players in the space, the better. That's just the way it works. So we like competition. We want more people to be in the space. I think our business model is unique, what I touched upon earlier. We have a huge operations team that not a lot of VC firms have. So we don't just write a check and walk away. We then become a partner to the portfolio companies and to our founders and help them scale through the talent team, help them come up with the right legal regulatory framework through the legal team, help them navigate the policy world. We actually recently, in recent years, built this phenomenal government affairs team. So helps them deal with DC and engineering, go to market. So we do a lot more than invest, and we do a lot more than write a check. And I think that makes our business model very unique and very attractive to founders.
And another unique element is there's A16Z, but there's A16Z crypto. How do the two firms sort of, or entities, engage with one another?
Yeah, we're one big happy family at A16Z. The firm over the past few years has become verticalized, meaning that we have different funds that focus on different areas. So we have A16Z crypto. So we're part of A16Z, but the theory and idea was that it's more effective to have a vertical of specialists that focus on that subject matter. So we have a different fund essentially for each of the big investing areas. And it makes sense because we have a GC, for example, who's a crypto GC expert. You really can't have generalists in this space, especially in crypto. I don't think it works. And we realized that in very early days, many years ago. So we've got specialists in each of our operating verticals, whether it be legal, go-to-market, talent. They understand the space. They understand the technology. So they're most equipped to help our companies in crypto build.
It's interesting. I think you're 100% right. It's difficult for a generalist to invest in crypto. But at the same time, crypto investors almost have to be generalists because of the nature of crypto, right? It touches finance, it touches gaming, it touches social.
We're generalists within crypto, but we're crypto generalists.
Yes, exactly.
But you have to know and understand the underlying technology and why it's so helpful and effective.
Yeah. So looking over the next, 3 to 6 months, is there any sort of category that you think, is going to emerge that might be different from previous cycles?
I don't know that there's one category. Like I said, I mean, we invest a lot in infrastructure, a lot in consumer, really hoping that the consumer applications will now flourish more under the new environment. So I think that, we're really hopeful and excited about that.
Get that unlocked.
Yeah.
Well, Anthony, thanks so much for taking the time.
Thank you.
Very honored that the Prime Minister of Australia could join us today.
Yes, when he was elected Prime Minister, you can imagine my email and phone was flooded with texts and emails asking if it was me. But it's not me, but I'm glad that he's making me proud of my name.
Yeah, exactly. He's doing a lot of good work for the Anthony Albaneses of the world.
Absolutely.
Thanks so much.
Thank you, Frank.
Thank you.
Thank you.
Thank you.
Frank Chaparro is back for our next Fireside Chat. His guest is Zhou from ByBit.
Right.
Wow.
Okay.
I am just blown away by the production quality of this event.
It's pretty amazing.
It's pretty amazing. I hadn't seen that before. The bubble thing with the moving circles that were doing whatever they did. Sir, thanks for joining us. Let's start very basic. Obviously, it's a good time to be a crypto exchange. There's more trading volumes than the doldrums of this summer that we were stuck in. How's business?
I would say 2024 is probably the best year for almost all the exchange still surviving it. I was talking to a few exchange. I mean, we started from 2018 until today, almost a little over 6 years. In terms of all numbers, all levels on ByBit, 2024 is the all-time high. And I think November for 2024, last month, was also the best month in terms of volume, revenue, new client acquisition, market share, whatever. So I think as far as a good time to be as an exchange, I guess last month, this is really good.
So obviously, a lot of the business is transaction, fees. So when volatility's up, when prices surge, obviously you make more money from transaction fees. What other revenue lines are there at a firm like ByBit? What sort of makes up the revenue streams?
Yeah, so I mean, it's really the trading transaction fees. That's the majority. I mean, I know the kind of the industry look at exchange saying that exchange might charge for listings or they make money on tokens collecting from that. Actually, from our perspective, the revenue on spot, we don't really make revenue on listings. I can share what we do is we typically charge what you call a security deposit for the projects, and that's kind of you can imagine it's amount for them to bring users onto the exchange. So for exchange to list any token is really get users in, and then gradually these users will trade and you make transaction fees. So at the end of the day, everything is a channel towards transaction fees and all of that. On top of that, I think you have some revenue stream on lending and borrowing. For example, institutions will want to have certain loans, and we will give them a collateral-based loan for them to trade, and we will make a certain interest. I think currently this month, the borrow and lending rate is about 15% on USDT. So if you're institution trading on ByBit, you can get a loan up to, let's say, 10 million for 15% interest that you pay. There's some other small stream of revenue, earn product, for example. We would help clients to stake their asset into on-chain or off-chain or dual asset, private investment, this type of things, and we would charge a fee in the middle. So, I mean, at the end of the day, it's mostly still fees on transactions on that, yeah.
I feel like the token listing process is something that can be a bit mystifying to people.
Yeah.
I feel like, and correct me if you think I'm wrong, but the process of the day one listing after the TGE seems more important than ever before. And it seems like the exchanges with whom a project engages in that initial listing with is more important than ever before. What does that process look like? We kind of peel back the curtain a little bit. Is it competitive? Are exchanges pitching projects on listing, or is it more so the other way around? The projects want to be on a certain exchange with liquidity, with visibility, with a big client base?
I think it's like anything else. If the project is strong, meaning that they are so why do exchange lists? Exchange list token mostly because we want users that believe in that token. Preferably, the community that back up this project has not registered account with the exchange. So that means you get new users, right? And also, we want to make sure that this project, by listing on ByBit, our existing client will love to trade it. So that translates into fees.
Yeah.
So why do they want to trade? Because it's the hype. So for example, if it's a meme coin season and all of a sudden you are launching an NFT thing, that's a little bit off the hype. And that means no one's going to trade. And so probably you're going to lose that support from the exchange. But at the end of the day, I think people more focus on the listing requirement of the exchange, but they forget if you are a really solid project, all the exchange will list you and even go out of their way to list you. I think one of the recent examples is probably Hyperliquid. They've been quite hyped, and the community really kind of into that. And they're not working with any centralized exchange. And we were like scratching our heads. My team is calling me, Ben, do you know these guys? Can we, talk to them? Can we list them? Can we pay them to list them? So it's really, are you innovative? Do you have core believers? And are you in the hype? And if you have all these three, don't worry about the exchange will list you. So at the end of the day, exchange lists you not just to make that little tiny whatever listing fees. It's can we get more users? And especially for ByBit, we are the second in the world. That means a lot of times we need to see what the big brother is doing. We also need to kind of predict what Binance is trying to do and what other exchanges doing. And by listing this, do we get the most community support and things like that? So there's multiple factors to kind of look into.
What's your sort of approach to marketing? Obviously, you guys are sponsors of Formula One. How do you think about those types of deals from your seat as CEO?
So I think it's where you are and what stage you are in. So I think we got a deal with Formula One, with Red Bull Racing 3 years ago. And that's when ByBit just started to launch spot market. And before that, we were kind of a derivative-focused exchange. When you talk about derivatives, you think about maybe 100 new users into the space, maybe 5 of them are derivative traders. Most of them are here for stablecoins and here for spot and all that. So we need a brand support to make everyone knows that ByBit is now kind of the super app and one-stop shop for you to do everything. So I think Red Bull Racing did the job, and that kind of really put ByBit into everyone's landscape. But for now, we don't really need that kind of showing muscle type of deal anymore. I mean, actually, we would rather much focus on how can we grow the industry and how can we grow the pie together, things like that. I mean, another thing is that everyone in crypto already know ByBit, so we don't need to go out our way to go crazy. And I think this is similar for other exchanges to consider. If you are kind of coming up, you need something to show the brand and show the power. But once you're kind of in the top 3 spot, I think you focus on other stuff.
Yeah, that makes a lot of sense. When you think about the bread and butter, what folks know you guys for, has that changed? Is that evolving? Obviously, you went from derivatives, also entered spot. What other products could you break into?
Yeah, so we have a lot, actually now, most of our clients, a lot of new clients are spot clients. And also, I think ByBit is becoming more well-known for our infrastructure, which was never known before. So we have a lot of on and off ramps now. We have our ByBit card. The ByBit card, the crypto card is getting very popular. For a lot of the regions, we work in different countries and get the license and to issue the cards. So ByBit is not being seen as so much as a derivatives exchange, although our derivatives is still the strongest product line, most liquid, one of the most liquid. But it's starting to become more kind of overall exchange, I think. Yeah.
Interesting.
Yeah.
I actually was with your team at the Formula One in Miami a few years ago.
Okay.
It was a lot of fun.
Yeah.
Yeah, it was really cool.
Yeah.
With the Red Bull they had like a special section where you could watch the race. Super fun. We should do Emergence in Miami maybe next year. A bit warmer than Prague, although Prague's great. Love Prague. Yeah. So when you think about the next 6 to 12 months, what are you most excited about?
Next 6 to 12 months. I think one thing is probably the MiCA regulation. We are getting regulated under MiCA, so there's a lot of work for the exchange.
So you'll be expanding into Europe.
Yes, well, we are in Europe
here
today,
already?
but everyone who's in Europe needs to get the MiCA license and kind of migrate users from the global side into the MiCA side. I think initially it was not so clear what MiCA wants and how to do it, but as we communicate more and more to our regulator and we start to understand it's not as bad as we thought, or how initially everyone thought all the product will be limited, there's not so much offering, but now from the looks of it, even derivative is able, you can do it up to 20 leverage. Initially there was no stable coin. Now I think Circle USDC is getting ready. Rumors saying that Tether USDT is also going to be maybe getting a license, so we will be able to list. One of the biggest concerns is to force users to trade something they don't want to do, right? I think on the global exchange, majority of the liquidity and clients are still trading USDT. But ByBit is one of the first exchange to support Circle and USDC. We have quite a lot of liquidity. But it will be a changing habit to even move everyone to a USDC-based derivative pairs. So I think it's getting there, and everyone is getting ready for MiCA. So that's something quite exciting. And probably after MiCA, I think a lot of the countries will follow MiCA regime and to release kind of a crypto framework. Another thing, I guess, is the U.S. front. Everyone have a lot of expectation about. I think a lot of these new appointed chairmen by the Trump administration is crypto friendly. So we are hoping to see what's going to really come up. Although I also hear other noises saying that U.S. pro-crypto doesn't mean pro-crypto for the world. It means crypto for the U.S. So that means the U.S.-based company will be very strong.
Yeah.
And maybe busting our balls a bit.
You
never know.
It won't translate into them warming up to offshore. We call offshore.
Yeah. But I think overall it's positive for the industry. Yeah. But shifting of the power maybe is something. Yeah.
But historically, Asia-based firms have had a hard time breaking into the U.S. market. If you
right.
Historically, well, Binance US, obviously, I think they had like 25% market share at peak. But when I think about like Huobi or what was the Japanese-based exchange?
Bitflyer?
Bitflyer, yeah. They all tried to get into the United States, and it
yeah.
didn't really work out for them.
Yeah.
What do you make of the competitive landscape? Do you see a wave of consolidation on the horizon? Do you see new exchanges cropping up? And do you maybe even see an opportunity in the United States? That's one region where we're probably underserved by exchanges.
Yeah, we don't touch the U.S. At the moment. I think when things get more clear, maybe at some point. I haven't seen any new centralized exchange popping up on a global level. So if you look at global as a whole, I think it's very much the top 3 or 4 players controls the liquidity, the products, and it's massive, right? But if you zoom into countries, you start to see many things happening. So there's a lot of local exchange that's becoming more powerful. So if you, for example, you go to Thailand, you have BitCup, that's the dominating player. You go to Indonesia, you have Indodex, all these guys. I heard Vietnam is launching a regulatory regime, so there's going to be some local players becoming very strong. In Europe, I think Bitvavo, Bitpanda is historically been quite strong.
Yeah.
So if you look at the world into that landscape, actually global exchange can never compete. For example, like we are also in Netherlands. Bitvavo have 200, 300 staff in Netherlands. We have 10.
Yeah.
So we cannot compete on that level. But so in the end, what I think all the global players, the top 3, 4, We were relying on our liquidity, our product advantage, but we are pivoting towards working with these guys rather than competing. So
with the local,
with the local
players?
exchange.
Yeah.
Do you need liquidity? Do you need product? Like, what do you see you like on ByBit? ByBit have like copy trading.
Well,
trading
they're going to be able to reach those markets in a way that's very difficult. I mean, when we talked about marketing earlier.
Yeah.
You know, obviously, all the countries in Europe speak different languages. So it's expensive to have different brandings and different signs.
And the challenge to compete on a local level is never the product and liquidity. People would think, oh, ByBit or Binance, you have product and liquidity, you dominate in, let's say, Thailand. That's wrong, because the biggest challenge is the regulatory barrier. And even you have the license, exchange like BitCup have been talking and communicating with regulators for, let's say, 5 years.
Yeah.
You are the new exchange, you come in, no matter how much liquidity, the communication to do things, it takes so long. I'll give you an example. Like, we compete in Netherlands, and we see that Bitwavo can onboard a user and then allow them to do a very simple questionnaire and then make a deposit and then do the rest of the KYC procedures, let's say. The way we design it is we do everything. We ask a bunch of questions, everything KYC up front. And that user journey allows them to onboard a lot more users than us. And we say, okay, can I change it? No, you have to communicate with the regulator, change the whole AML KYC assessment point. That would take half a year. So even for me to change that user experience, on the global, I can just change it within a half day.
Yeah.
But at the local level, under the license regime, everything needs to be communicated, everything needs to be approved. That communication time taken is a huge advantage for any local players because they started early. So then for us, it's better to work with them rather than trying to compete on every single level. Yeah.
Where do you see, where's sort of the user base for the global platform? Where is it strongest?
I mean, we're all over the place, right? So we're quite big in Asia, Southeast Asia. Actually, Europe is our biggest market.
Oh, really?
Yeah, so under the MiCA, that's why we are very excited about MiCA and all that. And then I think Turkey, Latin America is becoming quite strong.
Sure.
So, and also Africa, Nigeria, all these places are becoming, especially places, typically we see places with not so much established financial system adopts crypto faster. And that's where we kind of grow the best, yeah.
So walk us through your journey. How did you get into the crypto in the first place?
I got in 2018. And I was previously I was running a forex exchange for 6-7 years, and then I basically joined crypto through this whole ICO time, and there's a lot of scams happening, but during that time I think it painted a world where everything can be decentralized. I remember there was white paper about decentralizing postal service, internet, everything, shoes and all that. So that kind of printed a really ideal world, and that kind of lures me in. I think this industry is going to change the world and make a lot of impacts on people's life. So I think that's why I joined. Yeah.
Brilliant.
Yeah.
Well, thank you so much.
All right, thank you.
Good chatting.
Thank you.
Good seeing you again.
Thank you. Yeah.
Thank you.
Bridging the Gap, exploring the merging of crypto and TradFi. Please welcome moderator David Wells and his panel, Luc Streyers, Alan Kuntz, and Gracie Chen.
You're so unbelievable.
Or just follow the pictures.
Amazing. All right, time for the main event here. Welcome, everyone. Thank you for coming. Today's panel is Bridging the Gap, exploring the merging of TradFi and crypto. This could be the most important panel so far for your bags, and you'll find out why, because we're going to talk about trillions of dollars. We'll do a quick round of intros. I'm David Wells, CEO of Enclave Markets. Enclave is the first fully encrypted exchange. Our products include a mid-match dark pool called Enclave Cross, and we also have spot and perpetual markets. We'll go to Luke.
Hi, my name is Luc Strijers. I'm Dutch, based in Dubai, the CEO of Deribit. Deribit is just licensed by VARA, the regulator in Dubai, and we are the biggest crypto options exchange in the world. So we have around 80% market share of all options tradable globally, including US markets like CME, Binance, OKX, ByBit, etc.
I'm Gracie Chen, CEO of BitGet. Like Deribit, we are also a centralized exchange, but we are more focused on retail users. Big on perpetuals, also growing a lot on spot market. So around the world, we are serving 45 million users from more than 100 countries.
My name is Alan. I lead European business development at GSR. GSR is the oldest crypto-native liquidity provider and trading shop in the crypto space.
Excellent. Thank you all for coming. So the first question is going to be a toss-up, and it's about trillions of dollars. The market cap of global equities grew from 2.5 trillion to 120 trillion since 1980. So that's a 50x. If TradFi truly comes in, will the same happen to crypto? Are we in 1980 of crypto today? And if so, what's the catalyst? And you can't just say MAGA. Luke, you want to start?
Sure. So for us, the size of an individual token is not that relevant. So we ignore 95% of the tokens out there because from a derivatives perspective, and especially from an options perspective, they don't really exist yet. The market is simply not big enough for options to be tradable on all those tokens like traditional markets. So we focus on a subset, and the subset currently is let's say 5 tokens. We offer trading in BTC and ETH. Those are the biggest chunk of our volumes, let's say 95%. And the rest is what we call linear options, and we currently have BNB, XRP, and Solana. But compared to the rest, they're still tiny. So for us to add more coins from an options perspective, the market is simply not sizable enough to justify that. But should we do it, it would be, let's say, 5, 6, 7 more instead of hundreds more. So all these trillions of dollars that theoretically exist, fully diluted, et cetera, if you look at the actual demand from an options perspective, it's not there. So the options focus is purely focusing on the top names, and currently the space is around 50 billion in notional outstanding, out of which 35 billion is BTC. So it's really dominated by Bitcoin.
So your question, for me, it's not about how I think, it's about how some institutions think. And I've talked to a few of them. So maybe 2 examples here. So number 1 is I talked to MIT Endowment Fund president because I graduated from MIT. I asked them, how much Bitcoin do you hold in your whole portfolio? And why are you holding so little? So they have like 0 point something percentage of their portfolio in Bitcoin right now. But one issue that he mentioned was that they think it's really hard for them to understand the pricing of Bitcoin. So how to price Bitcoin, what's the real value under it, seems that might be one of the hurdles to some institutional clients like that. Another example was just a couple weeks ago, I talked to a national sovereign fund in Asia, and the fund head actually told me there are 3 things preventing them from entering the space or buying a lot of Bitcoin or Ethereum. The 3 things are, number 1, regulatory risks. Although ETF of Bitcoin, spot market ETF is approved in the US, but it's still unsure that the institutions can legally, fully regulated holding Bitcoin rather than Bitcoin ETF. So for him, he doesn't want to speculate on this. He's like, once the law, the regulations is very, very clear that institutions doesn't have any regulatory risk to buy and sell Bitcoin and Ethereum, then we'll do it, or we'll consider that. The second risk is reputational risks, because probably FTX or many other scams happened in our industry, especially in the previous bear market, made a lot of institutions like that think if we are buying a lot of Bitcoin, our citizens may think bad on us. Like the reputational risk is another thing. And the third thing is he is really looking for real technological innovation. Like lots of promises that the Web3 startups did promise, like if we are infrastructure, you can build on us, or if we are GameFi projects, it should be a very good game by default first. So they haven't seen enough blockchain's real technological applications in the world. So I guess that's some interesting things that they share with me.
Okay, and Alan, this is going to be connected to the previous question, but for the last 10 years, we've heard the institutions are coming. Gracie talked a little bit about some of the blockers for certain institutions, like LPs and large pension funds and endowments and sovereign wealth funds. What about institutions also includes big banks? Big banks have trillion-dollar balance sheets. I looked up the top 10 banks in the world have a combined 40 trillion in assets. Almost zero of that is put into crypto or given to trading firms and other institutions as credit for crypto. So what do you think about the possibility of next year being the year that large banks will lend some of their balance sheets as they do in TradFi?
I mean, generally, I would say every day they're not coming, it's more likely they will come tomorrow, to answer your question on a high level. Now, if we take up the idea with banks, I think banks are essentially steward of capital. They, as you mentioned, they hold a lot of assets. I think they have seen a lot of assets just losing or leaving their platform, being to exchanges, being to custodian, being somewhere else. So they don't really like to lose asset under management. Now, when we look at the crypto space or institutional, a bit on the broader case, the question is like, why are they not in it? I think it's two things my colleagues already mentioned. One thing is essentially it's a new technology. Banks are rather late to adopting technology compared to, let's say, to credit card companies. And the other one is the completely lack of regulatory certainty, which they just stay away. But I just would say if we look at what happened with MiCA, with the Stablecoin Act, it's just getting more clearer. I mean, I will bring up MAGA. I think Trump and the people he appointed will be a bit more pro-innovation and help to foster that. So the money will move over. And then if you think about it, there is also, when we talk about crypto, there's the blockchain technology. Essentially, a lot of mid and back office activity of financial institution can be replaced and made much better with just using blockchain. Something else, which is also like crypto as an asset class, that's the ETP, ETF, people want it for diversification. I think Bitcoin and ETH are de-risk. I think what you mentioned before, if you go a bit down the risk curve, there's a lot of question, how do you price it or not? But I think at the end of the day, that will somehow work out. I think something else is like the payment. I mean, payment is blockchain's killer app so far, if we just look at the number. But when we actually look at merchant, or if you go in a shop, it's still not easy to pay with stablecoin. I think one thing we saw is like the acquisition of Stripe, where they bought like another stablecoin provider. I think that will merge again much more. And then the other one is a lot in the financial industry is about wrapping. Basically, in what kind of form do you give exposure to something? Now we have funds, we have ETP, we have nodes, we have contracts. That's all very shitty technology. So if you put that just in a token or you actually tokenize it, it just will unlock so much value.
That makes sense. So you think it'll be, fintechs will move faster. I mean, certainly that's the story of the last several years. Fintechs are offering crypto to retail, but you think from an infrastructure perspective, including payments, fintechs are more likely to move faster than like a large bank getting into tokenized payments, for example?
I think it's an innovations dilemma on one side. If you like a fintech, it's probably the best shot to become relevant because using the old technology, you have no edge. And if it doesn't work out, you're just a startup. If you're a huge bank, you're just going to go move fast and break things because you have a lot to do. But I think it's going to be much more like merging it a bit together. Like we see a simple example is BlackRock. I mean, BlackRock gives exposure in traditional ETFs now to Bitcoin. But on the other side, BlackRock is also tokenizing their funds on chain. So I think it's going to be a much more emergent. I think a lot of the big old TradFi institution will either acquire fintech just to have the technology because in-house innovation at that size and with all the politics is almost impossible.
Yep. Okay. We mentioned ETFs. So we now have in the U.S. ETFs. I think they've been in Europe for longer. CME has futures. They've had it since 2018. So these are a way for TradFi firms to access crypto products without changing the rails or their operational procedures, which is great. It's kind of the wrapper that you talked about, Alan. We mentioned fintech retail apps being able to buy on, Robinhood, Revolut, PayPal. It's pretty ubiquitous to be at least for retail to be able to access crypto products. And then we have centralized exchanges, and now we have a lot of decentralized exchanges, still relatively small market share, but growing. Can all of these channels, distribution platforms, can they all coexist, or will there be sort of one or two winners in terms of accessing? Obviously, institutions and retail may access it differently, but there's a lot of different channels to access crypto now. So how do you see that kind of converging over the next few years?
We are a centralized exchange, and in my opinion, they will coexist. However, they are probably targeting different customer base. So for example, centralized exchanges and decentralized exchanges are still targeting more retail users, especially DEX for the more DJing professional crypto traders, because typically someone will go to DEX when they can't find this token on centralized exchanges, because centralized exchanges do have better liquidity, a better customer service, and the whole user experience. And then for the for the institutions, we are actually looking at different ways of approaching that market, although we are historically bigger on retail users. For institutional clients, by the way, we do think it's gonna be bigger and bigger, and in 2025, that's actually one of the areas that we're focusing for growth. So how we want to approach it is, for example, collaborating with some local other Web3 groups. For example, I'm rethinking about our US strategy, because previously we don't serve any US customers. All the US IP addresses are banned on ByBit. But now we are rethinking whether we can enter that market through a JV, through a joint venture with someone who has lots of licenses. And then we also acquired some banks to more like new banks rather than very traditional, HSBC or Bank of America kind of big banks. But the new banks, we want to collaborate with them to look at different markets, such as issuing a credit card or more pay-fi kind of service. Yeah, so I think they will coexist, but I also want to highlight in each sector, it's probably still gonna be the bigger ones becoming bigger. The smaller ones will just die out, like fade away gradually. We saw that coming after FTX collapse already, because when users can't trust everyone in one sector, they will only go to the bigger one. And the smaller ones will just gradually lose credibility, lose their users. So it may coexist, but it doesn't mean there should be 100 or even more players out there. It should be probably just like the ones who provide the best service, who are most secured, who really put their users first.
I think a lot of them will stop existing. So to put it more binary, I think the regulatory frameworks will step up globally and will make a lot of the current massive list of platforms simply no longer feasible, either because operational costs will be too high or because the regulators will simply shut them down. So in the end, if you want to service clients on a global scale, institutions, but perhaps more importantly retail, the regulatory frameworks are already quite strict, and it will only get more and more strict. So that means that a lot of platforms are simply in breach of something. So they won't be able to survive, I guess, after getting fined. I think if you look at the DeFi space, there's simply not enough traders. So there's so many platforms, and there's let's say 20,000 traders that hop from one platform to another, finding some new free goodie. But in the end, there's simply not enough trading to make them all sustainable. So that there will be a massive shift, I think, and a focus, like you said, on the top X. I'm not sure how many. I think in the US, everyone is very hyped about the new regulatory framework or the upcoming changes. But I think the US will focus, or especially Trump, on the US. So the platforms in the US will do really well, but it's not that we can easily access the US simply because there's a new president. So I think also there, it will be a focus on a few firms that will win. I think to get back to your earlier question, what is the role of the banks in all of this? I think they will prefer a subset So again, they will focus on which platforms are credible, which ones can they trust. Stuff like audited financials, ISO certification, SOC 2, etc. becomes more and more important, which is perhaps the most boring topic of all, but very, very important. If you look at our onboarding requests, so not the stuff that we ask our clients, but the stuff that our clients ask us, this is like the key things that are important. We have to justify that we are safe, secure, financially sound, etc. So for them to start trading at some point, so Goldman, Citi, etc., they're not here today. They might trade the ETF, they might trade some futures on CME, but before they start trading on offshore platforms like us, it's still some years away. But once they're finally ready, they won't trade on all of those platforms. They will only trade on a handful, I think. That will simply put the others out of business, because once they're there, the ecosystem will scale significantly, which makes the other segments simply no longer sustainable. So I think there's a very big business case for retail to offer like a big supermarket for everything that retail is doing, and institutions. But that's where it ends at some point. So how much space is there? 10 platforms?
Yeah. If I can add something, I mean, in a more optimal world, liquidity attracts liquidity. So you would have one player, best case, smart contracts, which every kind of value can be exchanged. But that's probably not going to happen. And like you mentioned the CME future. I mean, CME future, for us here, it's not easy to access them. We can buy an ETF, but you need some setup to actually access CME. And if we break it down, I think the TradFi platforms, they already have the distribution. They have a lot of clients. They just need to basically add the new product. And people are not going to move around. I mean, who of us opens up multiple bank accounts? It's a pain in the ass if you don't get debanked. If you have one and you're happy, you keep it. Then you have like let's say the crypto native exchanges. I mean, if you compare them on-chain versus off-chain, you see again, liquidity is much more off-chain. It's on the sexes. And then if you basically break down the liquidity across different centralized exchange, is also a bit more like an oligopoly. There's like a few small players that have a big concentration. And then you have the DeFi space. And I think the DeFi space is the most interesting one to make a more optimal or better world. But I think it's going to be the trickiest one to access for a bigger pool of monies. Because in Europe, most banks or regulated trading firms need to be able to intervene the counterparty who they trade with. And if you just go to Uniswap and trade, it's very hard to identify who you trade with. Of course, you will see a wallet address, so you know who it is. But how our system actually works, we have institution with regulation. So it basically will need a shift in how the regulation is constructed by basically not regulated entities. And if you have a regulation, you can do a certain kind of activity. But you need to flip it around. You provide some kind of activity and you regulate that.
Great. So I think we all kind of recognize that the last decade or so, the growth of crypto really has been retail-led versus institutional-led. I think if we think about the growth of global equity markets, in a lot of ways it was almost the reverse, where you have institutions with different trading strategies that could get a lot of leverage from banks that increase the liquidity in global equity markets. A lot of those firms, like the firm I used to work at, Two Sigma, are quantitative firms that are able to access, large prime brokers, large banks, and really lever up and increase the overall liquidity. So Citadel, Virtu, these types of firms. We haven't really seen that yet, and maybe it's partially because there's no real access to that type of credit or leverage, or maybe it's because these types of strategies, aren't necessarily working in crypto like they did in equities, or there's not enough history. But how do we feel like from a market structure perspective, liquidity will grow from larger firms starting to enter and using some of these strategies that will increase liquidity, whether it's derivatives or spot markets?
We see it already. So I think even though the big institutions are not here today, a lot of them, perhaps tier 2 or whatever way you want to define them, are already there. So the situation, I think, started changing 2019-ish. At least from a derivative perspective, when we saw open interest rising. If you look at anyone from the traditional space and what they trade, it's typically options and futures. So we have quite a lot of them coming to us simply because we have the shelf that they're looking for. And we see more and more of them joining. So our license in Dubai We intend to activate it as of January 1st. There's multiple of these traditional firms waiting, standby to actually access the platform and start trading. These firms are like interdealer brokers that will bring their high net worth clients, that will bring asset managers. And no, they won't bring the investment banks yet, but they will definitely bring size. So what you referred to earlier, the capital which might be missing, I think I saw a chart by Galaxy that the pre-Genesis size of the market, credit market, was something like 22-ish billion. So the size of the aggregate desk, so everything out there. After Genesis collapse, there's 2 billion left. Wow. So 20 billion is gone. All the collateralized and uncollateralized lending, all of that stuff is gone. And now, so there's 2 billion left, and now the rest of the gap is to be provided by let's say LTP, Hidden Road, Falcon X, those guys, but they don't have that size, so it's still tricky. Firms like Cantor Fitzgerald are entering with a few billion, but not 20 billion. So still, a lot of capital is still missing. So these firms joining will bring more capital, but not the gap yet. So I think in order to have more liquidity, more trading, more Two Sigma type of activities, you need more capital, which is still missing.
Tracy, Alan?
Probably I'll just add, I kind of agree, and I just think that it's happening already, but there could be more. Again, some of the hurdles we are looking at are regulatory frameworks, and I think in the US, although Donald Trump made lots of promises, and he's probably very likely going to be really the president on 20th of January, but after that, what's really gonna be implemented? Now we have a better picture in terms of who are the SEC chairperson, who are the crypto advisors, etc. But still, it seems not everything's ready. Like lots of laws or legal frameworks will be coming up gradually. And whether it's really that positive as he promised, really the US is not going to sell any of the Bitcoin that they hold, I think it still remains lots of uncertainties there before there could be very big inflow of institutional liquidity.
I mean, as you mentioned before, the entity you mentioned, it's relying on a lot of infrastructure. That infrastructure is not yet transferred to crypto. I think that's one challenge. The other thing is the regulatory question around the need to be solved. And then we have additional capital constraint that you mentioned. I mean, it's not that easy to, outside of Bitcoin, to deploy 5 to 10 billion in any other coin to actually trade. And the bigger the pool of money you manage, the bigger the ticket is you want to deploy. You're not going to deploy, if you manage 100 billion, you're going to deploy 10 million. It's just not worth your time. Then when we just look at if the same strategies will work or not, I think it's, at the end of the day, it's all time series. It's the same. I mean, if we look in crypto, one of the popular trades is the basis trade or the funding trade. I mean, there's the cash and carry trade in commodity futures. They have been around of time. I think it's going to be much more interesting if we get all that talent into crypto, because compared to the traditional world, they have all the on-chain data. So I'm actually really curious when they bring over the talent, what kind of new strategy will pop up just because there's a completely new infrastructure layer, everything on-chain.
It's interesting you mentioned the basis trade, because that's effectively reducing the cost of capital from a leverage perspective, right? If I'm a futures trader and I want to go long, and we see the success of Athena, you can really get a lot of yield when the markets go up and funding rates go sky high. But if somebody deploys their Bitcoin, for example, and then they short the future, that's ultimately, they're using their spot crypto to reduce the cost of capital. So that is in and of itself a sort of a form of lending capital to the market for increased liquidity. So
yeah, and I mean the crazy spreads that you mentioned on the exchange, the funding rates just goes up. There's a lot of liquidity that's just insulated within the space. So you have like this dislocation on different kind of platform. Because when we look at token, we're actually looking at like digital bearer instrument and not just IOUs.
I think the fragmentation of liquidity is something we talk about a lot, but it's a super important issue, and I think it's particularly relevant in crypto because it's a global, 24/7, fungible tokens, but at the same time, the liquidity pools are, for the most part, siloed and fragmented. You mentioned, Hidden Road and some of the prime brokers that are trying to do more to connect that with, being able to offer a certain amount of leverage and cross-margining and things like that. But in TradFi, you basically have central clearing houses that provide a form of insurance so that TradFi firms can trade on all of the lit exchanges. They all settle with their prime brokers. The prime brokers settle with each other at a net level, and so it's actually a lot more capital efficient. But it's much more centralized, right? And so how do we how does the crypto market evolve from a market structure standpoint to be able to be more capital efficient but not be extremely centralized into one entity?
I think if you look at, let's say, the globe, there's two models. One is the US model, which is dominated by the OCC, which means that you can trade, in our case, options on exchange 5, and you open a contract here on NASDAQ, and you close it on MyX, for example. Same contract, you open here, you close there. That's possible because the open interest is managed by a single pool on behalf of multiple exchanges. If you then look at, let's say, SGX, Hong Kong Exchange, Eurex, etc., the other big global platforms, they're silos. So if you open a contract, the same contract, they don't really exist, but let's suppose it is the same contract, you can't open it here and close it there. Those are completely isolated setups. So the big question is, what is better? If you asked the US, they would, of course, push for the US. They say, look, our model generates way more liquidity than any other siloed model. If you look at the other models, the fact that they can control it protects the exchange, of course, from losing the open interest. So there's something to say for that as well. I think what's missing in crypto is if you trade on any of those markets, regardless of the setup, you trade, let's say, 100 million of something versus 100 million short of something else, which the clearing member would say this is comparable. I'll give you an offset. Let's say assume 100% offset. That means that you can do this risk-free trade with a little bit of margin, perhaps even zero margin. If you do the same, let's say a ByBit spread of 100 million, you would be required to post, let's say, 20 million with us and 20 million with BitGet, because the offset doesn't exist. So the exact same trade will cost 40 million capital today versus zero in the traditional space. That's not easily solved. So you need like a clearing firm to embrace this, and us as markets to trust this clearing firm, and then all connect to that. But I do think that's the future. So if again, you're talking about the banks, I think for them to really bring size, they would demand this type of setup. So if you look at the trend, all of us started as the full silo. So we had everything. We were the broker, the exchange, the clearinghouse, the custodian. What you see now is that we have 5 custodians connected, and we're adding 5 more. So in 6 months' time, we have 10 custodians. The brokerage side, you don't need to onboard with us. You can go to any broker, prime broker, regular broker. So that's already gone. The next level will be the clearing, I think. So, but it won't be tomorrow. So that will take a few years. But if the markets say, look, we're going to create a centralized solution for fungible contracts, so you can open a contract on BitGet and you close it on there, but there can be a lot of capital efficiency in institutional trading. So I do think it's coming.
We should talk about that business idea right after this.
Yeah, exactly.
And build an alliance there.
Yeah. We've heard a lot of talk of crypto custodians trying to set up, working together to be able to do sort of cross-custodian clearing. Hasn't really happened so far, but that's one step in that direction. Probably once larger custodians get into the space where they're used to doing this, maybe, but also much slower moving, right? I did want to talk about derivatives markets specifically. And I think, Gracie, you all offer derivatives as well, so futures, and then we can talk about options with Luke. But how do we see the existing crypto derivatives markets, specifically the nature of perpetuals being a relatively new product? I mean, ultimately, you could just call it a swap with leverage, right, is probably the TradFi term to it. But with things like funding rates and the mechanism of auto liquidation, like these are relatively new from the TradFi perspective. How do you see those markets, maturing and potentially interacting or not with TradFi derivatives markets?
For us, yes, we are quite big on futures, especially perpetuals trading. If you look at the CoinGecko, CoinMarketCap, aggregators like that, BitGet is typically number 4 among all the centralized exchanges, or even 3 sometimes, by trading volume. And many of them comes from derivatives because typically they have a very high leverage, maybe 2 times to 100 times. And in my opinion, the current users that we are serving are still very retail, and we warn them a lot about the risks. But still, the users here are much more risk tolerant or they're more like, they're willing to take the risks because they're looking for 100 times opportunity rather than just 2 times. So for the traditional finance perpetuals, I think that's a very big market. We are actually looking at ways, but I don't have like concrete answer for this, like how they can merge. My gut feeling is for the upcoming 1 or 2 years, we'll still probably serve different markets on our own. And we definitely want to onboard as many market makers, our derivative market, as well as a spot market like GSR. We're actually talking to each other a lot already, and all the bigger market makers. But for other perpetuals, futures offering, I'm actually not sure.
And Luke, from an options perspective, is it similar?
I think from an options perspective, the difference between the traditional space and the newer space, the crypto space, is more collateral. So if you buy an option on anywhere in the world, you typically pay euros or dollars. In the crypto space, you pay in crypto. So you have B2C, which is the biggest differentiator between us and CME, for example. If you have 1,000 B2C or these type of very large funds that have a lot of assets, they can't utilize them. So if they go to CME, they're simply not welcome with their assets that could be worth millions or billions. So they come to us and they generate. Yeah, so coin margin solutions. So they deploy strategies that generate yield. So if the basis rate you're referring to, I just checked, you can now sell the September future, it's $11,000 premium. So it's 15% annualized risk-free return. So they do this kind of stuff using their coins. They sell out-of-the-money option strategies and all of that stuff. So the model is different. I think auto-liquidation or real-time margining is way better than the traditional setup. So the traditional space has a lot of capital required simply because they're closed for the weekend. That means that Monday there could be a war or whatever, something happening, causing a gap down of X%, and there needs to be capital in place to protect the entire ecosystem. All of this capital is in our space not needed because we will act. We will act real time. We don't give you 4 hours to top up margins. We will liquidate now, which is way more capital efficient. But for the traditional space and everyone to embrace this, because it's really different, and especially after FTX, because that's what Sam tried to sell. It's not really the most popular story in the US, so it's a difficult pitch, but it doesn't mean that it's not better. It is better. It's real time, and it's more capital efficient.
I hope you all caught the alpha tip in there, $11,000 premium. You can go trade that on Deribit. Shameless plug, Enclave Markets will be launching Alpha Strat soon to include a basis Alpha Strat as well as some other systematic strategies. So I wanted to throw that in there. Awesome. Okay, Alan, backstage we were talking a bit about tokenized assets and tokenized funds. We were joking about how, this topic we've been talking about since probably 2016 at least, right? Maybe earlier. And we really haven't seen a lot. But in the last year, we've seen BlackRock's BIDL, tokenized treasury product, which is $500 million in AUM. There's been several launches of new ventures out there with similar types of products. We hear the term, real-world assets a lot. It's a hot topic in VC. Is it hype or is it real this time?
I think it's realer as before, let's put it that way. I mean, obviously, from just a logical standpoint, it makes sense to tokenize that stuff for tracking, trading, management of the fund. And the back and mid office is much easier if it's in tokenized form. But the problem is with all this kind of products, at the end of the day, they're never bought. They're always sold. What I mean by that, Enzyme, that's like an on-chain asset management platform. A very cool idea, was very early on. But it's very hard to get traction on because even if it's wrapped on a token, you still will need distribution that people come into it. And now it's already very hard in the TradFi space to launch a fund and distribute it if you don't have a huge distribution mechanism. And just by you being on-chain is essentially, you just limited the opportunity set you can target. I think on the other side, what we have seen a lot of DAOs or treasuries essentially holding hundreds of millions or even billions in assets which are really not managed very well. So I think that's like the TradFi player, like understanding if you bring Finance 101 to that kind of treasuries, to DAOs, it's actually a very nice source to collect that kind of money. So I think it will move ahead. I'm looking forward to the point in time where we just have a legal framework that accepts like a DAO being a legal entity, or like you could just issue a fund and it's just going to be a token fund as a legal construct backing it behind it. And you don't have somewhere like an SPV and then you take the units of the SPV, you tokenize it, you put it on chair. Because if you actually, I mean, it's not specifically BlackRock product, but some earlier one, if you actually break them down, you actually don't really know what you own. It's not like straightforward, you own an ETF and you can look into it and you have it. Mm-hmm. It's often wrapped in different form. And that's not a critique of the people that issued that kind of product, it's just the reality. Otherwise, you don't have a regulatory framework to do it.
I want to highlight that actually Bill also talked to us and GSR as well. We thought about, we're still thinking or evaluating on how to provide that fund to our retail users, because we do have that liquidity that Aileen was talking about. However, for us, it's also about number one, the fees. Like the fee structure that they have is typically much higher than our normal USDT earning product, for example. And whether our users are comfortable with that fee structure, it remains a hurdle and uncertainty. And another thing is, I probably agree that it's more real now, but it doesn't mean it has the very big, massive adoption. Because we kind of did a calculation, and we only want to start with like 5 million cap for that fund if we will be launching that big. It's probably more for PR that I'm collaborating with BlackRock now rather than really looking at the fund issuance. We do want to, but ultimately it's still about our users' adoption. We can't make that decision for them. And what users are looking for are, fee structure, security, brand name, of course, but also how easy the access is and how fast can I redeem that fund, things like that.
It's beyond the access, it's also access within the exchanges. So we launched Hashnote, which is tokenized repos, so it's 4.3%. We're launching Athena, we're looking at Biddle. These funds typically have a minimum level of, let's say, 10, 20 million to enter. If we as exchanges offer it, we can take away that hurdle. So they can't move the assets out of Deribit in our case, but within Deribit you can buy these funds. You can generate 4 or 5% in returns. You can use those funds as collateral for your Bitcoin trading. So I do think it's a good use case. And I think over time, a year from now, I think so there's like 10, 15 of them challenging each other now. It's a big race, who's going to be the bigger provider of yield-bearing collateral, but some of them will be very big, I suppose, and will be used by multiple platforms as the perhaps preferred collateral over USDT or USDC.
So it's more about getting yield from a tokenized structured product versus just the rails to be able to move tokenized assets. The real value to the end user is yield without a huge amount of risk. We're almost out of time here, but my last question for you all, we'll have to do a quick answer, is what is the gateway drug for TradFi to move forward in crypto? You could imagine, most people's entry into crypto is you start on a fiat exchange, a centralized exchange, and then you get stablecoin, and then you go into DeFi, and maybe you get lost there and you never come out. Is that going to be the same for TradFi? Is it going to be TradFi to using CeFi and then DeFi, or do they leapfrog CeFi and go straight to to using DeFi?
Quick answer, I think they will skip DeFi and wouldn't touch it simply because they don't know who they're trading with. So they will go for highly regulated CeFi.
Do you have a different answer?
Agree. I think DeFi is a bit hard for many institutional clients for risk, custodian their wallet, and make sense of the product. And I would think, yes, they will work with lots of centralized exchanges and CeFi providers because we do have the largest liquidity out there.
I think on the platform basis, it's just going to be CeFi because of the necessary evil to be regulatory compliant. And I think from the business case here, it's going to be stablecoin. I just see a world like every bank, every financial institution has their own stablecoin, and you're going to have different kind of yield, like basically a payment instrument, which is at the same time something like a CDS in it, charging for different kind of credit or the counterparty risk.
Excellent. Well, thank you all, and thanks to the audience for coming today. Learned a lot.
Thank you.
Thank you.
Good night, everyone. Our next Fireside Chat is hosted by Tim Copeland. His guest is Keone from Monad.
Hello. Hello, my name is Tim Copeland, and I'm the editor-in-chief of the blog. I'm here with Keone, the co-founder and CEO of Monad Labs. How are we doing?
Hey, doing well. Great to be here.
Awesome. So, for those maybe new here, what is Monad?
Monad is a new EVM Layer 1. It's a technology project that's introducing several new architectural improvements that stack on top of each other to scale the EVM. And that includes optimistic parallel execution, a completely new database called MonadDB, a completely new high-performance consensus mechanism called MonadBFT, and lastly, asynchronous execution. These are a bunch of different improvements that all stack on top of each other to deliver over 10K TPS of throughput while preserving backward compatibility with EVM.
Okay, you talk about the high throughput. How is it possible to be that fast and have that sort of throughput while maintaining decentralization?
Yeah, that's a great point. Decentralization is really key to, well, first of all, it's the reason why we're all here. And our view on the Monad team is that technology, the entire purpose of technology is to get more performance while preserving that same high degree of decentralization. And that means having very reasonable hardware requirements for nodes. That means having full geographic decentralization, so nodes all around the world, rather than packing them all in one region. And it means, frankly, having full decentralized block production as well. That you need better technology or new technology in order to enable that. So in particular, all of these improvements that I mentioned that we're pioneering at Monad are software improvements rather than throwing hardware at things. And with better software improvements, we can get more performance out of the same amount of hardware.
Okay, so talking about the software improvements, how is Monad different to what else is out there?
Well, as I mentioned before, there's sort of 4 major improvements, but maybe even to back up a little bit, prior to Monad, I worked in the high-frequency trading space for about 10 years. I'm 35 years old, so I've been working for about 15 years. And those first 10 years were spent building really performant trading systems where literally every microsecond matters, or even every nanosecond matters. We were taking packets in and turning trading decisions around in less than a microsecond, which is a millionth of a second. And our team is really applying that level of optimization to all parts of the stack of the EVM, and that is required addressing all the different bottlenecks that we could see when we benchmark existing Ethereum clients. So the first major bottleneck that we observed really is in state access. Like every transaction ultimately has a dependency on the existing state. For example, a Uniswap swap. I think people might be familiar with the Uniswap X times Y equals K formula. And so what it means is that when you make a swap on Uniswap, you put in some more tokens on one side, so you increase X, and then you get some tokens out on the other side, so you decrease Y. And clearly, in order to execute that transaction, the the VM needs to go look up the values of x and y, which means pulling them from disk, and then it needs to do a little bit of math, and then write new values of x and y back to the disk. So just from that simple example, you can see that almost every transaction is going to have a dependency on state, and state itself lives on an SSD, and the problem is to get the absolute most performance out of that SSD. And so, to talk about one specific improvement that we've done at Monad, it's making the usage of that SSD much more performant, utilizing the full bandwidth of the SSD by building a completely new database from scratch that stores Ethereum Merkle tree data natively.
Okay, so why do we need a blockchain like Monad?
I like to talk about things in terms of everything in daily terms. I think that a lot of times in crypto we talk about transactions per second, but it actually becomes kind of hard to reason about the scale of usage among non-crypto apps. So if you think about an app that's trying to be #1 of the iOS App Store, that means getting hundreds of thousands or millions of users per day. Millions of daily active users. And so, for example, an app that has 1 million DAUs with 10 transactions per user per day would be 10 million transactions per day. But right now, Ethereum is only 1 million transactions per day. So that one app on its own, with pretty reasonable assumptions about number of users and the amount of transactions per user per day, is still already 10x the throughput of Ethereum. So we need much more throughput in order to support any app at a reasonable scale of adoption. And so in particular, Monad is supporting 1 billion transactions per day. That's what 10K TPS translates to in terms of transactions per day. And we think that this will, through the combination of high throughput and then low cost per transaction, we could support apps that scale to many, many, many more users.
Okay, and how is the testnet going at present?
Testnet is going great. Testnet is our way of benchmarking the system by replaying the history of Ethereum without any changes, like the literal exact transactions that have happened over Ethereum history in a realistic setting with hundreds of nodes. And through that, we could see over 10K TPS of throughput. Right now, the work that's being done is just additional integration work to integrate with third-party systems that integrate with the blockchain, as well as further load testing and looking for corner cases to make sure that there's no outages at all.
The announcement of the testnet was quite interesting, because basically, Kobe got access. He thought it was a devnet. He made a joke tweet calling it a testnet. We got confirmation it was a testnet, wrote an article. He then thought we wrote a nonsense article based on his tweet. Was your plan to sort of let it sort of announce itself, or did you plan to make more of an announcement for the testnet?
No, our plan is to have a more public announcement about the testnet at a slightly later point in time. With that said, as you can imagine, there's a lot of testing that's going on right now, and some of that includes testing from people that are outside of our team as well, or outside of our immediate team. And yeah, I think that it's a reflection of the amount of excitement about the project and very high amount of eagerness to test things out. So we saw it as a while not something that was our plan, a good validation of just the amount of excitement that's out there.
Okay, well, sorry for front-running your news. When do you anticipate mainnet will go live?
I anticipate mainnet sometime in early 2025. There's still a lot of testing going on, so things can change, but our team is hard at work, and there's a huge amount of momentum and work going on.
Okay, and what speeds have you achieved on the testnet?
We've achieved over 10,000 transactions per second of throughput while replaying recent Ethereum blocks, while replaying real Ethereum transactions from history.
Okay, and the Monad community is one of the most passionate communities I've seen in crypto, particularly before it has launched. What's your secret sauce to that sort of success?
Yeah, I'm just super grateful for the support of the community. I think the Monad community is truly unique in, I mean, every crypto founder will say that the community of the project that they're a part of is unique. And of course that's true in some tautological way. But what I really believe is that the Monad community is setting new standards for degree of growth of the individual members, opportunities for folks to make the leap into Web3 full-time. So our team has helped to place over 30 community members in projects in the Monad ecosystem already, and I expect that number to grow substantially over time. Additionally, people have just made a lot of friends and had a lot of fun, and really shown the power of community in creating opportunities for people that have been following along with crypto Twitter for a long time, and enjoying the narratives, but never being the main character. And I think the thing that I would say for any crypto founders or any crypto projects really is it's extremely important to allow the community to be the main character, because ultimately community is why crypto has been so successful.
Mm. And how does Monad differentiate itself from other layer ones that are out there?
I think that we've had the benefit of hindsight in observing how other projects have launched and try to take the best of everything that we see, as well as just reasoning about, sort of from first principles about what we believe is right. In particular, with respect to community building, our belief is always that being in a community should not feel like work. It should be fun. As the team, we should be working to make being part of the community an enjoyable experience, a beneficial experience for the members. And I think we also got lucky a little bit, because when we started the community, December 2022, it was kind of the bottom of the bear market, and a lot of people were, looking for, friends to commiserate with during tough times. But yeah, I think it's just grown very consistently. I don't want to say exponentially, because that's not realistic in most domains. But yes, it's been very consistent and incredible contributions from so many members that have made the community what it is today.
Okay, and how did you think the Hyperliquid airdrop went?
What was that?
The Hyperliquid airdrop, how do you think it went?
Oh yeah, the Hyperliquid airdrop was definitely super exciting. It's really a lot of Monad community members received airdrops during that event, and I'm super happy for them, super happy for everyone who got an airdrop. I think it just shows the importance of allowing the entire crypto community to be a stakeholder in a project. I think it's showing the fact that crypto is nothing without its community, and therefore any project that could do a good job of aligning the community with the success of the project is really sailing with the wind at its back. So yeah, for our team, we're really impressed by the execution of the Hyperliquid team, and I guess just excited about the future of crypto and what's to come. Excited for the launch of the Monad mainnet, and then also excited for prospects for so many projects that are building on Monad that get more energy from the success of this one airdrop, and probably will be able to get more VC interest, more interest from members of the community, just from the momentum that happens from this one Canon event.
Sure. Okay, so with Ethereum, we saw an explosion of NFTs and DeFi. Solana, we saw, meme coin crazy, and also NFTs were quite popular there. What do you think will be popular on Monad?
Monad is a multi-purpose chain. Monad is fully EVM compatible, so anyone who's built anything for the EVM tooling or apps where infrastructure can interface with Monad without any changes. I think that's important to keep in mind because this common standard and support for that common standard is really what helps carry our industry forward, because it means that developers don't have a vendor lock-in effect. They can build without worrying about the substrate on which they're building and just go wherever is the best environment. So I think that, as time goes on, there can be different flavors of the month. I remember about maybe 8 months or so, I think, inscriptions were really popular. So every L1 was kind of getting DDoSed by inscriptions. And, we've had periods of time where NFTs were super popular. I know people talk about Solana and meme coins right now, but in 2021, the thing that really kicked off, a lot of the interest in Solana was the NFT summer, Solana summer in 21. So it doesn't have to be one specific category. I think that it's more about being reliable, fast, and cheap, which is enabled by technology ultimately. And when you combine that with full compatibility, it makes Monad a great environment for any builder that is trying something ambitious and experimental to build an environment where it can really take off the way that meme coins are currently taking off on Solana.
Sure. What's been the biggest challenge building Monad?
I think the biggest challenge is tackling many different fronts at the same time. We're building completely new technology from scratch. Monad is not a fork of any project. Everything is completely new. And the reason why our team chose to do that is because we could see that at every layer of the stack, there were a ton of optimizations. It was just better to build something from the ground up. And ultimately, that gives more back to the space because now we have completely new implementations. Like we have a completely new database that's really performant for storing Merkleized state. And for those that don't know, on almost every blockchain, state is stored in a Merkle tree, and that Merkle tree, which has a Merkle root at the top of it, is what enables that blockchain to really easily interact with all other parts of the world. It's a commitment to all of the state. Bridges rely on it. Exchanges rely on it. Like there's many things that rely on having this data in this state form. And we've built this database, just to focus on this one example, we built this database that's really performant for that particular storage type, which then is a useful primitive throughout the ecosystem. And same with several other improvements that we've done. For example, optimistic parallel execution. This is a technique for allowing the EVM to be a lot more performant by allowing the system to use many cores and many threads and do a lot of work in parallel while still doing the right amount of bookkeeping so that the end result of doing a bunch of work in parallel still produces that same end result. And this is another useful primitive that we built from the ground up. And we think that in the long term, investing in all of these things, building them from scratch, going the hard road is better for the space overall and also yields better performance improvements on day one. So I would say that that's probably the hardest thing, is juggling many different technology improvements while also juggling the growth of a community and the growth of an ecosystem and helping projects to raise funds, teaching or helping to teach early stage entrepreneurs how to have that like Y Combinator sort of experience and mentality with respect to building their startups, juggling many of these things at the same time.
Cool. And what's your plan for adoption over the next 5 years?
I think 5 years from now, what I hope is that there's a number of successful businesses that are building or that exist that are really successful and profitable, that are utilizing the best parts of blockchains under the hood. So that means utilizing the built-in payment system that we have through a blockchain. Like blockchains are really powerful because they're enabling full decentralized state with a baked-in account system, decentralized identity, a payment system, composability from many applications all sharing that same shared global state. I think that's what will be success. What I would consider success, say 5 years from now. So adoption for me means helping to support businesses that ultimately can grow into behemoths that have really successful business models and that are using decentralized tech under the hood.
Okay. Do you think there could be a Monad ETF in the next few years?
I hope so. It's too early to say, but I do think that the introduction of efficient ETFs that can hold spot as opposed to going through some, in the past, the ETFs used to have to hold futures and deal with the monthly roll and a lot of inefficiencies from that. So I think there's been really promising developments in the ETF space over the past, 1.5 years.
Sure. And Monad, like I said earlier, is one of the most hyped up projects pre-launch. How do you plan to meet those high expectations?
Yeah, I think that there's, it's a privilege to be a highly anticipated project. We're not afraid of the high expectations. I think sometimes people tell me like, oh no, you should try to be stealthy and just pop up like a submarine to surprise people. And they're not wrong that there's certain psychological benefits of exceeding low expectations, but that's just not the world that we live in. Like the market is efficient and there are a lot of people that are sharing the good word about Monad and sharing these different technology improvements that we've been working on. Also, we've seen more and more projects start to pivot their roadmap and adopt some elements of what we're working on, which we think is great. That probably contributes to the hype as well. But yeah, we don't mind that. If anything, it's really validation. But no matter what, our job is to go out and perform, as they say in sports, leave everything out on the field. And that's what we're doing, and that's what we're going to keep doing.
How will Trump's victory change the prospects for projects building in the Monad ecosystem?
Yeah, I'm excited because in general, there's been a lot of positive news flow and positive improvements that improve the outlook for early stage crypto projects. I think the single biggest constraint that we have in this space right now is we need more ambitious builders who can get more support and who are less inhibited by random distractions, such as the unclear regulatory environment. So I think it's a great development that we have a new regime coming in the US that seems to be much more friendly to crypto. I do want to knock on wood every now and then, like you said about expectations. I don't want to set them too high. But I think it's great for early stage builders to more easily be able to raise capital, acknowledging that it's still very hard to raise money, but easier for them to raise money, easier for them to get some momentum. And I'll be doing everything that I can on my side to help support them as well. Test. Oh no.
Don't worry, some guys.
There you go.
Okay, we're back.
We're so back.
We're so back. What are you most excited for next year in crypto, beyond the launch of Monad?
Well, I'm excited for the growth of apps that get used more and more in daily life. I'm excited about seeing more of a mobile experience on crypto. I think that it is crazy that, for many years, like the default thing to do when you want to interact with the blockchain is to open your laptop. Because in real life, like most people use their phone mostly to do non-work stuff. When they're like out and about or on the subway or lying in bed, like they're going to be using their phone. So I think that there's some great advances in the mobile space. Privy, dynamic turnkey are all different efforts at different layers of the wallet stack that are making it easier and easier to build a mobile app. I think that's really, really important to growth of apps. yeah, I think that that's kind of one thing, and then also account abstraction and more powerful native EOAs or native wallets that have different sign-in mechanisms, such as using passkey, are extremely important to making it easier for people to use apps on their phone.
Sure. And you're doing $1 million pitch competition at present. How much demand is there for building on Monad?
Yeah, there's a ton of early stage builders that I'm really excited about. There's a ton of momentum. You were alluding to the pitch competition, which is called Monad Madness. We've had 2 so far, one in New York and one in Bangkok. Each has attracted over 500 people in attendance in person and about 1,000 or so people tuning in on the live stream. But it's our way of trying to create a stage for early stage builders to get in front of some of the best investors in the space and compete for prizes. We gave out about $1 million of prizes over the course of these 2 events. And also, projects can get a ton of interest from investors and successfully raise their round of funding. So this is one of several. I think maybe to speak more generally, I think the things that early stage builders need, they need capital, they need a cohort of builders who are kind of in the same stage to learn from, and kind of the Y Combinator feeling of being in that room with those other builders, all with ambition and all with a lot of learning and growth ahead. And then lastly, they need a supportive community. Even the support of 1 or 2 really committed community members makes a huge difference, that moral support for any builder in the space. So for the Monad team, we have initiatives in place that are helping on each of those fronts to help catalyze more growth in the app space.
I've lost my, there we go. What role do you think meme coins play in the current crypto cycle?
I think I have a very, I think it's complicated. I think on the one hand, they do bring in some new users and the excitement. People love trading, they love volatility. Meme coins are more volatile than anything else in the space, so that's attractive. I do think that the launch patterns are extremely important. It's important that the meme coins can get real distribution from many people instead of all getting grabbed by a centralized actor. There was the launch of, I think, Haley Welch or Hawktua girl, her meme coin like last night or yesterday, that where the supply all got sniped by some third-party centralized actor, caused a big actual extraction on the ecosystem. So it's really important that the meme coins are able to be fairly launched, like truly fairly launched. People talk about fair launch all the time, but you know, it's in many cases it gets subverted. So I think that is extremely important, and in order for meme coins to have staying power as well, and to hold their value as a quote-unquote store of value, it's really important that they have real distribution and real community ownership.
Okay, we've seen AI become very popular in crypto recently. What role do you think AI will have once Monad launches?
I think that crypto gives, as I said, baked-in payment rails. It gives a lot of transparency, a lot of data on chain, and a lot of those themes kind of work well with the idea of AI agents. If you have an AI agent that is able to pay for things easily using the blockchain and interact with other applications by making smart contract calls, and maybe interact with the real world through things like Twitter and so on, then there's like all these building blocks that could turn into something that's pretty powerful. I think at the end of the day, it should really be about utility for like solving problems for real people. So when you think about some of the most successful AI projects, it's ChatGPT, it's Devin, which is like a AI that can do basic like a junior programmer, can do basic tasks for you. It's things like that. So I think that if we start from solving problems, but then we have these like tools that are in place, such as built-in payments, ability to interact with smart contracts, data that's on chain, then I think there's a great possibility for a lot of value creation.
Amazing, thank you. That's all we have time for today. I want to say a big thank you to Keone for joining us, and enjoy the rest of the conference.
Cheers, Tim.
Time now for our next keynote. Please welcome to the stage, Evgeny Gaevoy.
Hello, everyone. Yeah, I'm in a bit of a tight spot because I prepared this presentation back 6 months ago when we were still not really in bull markets. Yeah, we were all discussing low float, high NAV tokens, and I don't know, Mr. Gensler was metaphorically at the gates of Vienna. No offense to Turkish people in the audience. But yeah, now we are in a pretty different space. Like we are clearly in a bull market. The vibes definitely change. We have Bitcoin. We had Bitcoin above 100K. Yesterday, well, I'm pretty sure various sponsors of this conference are also pretty happy with their tokens performance as well lately. But it also makes my topic, basically transparency, a really hard one to pull off because people don't care as much about transparency during the bull market. Everyone is happy, everything goes up, and it makes, well, for all the talks that, I don't know, crime is legal, which is very stupid, for all the talk about that, it also makes, like, nobody really cares about transparency. Nobody really cares about people not even doing illegal or unethical things. People don't care about things happening that they don't know about because, well, tokens go up, so it's easy to bypass that. And the thing is, yeah, we might have friendly SEC or CFTC people in administration. We might have friendly people all over the world cheering for Bitcoin and crypto. But it might be the last point where we can police ourselves, where we can impose some rules on ourselves before the adults come and do it for us. But yeah, let me start with some general statements. First of all, I think crypto market structure is a joke. Like if you look at all the major actors, whether it's exchanges, protocols, market makers, it's like, it's a joke. And the main thing about it is, I don't know, exchanges have no clear rules about who gets to do what and what's allowed, what's not allowed. Protocols are hiding behind this like double opco foundation saying, and don't let any information flow out of this. And market making is still, unfortunately, synonymous with market manipulation, which is, yeah, which is how like a lot of people are still thinking about it. And we basically seceded in a way from TradFi, but we chose to not copy all the like really important things about fair market conduct, about transparent way of dealing. And it's kind of like sad that we did it. And there is a general pretense that we don't do those things in a transparent way because it will make us somehow a better target for regulators. But I think we all know it's a kind of a bullshit argument. And that's what I'm going to talk today about. I'm going to cover those three different actors in the crypto ecosystem. So I'm going to cover protocols, I'm going to cover exchanges, I'm going to cover market makers, basically what they do and what they should be doing more transparently from my perspective. I'm going to take one case of protocols that wanted to be transparent, but yeah, pretty much got bullied afterwards, and now nobody wants to do it again. And I'm going to try to offer some solutions at the very end. So let's start with protocols. So with protocols, there are kind of like, well, the one main thing that happens with protocols is TGE, when the tokens actually goes live on various exchanges, decentralized and centralized. So I want to talk about what happens with centralized exchanges. And a good comparison to make is to compare TGEs with IPOs, and the comparison is not a favorable one, in my opinion. Like, okay, if you start with positive things, yes, there is a much better access compared to IPOs. IPOs are only open for US people and maybe some more sophisticated investors in the West, but they're not open for a random guy in Argentina, while TGEs are open theoretically for everyone with a centralized exchange account, or even sometimes without, if it's like if some of the distribution happens on in DeFi. But that's where the good news are pretty much finished, because if you look at the bad side of things, and it's primarily around the price discovery of things. So if you look at price discovery during the token launches, most of the graphs are, I don't know if like, well, some of you might follow some of the meme coins, but yeah, most of the graphs look like a Hawk2A token. And that's because there is no opening auctions, there is no concentrated effort to make it more orderly, basically. But that's not the worst from my perspective. The most ugly part from my perspective is just a very massive information imbalance between insiders from those token protocols and everyone else, like normal investors. And it basically concerns nobody knowing, okay, for example, like everyone knows venture funds invested into those protocols before they got listed, but nobody knows, okay, at what prices and who and, I don't know, which wallets those venture funds have, for example. Everyone knows a lot of protocols pay exchange fees, exchange listing fees, but again, like how much and whether it's significant or not, nobody knows. Everyone knows that protocols employ market makers to do liquidity provision in their tokens, and everyone knows that very often the call option structures are employed in that regard, but again, nobody knows the details of those call options, like nobody knows the strike prices. And basically this ugly comparison like makes it really, really hard for anyone to participate in this. So let's say for TGs, like what do you have? You usually have this amazing pie chart. Some of them are more creative than others. And on the other hand, you have white papers. And a lot of those white papers have a lot of, well, interesting information, but most of this information is pretty irrelevant. But what if you start looking at IPOs? So, and what I did, I looked at prospectus for Coinbase, because that was a fun and interesting read. And that's what you get. Like, yeah, don't try to read all of it, but it's basically a trove of data that you get as an investor during IPO, after IPO. Yeah, like, as you can see, not even Adam Cochrane could make a Twitter thread out of it. It's just like really a lot of information. And information like this, for example, yeah, did you guys know that Brian Armstrong was paid $1 million a year in 2020 before the IPO? Early investors in Coinbase actually knew that. Did you know how the distribution works? Yeah, again, don't try to read it, like you can read it all online, but it really details who, how, when, and where basically priced Coinbase equity, how the opening auction on NASDAQ works, like how all the stuff really works in reality, and basically as an investor you could make a decision how to, well, to invest or not. And finally, it's all kind of like, okay, there are no pie charts, but there is a pretty detailed table of who owned Coinbase prior to IPO, and it even details some of the internal transactions prior to IPO as well. And yeah, if you can read that, but basically it says that, yeah, Andreessen kept accumulating, and Ribbit Capital kind of had a paper hands in this particular case. And the question, yeah, who does it better, but maybe even a better question, like, as an investor, which of those models would you prefer? Do you want to see like a pie chart and a random white paper that doesn't tell you anything about the, like, how token pricing can work, or do you actually want to get as much information as possible to make a decision to buy, hold, or sell a token? And while we are on the protocol side of things, we should also talk about insider transactions. And who is I don't think there is a better person equipped to talk about it than this guy, who we only have 1 month left in the office for this. And he actually knows a lot of things about inside transactions because, well, outside of crypto, that's what SEC is known for. SEC is very well known for prosecuting insider trading. They have this rule, 10b-5, that basically was implemented quite similarly to how we tested a long time ago in 1942, and it was implemented in response to some guy flooding his own stock and buying it at a cheap. And back then, SEC was primarily focused on preventing fraud and protecting investors. I think we all kind of wish they stick with that, but that's basically what the inside, that's where the inside information side of things comes from. And they became super good at prosecuting it. SEC is, well, outside of crypto, SEC is super well known for being very good at fighting insider trading. And to a degree that you really don't, you don't want to do insider trading first of all, and that's definitely a financial advice. But you also don't even want there to be a pretense of you maybe doing, well, somebody having a perception of you doing inside trading, and basically how people are basically making sure they don't create this perception. SEC created some tools for them, and basically it's either trading during the permitted windows, so let's say during the first couple of weeks after the quarterly earnings, which is not necessarily super applicable for us. But the other one is a 10b-5 plan, which is basically telling your broker, okay, I'm going to sell 100 shares of Coinbase every day for the next 30 days, and I cannot cancel it without drawing eye of SEC. And no matter price, like, I don't know, if price falls, I'm still sell. If price goes up, I still sell. And that basically allows people to sell in a compliant way, but it also allows insiders to avoid any visibility of conflict. And if you ask yourself, like, how many token protocols make it public outside maybe of Vitalik Stok's wallet, like, the answer is none. Like, nobody talks about it. Nobody says, I don't know, just to put Hayden on the spot, like Hayden from Uniswap doesn't say, okay, I'm going to sell 1 million Uni tokens next week. He just, well, maybe does, maybe doesn't, but nobody knows about it. And I think it's kind of sad. So let's switch to exchanges. I promise that's the only AI-generated image I have. I just couldn't be, I didn't want to put any exchanges on the spot just yet. I saved it for the next slide. So let's talk about exchange listings first. So let's talk about, well, Binance, Coinbase don't charge exchange fees, listing fees, like they don't get paid for it directly, but everyone knows that different tokens at some point paid money to Binance, for example, and those, well, paid tokens to Binance, and those tokens went to Launchpool. Some protocols paid tokens to Coinbase custody, and those tokens went as rewards to Coinbase customers. Like, it's all happening, and I want to make it really clear that there is nothing inherently wrong with it. Exchanges have total rights to charge whatever they want. I think what's wrong about it is nobody knows about it. Nobody knows how many tokens protocols pay to exchanges. And I think protocols, first of all, protocols should be very forthcoming about how much they pay, because you as an investor deserve to know that, I don't know, 5% of circulating supply of this meme coin now is in Binance's hands, and they can airdrop it on whoever they want, basically. And similarly, opening price process is also very tight. Like, there is no opening auction. The prices go up like crazy first minutes after the listing. It's not very orderly, and it actually would make sense to implement opening auction, but again, like, most of the exchanges don't care. And finally, like, my probably favorite personal topic is market conduct. Everyone knows that exchanges, like, there is a lot of shady stuff going on in exchanges. I actually know that a lot of bad trading firms, bad individuals get banned from exchanges all the time. I know that a lot of good exchanges self-police themselves. But the problem is we never see it. Like, everyone knows pumps and dumps happen on Binance, for example, or other exchanges. But we never see Binance announce on the blog, or we banned firm XYZ from Binance because they were doing all this stuff. Like, it just doesn't happen. And basically, it creates a perception that, well, in the best case, it creates a perception that, okay, exchanges just don't want to bother with regulators. In the worst case, it basically creates a perception maybe exchanges are complicit in that, and maybe they actually are on this, and they also profit from those pumps and dumps, which is just, yeah, not great. But the bottom line, yeah, even if they do police, nobody knows that they do. And finally, the market makers. So back in 2018, I wrote this blog post about different practices, and it's super sad to see that it's still relevant, like almost 7 years after I wrote it, because, yeah, bad things, like there are market makers who are still doing really bad things out there. And what I want to focus on today is the call option model. As some of you might be aware, that's kind of like a prevalent model currently in the markets. And the way it works is if protocol engages a market maker to provide liquidity in their tokens on centralized exchanges or elsewhere, they basically give them a token loan. And this token loan effectively has an implied call option embedded into it. So after, let's say, 12 months, market maker has an option to either return the token loan or return the agreed amount of dollars or stable coins at the pre-agreed strike price. And basically what it implies is if the token price trades above the strike price, market makers has incentive to sell it. And if the token price trades below it, market makers generally don't sell because it doesn't make financial sense. And also worth mentioning that generally there is a clause where token protocol can cancel this agreement, and so basically in which case the call option would be void. And the key things about this is it is true that market makers have incentive to sell above certain level, and they're generally the only ones with inventory. But just like with exchange listings, there is nothing inherently wrong about this mechanism. There is nothing wrong about market makers like doing those kind of agreements with protocols. It's a pretty good tool for protocols to effectively get, well, basically sell their tokens from Treasury, for example, at the prices that they seem fine. And it gives a pretty good exposure to market-making firms, obviously, to the upside. And the only problem with this is nobody knows about those details. Nobody knows about the details of those agreements. And that's what my kind of like case is about, and that's about WorldCoin. To remind you guys, WorldCoin, when it did TG quite some time ago, they basically released, they did the whole thing. They released the pie chart, they released the white paper. But in the white paper, outside of, well, knowing like how great those orbs are for scanning your eyes, it was also detailing all the market-making details as well about how the strike prices work exactly. And people post-TG were not super happy about it. And yeah, I put those two guys on the spot because I'm really happy reply guying to them every now and then because they're hilariously wrong every now and then. But yeah, they got all kinds of accusations that the price was set not in a great way, and also that those call options were basically incentivizing market makers to do wash trading and all kinds of things, which was all wrong. And then Alex, CEO of WorldCoin, went on a blog podcast, but as you can see from Frank's facial expression, he was also not super impressed with this explanation. And I think if you cannot even convince Frank, then you really lost the plot. So talking about the plots, this is the WorldCoin price. You can see like there is a bit of a bump during the like AI craze in May, but yeah, generally it's price and wise. If you think about where it was priced initially, like this price of whatever $3 is pretty. Seems like it was hovering pretty much over there. But the general idea is if you know there is this call option. If you know that the market makers have this possibility and this incentive to sell above certain level, kind of really obvious answer for you is, just don't buy above $2.8 if it's a strike price. Just wait and buy either below or after the market makers run out of inventory or after the market making agreement is over. Like it's very easy. So it's more of a skill issue, I think, than anything else. And basically, what happens in what happened in this case is WorldCoin was very transparent about things. They got a lot of shit for it from everyone, pretty much. And if you're a protocol that wants to do something similar, you probably will think twice about it because you know it will just get shit about it from everyone. And as a result, nobody will, well, basically normal people will get way less information as they would have otherwise. And there are many such cases. Everyone is complaining about Ethereum Foundation selling, but nobody complains about other foundations selling like much more discreetly and masking it as investments and what's not, which is also kind of not ideal, I would say, from transparency point of view. So I don't have that much time left, but I do have some recipes how to solve things, I guess. I think, and it basically has to do primarily with social norms. I think we should really look and think about how we can normalize basically people disclosing stuff, about how we can normalize protocols disclosing all kind of things about like what levels venture investors bought, which strike prices the market makers are using, how much they send to exchanges. I think it would be really great if protocols also basically tell about their employees and force them to implement those 10b5 kind of plans, so that we know that there is at least some protection on the inside trading side of things. And I think on the exchanges side, I would really love for them to disclose more about bad actors. I would really like, well, exchanges, but also all of us really to name and shame a lot more about what's out there, because if we don't do it ourselves, if exchanges don't do it, if market makers don't do it, like somebody will come and do it for us ultimately. Like at some point there will be not a nice friendly person in SEC again, and they will go after the whole industry and will force those rules upon us. And finally, it's also an opportunity for somebody to make a business out of it. I think it's an opportunity to make a rating business. I think it's an opportunity to create some kind of transparency index, some kind of transparency offering. Maybe it's an opportunity for Block as well to do this kind of offering. And it would be a great tool for, well, protocols to demonstrate that they're open. It will be a great additional support for exchanges to decide on what and how they want to list. And it would be a great thing for pretty much every investor as well, because then you have a lot more to work with on when it comes to transparency. And basically to summarize, I would say it's really time for all of us to grow up. Well, I represent part of the problem. I'm the market maker, but the challenge is it takes two to tango. It takes two parties to disclose things. So all I can say on my side, I can really commit to basically make sure that we disclose, well, strike prices as long as protocols are also disclosing them. Like I can make this commitment really easily on my side. But I think we should really strive to be more transparent as an industry. Thank you.
R.T. Watson hosts our next Fireside Chat with David Schwartz from Ripple.
Hello, everybody. Thank you, David, for joining us. I think most people know who David is, and obviously Ripple, but I thought we might start just you telling us a little bit about how you got into crypto, sort of early days of Ripple, for those of us that don't know.
Yeah, it was about early 2011, and I was kind of looking for something new to do, some kind of new challenge. The company that I'd been working for had kind of run into some interesting challenges of its own that not the kind of problems that I could help them with. And I was looking for something to do, and I found Bitcoin. And I immediately just, I drank the Kool-Aid like hard and quick. I was very impressed with the idea of a decentralized currency. I come from a libertarian background. I'd watched the internet revolution kind of democratize the flow of information. And the idea of a technology that could sort of democratize the flow of money seemed really interesting to me. And so I started working on Bitcoin until, Jed McCaleb, the guy who first had the idea that maybe proof of work wasn't Bitcoin's secret sauce, hired me to build what eventually became the XRP ledger and Ripple.
Okay. And this particular era, this cycle, I know a lot of people throw that out in crypto, thinking about it in terms of technological advancements, innovations, different areas, is there anything you can compare it to, this current era?
You know, there's a combination of factors that are kind of unique in this cycle. I think one of them is there's a level of excitement about like broad scale and like mass adoption that I think we've had before, but it wasn't very rationally based on anything. It was just the sort of exuberance that I think you can connect that to more practical terms now. Like obstacles to institutional adoption are going down, you know, one after the other. I think we're starting to see the growth of, you know, mass scale DeFi. I think we just have a couple of little challenges left before we can really, you know, deliver on the promises that the technology's been making.
And what's happening now with crypto and blockchain, is that charting us in a trajectory that's in line with sort of those early libertarian sort of utopian ideals that guided the early construction of the internet?
I hope so. I think so. I'm a little concerned because, you know, we watched the internet sort of democratize the flow of information, and then over the past couple of years, we've seen like sort of new gatekeepers emerge. I think the technology is sort of fundamentally sort of liberating pro-democracy and pro-freedom, but I don't think that we can just we can sort of sit back and say we don't have to worry about you know, anything happening because it's inherently pro-liberating. One of the things that I've been pretty steadfast in saying is like, I'm fine with CBDCs as long as they compete on a level playing field. If you use a CBDC because it's better than your other options, that's great. And everything else will have to compete. You know, everything sets the floor for everything else. Like a lot of people come to crypto through centralized exchanges, and a lot of people, you know, you've heard not your keys, not your crypto. They think centralized exchanges are evil, and I get that. But also, like for people who use them, they're their best ramp. And it's on us to build better ones. Like if you don't like centralized exchanges, then build something better. But it's crazy to say to people, the thing that works best for you is bad and you shouldn't use it. What, should we use something worse? Like, I think that as long as we fight for level playing fields and fair, you know, as long as the governments aren't picking winners and losers or regulations aren't keeping some people out of the market, as long as we have a level playing field, you know, it almost doesn't matter that much to me who wins. You know, it would be great if it's the technologies that like personally enrich me and that I've put my own effort into, but like one of the best ways to lose is because someone is inspired by what you do, they do it better and they make the world a better place. Like I think I really do believe that like it's not about letting banks shave a couple of percentage points off. It's not about letting rich people like find a tax efficient way to monetize their gains in crypto, like while still having exposure to potential 10x gains. Like it's about people who don't have access to quality financial products. It's about people who are trapped, like typically when you make payments, like you're getting crappy exchange rates, particularly small retail payments. Like I think it was not the direct path I thought it was going to be 10 years ago. I think we've taken a long and meandering path, but I think like we have a more credible claim to being able to reach those kinds of places than we've ever had before, and I think that's inspiring.
Okay, and then if you think about XRP Ledger and Ripple, how does it connect to that vision and those aspirations that you're talking about?
Well, I think what we're aiming for there is like the XRP Ledger is a decentralized public good. It's a layer 1 blockchain that nobody owns or controls. It's had a built-in DEX since day one. It was the first DEX in early 2012. It was built for payments, and Ripple sort of committed to payments in 2014. And I think at the time we kind of thought that like the path to solving payments for cryptocurrency was like a straight line. Let's just go after payments and well, it turns out that in order to be successful in the payments business, you need a lot of other things. And so the straight path to payments hasn't worked. As many of you I'm sure know, there was a trend where there was adoption of cryptocurrency for payments, and it seemed like every day a new company was accepting Bitcoin or some other cryptocurrency for payments, and then that all went away. Like that completely just collapsed. And I think what we've learned is that like I still believe that cryptocurrencies work for payments. I still think we're going to get there one day, but I think the path is indirect. I think we're going to need things like DeFi, we're going to need institutional adoption, and in particular, we're going to need on-ramps and off-ramps that really work. So for me, if I hold funds on some blockchain, whether it's the XRP ledger or another one, and I have to exchange it for Bitcoin or ETH or XRP, and then I need to send it to an exchange, and then I need to issue a limit order on the exchange, and then they'll wire me the money and I have it in 3 days, that's fine for me, right? I also have a Robinhood account that I check every couple of weeks, or you know what I mean? Like, I have money that I don't need to have completely accessible. But that's a very small percentage of the global population. What we need to get to is people who might need their money because their car breaks down or might need their money to pay their grocery bill, and being able to have those kind of connections are critical to that kind of mass adoption. So I think we can't go direct. We can't take the straight line path. That doesn't work. We had to detour through ICOs, but you know, the market forex. We had meme coins, and yes, there real utility there? No. NFTs, some of it's real utility, a lot of it's not. But this is the path. You know, the internet got a lot of traction for things like porn, which like you have to grow. Again, it's not always the direct path to the great and wonderful thing. Sometimes the path is a little meandering and detoured. But like enterprise DeFi, I think is the next big thing, and things like lending. Which lending doesn't sound sexy because like most blockchain lending is someone who made a whole bunch of money in Bitcoin or Ethereum or XRP and wants a tax efficient way to spend that with, and they still want the exposure because they think it might 2x or 10x again. That's not super exciting for me, but if you think about it, who's lending them the money? That could be people who want collateralized loans at a decent interest rate. That could be people whose alternative might be to hold their local currency, which is inflating, you know, to nowhere. So I think that's kind of what's exciting to me, and I think that's what's going on. That's what's happening. Like the next phase is that institutional DeFi.
Okay, and a lot happened this year, specifically for you guys in XRP Ledger. What were some of the big highlights you think of this year?
Well, we launched an AMM. So for those of you who don't know how the XRP Ledger works, it's somewhere in between Bitcoin and Ethereum in terms of its functionality. So Bitcoin has a very limited set of functions. Like you couldn't easily implement a DEX on Bitcoin directly. Ethereum has an incredibly broad range of functions. You can do anything on Ethereum. The XRP Ledger, and there's advantages and disadvantages to both approaches. One of the big disadvantages to the blockchain that can do everything is that you never know what's happening. Like, how many of you have like approved a smart contract to access something on Ethereum or a similar blockchain, and you don't necessarily know what that smart contract is capable of doing because you can't personally audit it. So the XRP Ledger is in the middle. It's a fixed function blockchain. For example, it had a DEX since 2012, but that DEX is a core ledger function. There's one DEX. The XRP Ledger is a DEX. The XRP Ledger has NFT capability, but there's an NFT transactor. There's a like issue mint NFT transaction. There's a transfer NFT transaction. Your wallet understands what those transactions do, and so you never have to worry about agreeing to something you don't understand. But on the flip side, like, it addresses 80% of the use cases, but that other 20% where you need something custom that's not supported, there's no way to do it. Like, you can't write a smart contract to do it. The XRP Ledger doesn't support smart contracts. So what's happened in the past year is an expansion of functions specifically for DeFi and compliance. So for example, the decentralized ID function allows accounts to be tagged with a decentralized ID that can then be verified. It's extremely useful for small companies. Like, large companies can onboard customers, and they're always going to want to do their own compliance. And that's never a problem for them. But if you're a small company, doing your own compliance, having to store somebody else's passport or driver's license, it's a pure cost center for you, and it's pure risk, and your customers don't want to give you those credentials because they don't trust you, and they shouldn't. And so decentralized ID provides a way to prove that your identity can be determined should it be necessary without revealing it. An automated market maker. The XRP Ledger has primarily used an order book as its form of liquidity and cross-currency trading. There's advantages and disadvantages to an order book compared to an AMM, but having both of them sort of gives you not only the advantages of both, but like some new advantages that you wouldn't have. There's a lot of work on a lending protocol, which will initially just be traditional lending. So somebody will decide that somebody is creditworthy. They'll take on the responsibility of suing that person, like if they don't make the payments they're supposed to make. But a fixed function transactor will divide the payments among the people who've loaned the money. And so those types of DeFi capabilities are, that capability is rapidly growing.
And just recently, XRP became the third largest cryptocurrency by market shares, or market capitalization, sorry. So what led to that specifically?
It's really hard to know. I would like to think that people realized how awesome the technology was as a technologist, but the technology was awesome a month ago, and we were still singing its praises to everybody who would listen. So I have to think that a primary factor is the change in the regulatory environment in the United States. But that's just how that's. I would be stunned if that had nothing to do with it. But whether that's the direct cause, whether that's a trigger, and there were other factors, pent-up demand, I don't know.
When you think about the new administration, the incoming administration in the U.S., how do you think that will impact Ripple's sort of targets, goals, or the use of XRP Ledger moving forward?
I'm extremely optimistic, not just for Ripple and the XRP Ledger, but for the entire cryptocurrency space in the United States. I travel internationally. I go to conferences. I talk to a lot of people in the United States and a lot of small, medium-sized projects, and it's always depressing to me when I have to tell them, stay away from the United States. If you want to be able to sleep at night, don't launch. You'll see projects that they say, this project is not supported if you're in one of these 3 countries, and it's like North Korea, Libya, and the United States. That's a hell of a list to be on. I'm excited for that to become, for the regulation in the United States to become rational and people to know what the regulation is. From the point of view of Ripple and the XRP, Ripple's been in litigation with the SEC, so I'm hoping, I think that was probably going to end this year, next year regardless, but I'm hoping that a more rational administration will end some of that. Also, we've had to focus both our hiring and our customer acquisition and even some of our development overseas as a company. And that's not going to change. We're not going to dial that back. There's no reason to. That's been remarkably successful, and we still want to see that happen. But we've had to not do that in the United States. So I'm hoping that we'll be able to expand, particularly we have an institutional product called Ripple Payments. That's a licensed payment product in the United States. And one of the obstacles has been sort of soft pressure. I'm sure you guys have heard stories about companies that have said they wanted to do something that connected with crypto or blockchain, like institutions, and government entities have come back and said, hey, if you're doing that, then we're going to give you trouble in other places. So that's kind of been a headwind that we're hoping will go away, and I think that will benefit the entire space. I'm just looking forward to a more level playing field. The administration had said things about Bitcoin and said things about ETH, and then just kind of stopped talking, and it's just nobody knew what the rules were. And so I'm hoping that we'll get some kind of predictability. And we'll comply with the rules if we know what they are. The problem is when nobody can tell us what they are, and they're just exercising this sort of extra legal soft pressure where they just tell companies, hey, you probably shouldn't do this, without any, not that it's illegal, just that kind of pressure. And so I'm hoping that environment will get a lot better.
We spoke back in April about your upcoming stablecoin, and you guys, I think, were supposed to launch it by the end of this year. Where are you with the stablecoin, and when could we expect it to be launched?
I'm still hopeful that we'll launch by the end of the year. There's a lot of moving parts involved, and the big one is the stablecoin is launched through a New York State trust, and it's regulated by the New York State Department of Financial Services, and they are the gold standard regulator for a stablecoin. I don't think you can do better. They're going over all of our processes, and compliance and all of those things. And we just need to make sure that the annoying part for us is we're getting close to the holidays and we have partners that want to hit the ground running. And so if we launch the day before Christmas, a partner wants to monitor things on the launch day. So there's just all these moving parts to trying to, I'm very hopeful that it will happen this year. But unfortunately, once you start running into Christmas and then New Year's, people are gone. So I'm really looking forward to having the launch headaches behind us, but we will get there.
But it's all a term of, or a question of ironing out these technical wrinkles.
Yeah, it's a matter of, it's mainly two things. So one of them is making sure that partners can launch in a coordinated way and that they don't run into trouble. And then it's just having the confidence that every T has been crossed and I has been dotted, and that maybe we didn't forget to dot the lowercase j's, or, you know, it's one of those things where there's like a lot of weird moving parts. And I'll share a detail with you just because I think it's kind of funny. There's like a lot of weird failure scenarios that you might not think of. Like one failure scenario that like nobody had thought of until late in the process was like RLUSD launches, and there are people who like, I want to be one of the first people to have RLUSD, so I'll spend $3 for one RLUSD. And like, what if there's a shortage because the mint burn like might not be able to catch up, and the price might shoot up, and people might think that it's like an asset that they could speculate on, and they buy it like hoping, and obviously it's going to come back down from $3 to $1 as soon as like somebody mints enough of it. And like, is that a problem? Like, we just get all these weird situations, but we'll get it right.
Okay.
Don't buy it at $3 because you want to be one of the. If you want to be one of the first people to have it, you want to buy one, fine. But don't think, oh my God, it's now this asset that's going to go up 10x. Or it's not. It's going to come down to $1 unless something's very badly broken.
Okay. I hate to ask you to repeat yourself, but when we were backstage, we had a really interesting conversation. I asked, you know, everybody's thinking about celebrating sort of Bitcoin crossing 100,000, and I asked you sort of, do you think it's a narrative case or it's a fundamental case? And you gave me your argument of why or what could potentially be the fundamentals. Would you mind sharing that with the audience?
Yeah, I'm a person who genuinely believes that markets are almost always rational, and that as long as there's enough liquidity and there aren't barriers to access and there aren't like technical failures in the market, which there aren't in the Bitcoin market globally. Like globally, the Bitcoin market is liquid. If you have $1 billion, you can buy $1 billion worth of Bitcoin. If you hold $1 billion worth of Bitcoin, you can sell it. The market largely works. And I think that in an efficient market like that, prices have to be rational. If prices were too high, somebody would sell huge amounts. And I think what's happening is largely the market, the demand is speculative. And the speculation is that Bitcoin will take over the world. Like if you think Bitcoin will take over the world, then it's going to be worth, 100 times what it is now. And the question is, what's the probability that Bitcoin is, like if you look at the future value of Bitcoin in that scenario, it's how much is Bitcoin worth if it takes over the world times what's the probability that Bitcoin takes over the world. The first number, how much it could be worth, is enormous, trillions of dollars. The second number is tiny. It's a very small, nobody believes there's a 10%, maybe some people do, but the market doesn't believe there's a 10% chance Bitcoin will take over the world. If you thought there was a 10% chance Bitcoin would be $1 million next year, you wouldn't sell it for, you wouldn't have sold it for $70,000 a month ago. Maybe you'd sell it for $100,000 now. So if that probability of Bitcoin taking over the world changes just a little bit, that should drive the price significantly. And I think it's possible that when you see these massive movements in price, the sort of the market's perceived probability of an enormous success scenario has gone up.
Okay. One quick question before we go. When you look at next year, are there any specific things you think we'll see in the crypto market that maybe not a lot of people are talking about, or things that maybe are being overlooked that you specifically expect to happen?
I think a big one is going to be better connectivity of crypto markets to traditional markets, both through enterprises that will be offering the same products that they offered in TradFi. They'll offer them in DeFi just as a way of expanding new markets. I think we'll see better connectivity for people who need to be able to access their money, and so we'll see broader access to DeFi. It's probably, realistically, probably more than a year away. I'm hopeful that we'll see real-world asset tokenization, things like tokenized securities, and then I'm hoping that we'll see entire DeFi ecosystems built around them. So if I hold tokenized US Treasuries, can I use that as collateral? Can I issue a token that's backed by it? Like those types of rehypothecation scenarios, I think are going to, we see companies that are interested in launching tokens like on the XRP ledger or on blockchains, and they just want to save money. Like they're paying $1.50 per they're issuing billions of dollars, but their profit margin is razor thin. They're just interested in saving some money. But I think what they're going to find is that they are selling these products to entire new customer bases because of the ability to use it in DeFi. Look what happened in stablecoins. stablecoins. Like, a stablecoin's $1. It's the most boring thing in the world. But you have these whole DeFi ecosystems that are enabled by this institutional injection of dollars. I think we're going to see that pattern repeat for tokenized real-world assets. Probably that will happen in the next year.
Cool. Thank you so much, David. That was excellent.
Thanks for doing this.
Thanks, everybody.
Really appreciate it.
Please welcome Chairman of the Pirate Party, First Deputy Mayor of Prague, Zdeněk Hřib.
Ladies and gentlemen, it's a privilege for me to be here today at the Emergence conference, a fitting name, as crypto is finally emerging into the mainstream economy. And for years, crypto has been dismissed as a fringe innovation or playground for speculators, or even a tool, dangerous tool for bad actors. But Bitcoin has just hit 100,000 US. And when we first introduced crypto into our party platform back in the 2010, it cost perhaps a few dollars. And people thought we were a bunch of lunatics. And now I'm standing here on this stage. So the times have changed. But trading or speculation aren't the reasons we are here. We might stay for the freedom, but we are here because of the technology. And we are here to talk about how crypto can create real jobs, drive meaningful growth, and build better economy. Crypto is no longer in the shadows. With the markets in crypto assets regulation, or MiCA in the EU, and the election of the most pro-crypto US Congress in the history, the tides are turning. And the world is recognizing the transformative potential of blockchain and cryptocurrencies to reduce friction, cut agency costs, and unlock innovation. But let's face it, the Czech Republic has been shooting itself in the foot. We failed CoinMate, our own homegrown crypto exchange, when a Czech bank unjustly shut down their accounts. And this decision erased years of hard work and handed their main competitor, Coinbase, a significant advantage, while Coinbase went on to create 3.5 high-salary jobs. Those jobs should have been here in the Czech Republic. And we know these stories. And we have been living under a political system where banks were allowed to sabotage innovation instead of supporting it. But this system will change. So we have to stop this self-sabotage. However, crypto isn't just about currency. It's about creating a real economy. Imagine a world where international trade happens seamlessly, where banks no longer have monopolies on card payments, and where transferring ownership of a property doesn't require escrow. This isn't science fiction. This is the economy that crypto is building, if we let it. The Czech Republic has made lasting contributions into the crypto industry. We gave the world the first hardware wallet, or the first mining pool, and companies like CoinMate, Tatum, Satoshi Labs, Confirmo, General Bytes, Brains, or Rockaway blockchain fund are proof that we still have global players in the space innovating right now. To these pioneers, I say, we see you. We're rooting for your success, and we stand ready to support you. We are the only party in Czech Republic with a clear crypto policy. We have co-submitted a law to end this debanking, mandating banks to provide accounts to crypto companies and preventing closures without a cause. We co-submitted also a law for a fair capital gains taxation, a holding period for crypto to distinguish speculation from long-term investment. And these laws have just passed in the parliament today. So we are just one upper chamber decision and a signature of the president away from eliminating at least those most obvious problems. And this is what real policy looks like: fair, predictable, and supportive of entrepreneurship. And finally, crypto cannot be regulated by people who hate it. If we want to compete with hubs like Ireland, Dubai, or California, we need regulators who understand that innovation isn't the enemy, it's the future. So crypto isn't here just to stay, it's here to grow. While MiCA has laid the foundation, we must ensure that our regulations doesn't kick away the ladder for newcomers or stifle the entire sector into oblivion. Instead, we need policies that foster innovation, lower barriers to entry, and build a competitive system where Czech and European talent can thrive, empowering local companies to compete and succeed on the global stage. Imagine Czech Republic as a hub for blockchain technology. Imagine tens of thousands of high-salaried jobs in cutting-edge industries. Imagine an economy that doesn't just keep up with the world, but leads it. The winds of change are here. Even politicians who once opposed crypto are switching sides. But this isn't just about political posturing. It's about crafting a vision for a better future. Because we want a country that doesn't just survive, but excels in the global race for innovation. And the Pirate Party has championed crypto for over a decade. We don't just believe in its potential, we act on it. And we will keep fighting for policies that unlock growth, create high-paying jobs, support innovations, and build an economy where everyone can thrive. So let's bring crypto from the shadows into the real economy. Thank you.
Are stablecoins the key to mass adoption? Our penultimate panel discussion is moderated by Zach Guzman. His guests include Vishal Gupta, Friederike Ernst, Kevin Tharill, and Eduardo Morrison.
All right, welcome everybody. Thank you for joining us today as we dig into what might be considered boring in the world of crypto, but increasingly less and less so as stablecoins take off around the world. So a lot to dig into about the right way to do stablecoins, maybe the wrong way to do stablecoins, and what it's changing right now. We got a great panel to dig into all this, though, and I'll let them introduce themselves before I introduce myself. But Vishal.
Vishal Gupta. Most recently, I was head of exchange at Coinbase, in charge of asset addition, taking from 20 assets to 235 assets, launching 2 derivative exchanges. And before that, I launched USDC at Circle. I was head of USDC.
Cool. I'm Friederike Ernst. I'm one of the founders of Gnosis. We have built a lot of foundational infrastructure over the years in the Ethereum ecosystem, so things like the Gnosis Safe, CowSwap, Gnosis Chain, Zodiac tooling and so on. 2 years ago, we kind of pivoted a little bit into building consumer dApps, mostly centered around payments.
Hi, I'm Keone Tariel. I'm the Chief of Staff and Head of Special Projects at the Celo Foundation. I also am the founding steward for Stabila, which is a community-funded initiative looking at stablecoins in the Celo ecosystem. Happy to be in Prague.
Hello, everyone. My name is Eduardo Morrison. I'm a co-founder at Schumann Financial, which we are a MiCA-regulated stablecoin issuance business. And before launching this, I was head of institutional business at Binance for almost 4 years in Europe, Latin America, and MENA region. So pleasure to be here.
Yeah, and so today's panel is, are stablecoins the key to mass adoption? There's a lot to dig into in terms of what maybe that mass adoption even looks like and how different the world of stablecoins has become. If you're just getting into crypto, you might not have known. Vishal, maybe you're the first person to start with here because you've been there since the launch of USDC.
Yep.
But now we have a huge new wave of interest as Bitcoin crosses 100,000. Maybe we just start with how different the world of stablecoins is now versus maybe the past cycle and what stands out to you guys.
Yeah, I mean, I think it's pretty obvious that a lot of the core revenues in cryptos are now coming out of the stablecoin businesses. You see anchor tenants like USDT and USDC kind of making the lion's worth of the stablecoin revenues there, and you're going to see a lot more fragmentation in the market, given that that's happening, and people will want to find their way to their own revenues here. One thing I didn't mention, I was trying to go as quick as I could on my intro, but we're launching TrueX, which is a stablecoin-centric exchange. I think core infra is going to start to become a lot more interesting in this stablecoin world, where you're going to see not just 2 stablecoins that matter, you're going to see a proliferation of them. And with that, what's happened traditionally in the United States was there was a good deal of regulatory capture where only a few exchanges had fiat rails, and that would be the only rails that you could get dollars to turn into crypto. Now you've got this proliferation of stablecoins happening. You're going to see this regulatory capture wall kind of fall down, and you'll see more competition, more innovation, and all of a sudden, players like us can exist where we don't have. You don't have to rely on just Coinbase to get your assets from one place.
And I guess, Kevin, the idea of issuers, right, in terms of people launching stablecoins, the idea of what happens next in this world, where maybe it's not just a PayPal becoming the company or the name that's becoming the leader in stablecoins. I think we've also moved past that now too, where basically anyone can kind of get into the space.
Yeah, I mean, we're in a world where stablecoin issuance, we all know that supply has gone up so much. 190 billion is the current supply just for the USD stables. But what we are seeing on Celo is that we have multiple stablecoin issuers. So it's not just the Circles, the Tethers of the world, which we obviously love, but you also see a lot of local currency stables. So if you're talking about the LATAM corridor, there's a specific issuer there called Mintio. They have a COPM currency. You look at Brazil, they have a very strong payments network. They have their own sort of issuance requirements. So there are players like BRLA, BRZ who are issuing stablecoins. And then there's a bunch of other stablecoins which essentially also helps on-chain because you can actually create an on-chain FX market. So we have an issuer called Mento. They are a decentralized stablecoin. So essentially it's not a fiat-pegged stablecoin, but what it does is that it represents the value of those assets in a very robust way through oracles and all that kind of stuff. And there's also liquidity on-chain. So if you want to build use cases, local use cases, like we have projects that are doing peer-to-peer lending with Kenyan shillings, for example, right? So these kind of use cases, as we build, we actually allow for a more diverse and more robust stablecoin ecosystem. So that's kind of how we are seeing it.
Federica, I don't know if there's something that stands out to you that's very different this time around versus last, but you and I were talking before this about Terra and the collapse there, and obviously it was very interesting for both of us, I suppose, because we both looked at the project before the collapse. At Coinage, we did the first interview at DoCon after the collapse. That kind of put us on the map, but we've come a long way since then. But there are a bunch of projects that aren't all just, as we were discussing, dollar-backed. Not everything is copying Tether exactly. I mean, what to you is the most interesting break from prior cycles?
To me, stablecoins are not primarily a product for the global north. So kind of, if you kind of want to make a payment to me or to someone else in this room, most likely kind of you have a really simple way of doing it by a bank transfer or wire and so on. And it's probably also cheap for you. This is not the case for large parts of the population. So kind of the stablecoin offering as it stands right now, is majorly an offering for people who don't have access to US dollar denominated stables freely, right? So kind of like in many countries, having a dollarized account is actually a major status symbol. And in principle, this doesn't have to be the case, right? Kind of, we can give everyone a dollarized account, and there's no need to kind of gatekeep this from people.
Eduardo, you also, I know, have been looking at this too. We were talking before, remittances are huge. You're from Venezuela. And the idea of that, it's obviously, me being from the US, it's what we've seen. People from around the world want the access of the dollar. They want the stability of the dollar. Increasingly, though, as stablecoins offer that access to everybody else in the world, what have you seen as, in terms of the most exciting change?
Now, being from Latin America originally, it's impressive to see how stablecoins are actually used on a daily basis by a large number of the population, right? So peer-to-peer exchanges initially were basically Bitcoin-oriented, and that shifted towards 2019, 2020. Local Bitcoin was the first major peer-to-peer there in Latin America, mostly Venezuela, Argentina. They shifted towards USDT-based trading, and that enables the proliferation of stablecoins considerably. Right now, people hedge against inflation on a daily basis. They try to run from their local currencies in these countries, also Turkey, Nigeria. There are several examples of this. And for example, in Venezuela, where I'm from, more than 35–40% of the population uses a stablecoin on a daily basis. So it's fairly considerable how it has grown over those markets. And I think it's only going to continue when we see like innovations around using stablecoins across the daily base applications that people use in the fintech world. And just to give another number is that like in 2020, 3% of the blockchain transactions were around stablecoins. This year, I saw this morning, is almost 50% of all the blockchain transactions are stablecoin based. So you can see the growth in very short time frame. And my take is it's only going to continue.
Yeah, that stat kind of blew my mind when it comes to how many people are now using stablecoins. And obviously, if you're in the US, not that different from just using normal dollars in a bank account. But if you don't have access to a normal US bank account, very different. And I guess, Vishal, for you too, just in terms of how fast that growth has been, thinking back to your days in launching USDC to where we are now, is the main thing to watch how these other developing countries and people like that start to use dollars and what that does? We just have a new president coming in, so from a US perspective, it's very interesting to think about how that flip might switch and how quickly it might accelerate now.
Yeah, I mean, it's funny. We're seeing this natural evolution of the stablecoin market happen very quickly. You know, we're talking about USDC being launched in 2018, and this is not, we're not that far along from that point on. And you know, DeFi is something that we've been talking about for a long time. It used to be called open finance before like stablecoins really showed up. And you know, I think USDC is a primary part of why DeFi actually started to work. At some point, people were able to dollarize crypto transactions on-chain, and people were able to like really understand how to use on-chain transactions, and like USDC was kind of a gateway for a lot of that growth. I think it's really interesting to see that growth going from like whatever 3% to 50% of on-chain transactions are happening in stables. I think that's amazing. I do think, you know, what's happening in the US is clear. We're going to see clear path to regulation. So like, I think the US government will start to look at something like the stablecoin market as a growth vector for US dollar as a global currency. So they're going to start to lean into that, which is amazing for anybody that's trying to do business in the United States. It's amazing for the crypto community in general because 99% of the transactions, I believe, are like dollar denominated. So we're still not really seeing a lot of growth outside of the US dollar denominated. Now, there's a spectrum of what like people call stable coins, and I think we should probably set the table first and just say the risk spectrum here is you have US dollar fully backed, and then you've got like the algorithmic stuff, you've got kind of like the fully collateralized stuff. All those are different types of stable coins, and I think a lot of my focus is primarily on the US dollar backed. And then from there you have US domiciled and international domiciled, and you'll start to see innovations there as well. But I do think it's important that we start talking about the risk metrics around like the different types of stables, and we've talked about this a little bit backstage, but like there are different vectors of risk that our customers need to understand when they're looking for that yield that may or may not.
Well, Frederica, I think it'd be a good thing to maybe shift into, because this is the exciting and hot take portion of the panel where we dig into why that matters. Because I think with the Terra collapse of $40 billion going bust overnight.
I mean, I was famous before Terra collapsed. I said that best case scenario, first, an algorithmic stablecoin, best case scenario, it's worth $1. Worst case scenario, it's definitely not worth $1. But then I also listed Tether, I did list Tether also, I listed UST on Coinbase. So like, there's a balance here of risk. That
well, the main thing, and I guess this is the question, is that, you know, Web3 is all about community ownership and the idea of letting people, you know, gain in the network effects of transacting together, right? And what Terra did was it had a token that captured that value in terms of the network effect until it went bust. And with stablecoins, I feel like there are a lot of people who are winning that are kind of the people running these projects, and those people get very rich.
Issuers.
The issuers, but there's not a lot of ways to become, if you want to jump in here, outside of kind of the issuers themselves.
Let me say one thing before, I think my prediction is that you'll see a dollar-backed model that will allow for some of the revenues to start to float outside of just the core issuers. And I think that like it shouldn't be one issuer owning, you know, 98% of the revenue around the $30 billion stablecoin. It doesn't make any sense.
Yeah.
I fully disagree. So I think there's no reason why the global population should be conducting their economy in US dollars, right? Because kind of the US monetary policy is very much set for the 400 million US subjects, not for the 7.6 billion other people in the world. There's no reason why a Kenyan farmer should kind of conduct business in US dollars when selling their coffee beans to an Egyptian merchant.
I'm not an advocate for the US dollar necessarily, but I'm an advocate for like the stablecoin world. I think I was saying that historically the US dollar has been like the strength vector for stablecoins. I'd love to see euro, I'd love to see, you know, Turkish lira stablecoins. I'd love to see all those things. I think that we've seen traditionally a strength in US dollar denominated.
Yeah, I think kind of like this would go for any other currency as well. So kind of what that would do is kind of transposing a system that we've had for a very long time for historic reasons into the Web3 world, where kind of now with the technology that we have today, we can actually build much, much better money for everyone. So there's no reason why, in principle, money issuance has to happen at the level of banks, right? Kind of like in today's monetary system, central banks can print money and retail banks can print money against credit. And that's actually a really good business model, and there's no reason why kind of the profits from that should kind of accrue to the shareholders of those banks rather than the entire world population. When we live in a technological era where cryptography actually makes it possible to kind of issue money on the personal level. And I mean, we've built a lot of infrastructure over the years, and kind of it's widely used in this ecosystem. But kind of for our very next project, Circles, we're embarking on a much more ambitious project, and it's nothing less than kind of reinventing how money should work in this day and age. And it should not be pegged to any one currency.
So if it's not fully backed, what is the ideal model? Like, again, like there's a risk metric here, right? So like we've seen Athena, we've seen UST, we've seen like MakerDAO. Like there's all these different models that people have tried, and some are very successful. Some are, you know, I use fully backed because you know, you're fully backed. You're over-collateralized, and I use that in quotes because you're over-collateralized only until you're under-collateralized. What's the ideal model for you, I'd say?
Yeah, so kind of the model that we're launching called Circles, it's coming out in January, February, it uses a decentralized web of trust-based model where the money is not backed by any value that kind of you would recognize as money. It's backed by the person themselves. And kind of if you kind of step away from kind of like this notion that kind of money needs to be backed by something, to me kind of money is very much a social contract, right? Kind of it's the promise that you can still buy something from this thing that we call money tomorrow, right? Kind of like if the earth were to disappear, all your money kind of, all the backing doesn't matter, right? It's kind of just a promise. And that's intrinsically what kind of all kinds of money
Sounds like Bitcoin, but yeah, I mean, it's...
It is, and it is. Look,
well, that's what I was going to say. It's like Bitcoin does seem...
So kind of it is kind of in the algorithmic issuance that it has. It is very much like Bitcoin, but the problem with Bitcoin is that it's incredibly front-loaded, right? So kind of like everyone who already has bags, they will be immeasurably richer than everyone who comes today. And in 80 years, when the last Bitcoin is mined, kind of it'll be a distribution, kind of like everyone who joins the system anew will have no incentive to kind of join the system. So kind of you need to find a system where kind of people want to join today, but where you don't make it impossible for people 100 years from now.
I think that's, Vishal, to kind of use your point there in terms of regulatory capture is a little bit of it too, in terms of the people who enter the market first shouldn't have all the advantages. And opening it up obviously is very exciting for the crypto industry itself. Eduardo, I suppose on the user side though, really what you want if you're looking at a stablecoin by virtue of the name is stability. Especially if you can't access dollars, you just want your money to be worth what it was before. And obviously, Kevin and Eduardo, I don't know if there's anything to add there in terms of maybe the use cases that you've seen that have been exciting in tapping into the network effects.
Yeah, I think we've been kind of, you can say we're kind of like joining these philosophies together because since the very beginning, Celo as a blockchain launched to try to be a global Venmo back in the day, and we've always had like stable currencies, decentralized stable currencies, and we've thought a lot about this, like how do you issue decentralized stable currencies? We have a reserve mechanism which is now pivoted to a separate team, Mento, which is a standalone team, and they actually, so we have like around, I would say around 30 million Celo stables which have been which are outstanding in the market, issued by Mento, and it has a reserve, like, I would say at the current prices around 150 million, so it's like 5 times collateralized. And again, it's Bitcoin, Ethereum, these assets. I mean, that is definitely a model that I think works. I think it's especially like if you want to launch, currencies, like we have DAOs, that are working with local partners to issue a Filipino peso. We have, communities in Kenya issuing the Kenyan shillings. Now, this currency is being utilized for peer-to-peer lending. Now, what you want in these countries is that because of inflation, obviously everyone wants to save in the USD. But if you want to spend, if you want to borrow, you want to do that in the local currency. And that's the kind of switch that we are seeing where users are actually willing to save in US dollar. And this is something that I don't know if you guys have heard of, but we have a wallet called MiniPay, which was launched with Opera, and it's within the Opera Mini browser. It's also a standalone app on the Google Play Store. So you can store value in USD. You have USDC, USDT, CUSD. You can swap between any of these assets. The user only sees the USD balance or the local currency balance. They don't have to worry about whether it's issued by Circle or Tether or whatever. It's all great because it's all one-to-one moving. But at the same time, you can also then use it to pay bills in your local currency. You can you can essentially send to your friends the money because it's all mapped with your phone number. Whatever gas is needed to be paid, it's also denominated in the dollar currency. So USDT or USDC. So it's a much more simplistic way to kind of like approach this problem because essentially if you want to onboard these users, you have to abstract away all this complexity. And that's kind of like what has been our approach. And I mean, MiniPay so far has grown tremendously. Like it's a stablecoin wallet with more than 4 million users at the moment, and I think it'll only grow. So that has been our approach, and this is something that is, the kind of philosophy of Celo has always been like, how do you kind of like go to the end user?
Yep.
You build a mobile infrastructure, you have the blockchain, let's combine and make some magic happen. So that's what we've been doing.
I do agree with you, Kevin, in the sense like the stablecoins, once they are embedded in the day-to-day user base, is like when we can bring more and more users. So a good example for that is being all over the news this year is Telegram wallet, how they have embedded stablecoins there and others. And it has been amazing growth, in this case for USDT there, but I think it's only going to grow from there. Specifically for us, we're focused on the European market, and there is an interesting market dynamics happening right now due to regulation specifically, where exchange trading is only going to, or is going to change across, regulated stablecoins under MiCA regulation, right? So we want to start there, specifically issuing a Euro stablecoin that has a strong banking partners, has a clear regulatory framework, and overall like auditing perspective. And the idea is to first work with the overall exchanges that are already regulated in Europe, and then find specific niches or angles where we can add value to users. So specifically, there are some of very interesting corridors for cross-border corporate payments. So some of that we mentioned are Turkey to euros, Mexican pesos to euros. We have Brazil reals to euros, and Africa francophone. All of those are sending millions of euros in terms of remittances on a daily basis. And the intention for us is to participate in that business, working in joint or in joint venture in a way with the last mile delivery services, so M-Pesa in Africa and all of those.
Yeah.
So that's something that is going to grow.
Well, I think what's been interesting, and maybe just kind of get into the final chapter of our panel, is kind of, where stablecoins began was in the world of crypto, just having a place to store your money outside of Bitcoin's fluctuating value. And now as crypto expands into real world use cases, it's now suddenly how you send money on the internet in a faster, cheaper way without maybe so many regulations in the way, which is great for us as a community-owned show at Coinage to be able to pay a dividend to people around the world just using stablecoins. Which ones, how we do it, we're figuring that out. It's happening now. But it's very exciting to even be able to do that. And I guess with our last 5 minutes or so, as we look ahead to the next chapter of stablecoins and we move forward, one of the cool things is we've talked to this whole panel about humans using dollars. We're getting very close to the age of AI using money on the internet. Maybe not just dollars, but I'm curious what you guys think the next chapter of crypto starts to look like, what the next chapter of stablecoin starts to look like.
So I think the battle cry here is that things are changing, like really quickly. Like in the last 24 hours, Trump has made a crypto AI czar with David Sachs. That's just amazing that we now have someone in the government that's talking about crypto and AI. We know that the regulatory capture wall has come down in the United States. You can expect for competition to hit against the exchange space, where Coinbase is 75% of the volume. The US dollar denominated domiciled Circle format is just going to come down. You're going to see players like PayPal, but also new players come in and really offer more and more stables. I think that the battle cry here is amazing time to be building, amazing time to be doing this in the United States as well. So that's really exciting. I think with AI kind of merging with what's happening in crypto, and especially with clearer and clearer regulation, I think what's getting me excited is that in this new world, you'll start seeing AIs talk to other AIs, AIs starting to command other AIs to do jobs for them. You'll see AIs paying each other because they can't have bank accounts, they can't have wallets, they can't bank accounts or credit cards, they have wallets, and they can start shooting USDC or another stablecoin back and forth. So I think my prediction for the next 2 years is that stablecoin infrastructure is going to continue to play as a really important factor as we see more and more fragmentation in the space and more opportunities and competition.
Yeah, the AI payments on chain are already happening. So but even today, it's the majority of payments on Gnosis chain are AI to AI. It's tens of thousands per day.
Yeah, I mean, as we continue to grow, I guess with our last 4 minutes or so, we'll just continue off of Shaw and go down the line in terms of what you're most excited about in the next chapter of stablecoins, because, as you said, now it's finally possible for that to happen.
Yeah, so first of all, rolling out access to the people who really need it and benefit from it, because to me that's a very clear value proposition. And then democratizing the stables market by making money better.
Yeah, can't top making money better. That's Zhou's goal is actually, we actually say money is beautiful and, prosperity for all and to everyone here. So I think, for us, I mean, we haven't talked about a bit of the macro situation, right? Like, we have talked about the elections and all that, but like, the recent thing with Stripe acquiring Bridge. So I think it's also like, it's so much easier now to actually issue a stable coin. So, when you go to an enterprise or a business or, even a community DAO, I think it's become much, much easier to actually launch a stable. So I think the obvious take is that we're going to see a lot more issuances of stables. I think what would happen eventually is that there has to be some way to differentiate between these because, there will be some people who might come with a, quick rich, get rich quick kind of a scheme and some people who are genuine. So trying to navigate that will be important as, we actually issue more and more stables. And yeah, I think it's also important to kind of always see what the use case is, because at the end of the day, as it's great that, the volumes are growing, but we also want to see that these things are actually helping solve real world problems.
I think that today there are around 200 million wallets transacting every day with the stables. My take is that it's only going to grow from next year onwards as regulatory clarity enables in Europe, in the US, hopefully, and globally. So it's only going to grow. More like regional stablecoin issuers are going to grow, hopefully, and participate in the market. And probably we're going to see a lot of these FX markets on chain being developed in ways that we haven't seen now. But the key to that is unlocking that liquidity that enables using the stablecoin on a daily basis by big banks, big institutions, and participating on that is what we're betting on. So.
Yeah, and I guess, to end on one take that maybe, I don't know if it's hot or not, but it sounds like we're all on the same page about CBDCs not being a thing. That threat may be too large.
Yeah, I don't think, again, talking in the US dollar denominated world, I just don't see that regime happening anymore. And honestly, I don't think anybody would want to use it. So I think that's been nipped in the bud.
Yeah, a 0% chance, I believe, was the headline that we would use from Vishal to say that those things aren't going to happen. But I thank you all for sharing your opinions on stablecoins. Clearly, obviously, I think the main takeaway from the whole panel, and thank you guys for your thoughts, is just that it's an entirely new world now that we're entering into this in the next chapter of stablecoins. I will take back what I said earlier when we started this. Stablecoins are not boring, clearly. I think that's hopefully the one takeaway from the panel. But thank you guys for joining us. Appreciate you sticking around at Emergence, and thank you guys for everything that we learned.
Thank you.
Once in a name, the race to become crypto's prime broker. Our final panel discussion of the conference is hosted by Lawrence Lewitton, with his guests Bill Hardite and Barhite and Joshua Lim.
Hello, everyone.
Smoking thick bars to bind, got my mind made up all night. I'ma stay up and fuck a lot, but nah, I ain't a player. Girl, I house you in my hut, thinking of a rhyme, trying to hold my nut. All mine on the cut, contest MC.
Welcome to the last event before the game show, which Frank, by the way, originally it was going to be just $20,000, but Frank is putting his own money in, so it'll be $30,000 to the winner. If you guys want to watch people win money, stay tuned. Go to the Emergence stage after this event and watch Frank lose cash. Okay, so this final panel is called What's in a Name? The Race to Become Crypto's Prime Broker. In the rapidly evolving cryptocurrency market, prime brokers play a crucial role akin to their counterparts in traditional finance, serving as intermediaries between institutional investors and the market. They offer a comprehensive suite of services designed to streamline the trading and management of digital assets, including custody, trade execution, risk management, lending, capital introduction, and consulting. Crypto prime brokers facilitate trading across multiple venues, enabling institutional investors to implement complex strategies like cross-exchange arbitrage, statistical trading, and market making. They provide the necessary infrastructure and services for institutional players to navigate the complex and volatile crypto landscape effectively. This evening, we are privileged to have two distinguished leaders who are at the forefront of this dynamic landscape. We have Bill Barhydt. He's the founder and CEO of Abra, a prominent crypto wealth management platform. His extensive background includes roles at the at NASA, not the NSA, NASA, the CIA, Goldman Sachs as well. And in 2012, if you had been paying attention to him, you would have seen the very first TED Talk on Bitcoin hosted by Bill. Next, we have Joshua Lim. He's the co-founder of Arbellos Markets, a trading firm providing principal liquidity across crypto derivative markets ranging from high-touch to programmatic. They build infrastructure that increases transparency and trust in bilateral OTC derivatives. Prior to this, Josh led derivatives trading at Genesis and Galaxy Digital. Welcome both Josh and Bill.
Thank you.
And of course, together they're bringing an incredible wealth of knowledge to our discussion of the evolving landscape in crypto prime brokers. So let's start off with this. How would you define crypto prime brokers, particularly obviously in the cryptocurrency space, and how is it traditional than TradFi? I want to ask you first, Bill.
Yeah, look, it's the definition is the same, right? I mean, it is a broker servicing brokers, other institutions. In this case, in the crypto space, we service via our prime brokerage everything from exchanges, miners, hedge funds, a few banks, family offices even, and meet all of their trading, credit, lending, derivative, yield needs. And I think there's a lot of overlap in what you would see in a traditional prime, in the equities world, now in the crypto world, and the capabilities are kind of inching towards what you would see there, with some key differences, because crypto trades 24/7. We have, this concepts of perpetual futures contracts, which we don't really have in modern equities yet. And so taking advantage of the nuance, and DeFi, of course, which we don't have in traditional equities. So there's some nuances of crypto prime versus TradFi prime, but more or less the definitions are the same. Clients are a little different, although TradFi is now making their way into our world as well.
And Josh, you want to add to that?
Yeah, I think prime brokers in crypto, like the term of prime broker started to really emerge as like a category in 2018, 2019, and everyone in crypto, I'm sure you guys recall, wanted to become a prime broker in some way. I think because the way the industry has evolved organically, the sort of idea of a prime broker in crypto can originate in a lot of different business models, right? There's some custodians, let's say a BitGo or Coinbase Custody, that have wrapped prime brokerage products and services around their initial custody offering, and then there's some lending firms that initially were just providing yield to, let's say, high net worth or retail customers, and then they eventually became like a lender of assets to hedge funds and venture firms and things like that. That was a big phenomenon last cycle, obviously. And then there's a lot of principal trading businesses, let's say like a Galaxy, right? Which is originally just they take risk on their balance sheet, they trade with other counterparties on a sort of like an arm's length basis, but now they're sort of a service provider where they're offering loans and execution services to some of those counterparties as well. So it's sort of evolved to become closer to the idea of a prime broker in TradFi, but it's originated in a lot of different ways within crypto. That's one thing. And just to add to what Bill was saying, the diversity of ways that you can trade, types of venues that you can trade in crypto, whether it's like CeFi or bilaterally with directly versus a counterparty with no intermediary, or on-chain, like the DeFi world. These all have very different, operational and settlement characteristics, very different ways of matching risk together, right? Like if you think about an AMM, there's not that traditional order book for matching buys and sells. All these things in crypto then require different ways of funding the trade and settling the trade, and all have different risk profiles than you would in TradFi, where it's sort of like all regulated exchanges like the CME or the NASDAQ or whatever. Like those are all very not fungible, but they're sort of like compatible in the same settlement layer. Whereas in crypto, obviously everything is very different. So I think that's like, those are the key differences.
But primarily, what services, if you were to say, like, what were the most important services you think that the prime brokers are now providing the crypto world that maybe even differ from what you would have seen in traditional finance, and particularly for institutions? What differences are you finding, and where is the primary focus here?
Yeah, I'll give like a very concrete example just so people have a good idea. So let's say you are long a spot token, right? Let's say you're long Ethereum, right? And the best way to monetize that position is you want to have it staked somewhere to generate yield. So let's say you wrap it in Lido and you have staked ETH, right? Now, at some point, you might want to hedge that position. So you might want to go short a perpetual swap or some sort of futures instrument against that spot position. And so you might do that by selling, let's say, a perpetual swap on Hyperliquid, right? So now you have like maybe a position inside your custody account, at Coinbase or something like that, which is a spot position, and then you have an on-chain perp. Ideally, you have some institution that can read your risk on a spot exchange or in your custody wallet, and then it can also read your risk on these trading venues, and it realizes that those two things net off. And because they net off, then they can give you some credit so that you can go short those perpetual swaps. And it's capital efficient for you to do so instead of you posting an additional 10, 20% of collateral on the derivatives exchange. So to do that, you need to have some firm that can read risk across multiple venues, but also can do the risk assessment to give you some credit or financing. So those are kind of like the two things that are, I think, very important for prime brokers is market access and financing.
Bill, jump in on that one. Feel free to add.
Yeah, so there are a few things that happen in our world that just don't exist in the traditional finance world. So everything from we service miners, right? Bitcoin miners who might want auto liquidation services, which is probably well, it's probably a multi-billion-dollar business now, and that is literally what it sounds like. So you miners win blocks, they want to have those blocks liquidated because their participants in their network only want cash, and so there's rules and processes around dealing with that. Sometimes they want to earn yield on those positions if they're not converting to cash, and they can do that via simple covered call strategy. There are many miners in our network that are sitting on a lot of Bitcoin that they have no interest in selling. It's kind of the opposite of the auto liquidation, and they'll look at everything from yield strategies, very simple via covered calls, to more sophisticated yield strategies that we have on Bitcoin today. Then we have clients that want to do post-trade settlement, which is more traditional prime brokers, where you're effectively extending credits to clients. Then we have, let's see, what else are we doing? ATM networks, so we replenish a lot of the ATM networks, which is more of a simple spot trade. But again, we're often extending credit to them because if the Bitcoin price is mooning or actually falling precipitously, they tend to have a higher transaction volume.
Well, you mentioned miners that are liquidating or else holding and want yield, but we're also finding some miners are even acquiring. I mean,
that's true.
Are you finding a way to facilitate that very quickly amongst clients and things like that?
The large ones, especially if we're holding some collateral, it's very easy to do a spot trade that settles in 24 or 48 hours, right? Because we're holding probably more collateral than what they're actually buying, to your example. The other thing I would say is that's kind of emerging as a very new but rapidly growing use case is stablecoins. So we see a lot of institutions, funds, payment companies, whatever, coming to Abra and saying, okay, we basically need to manage stablecoin payment flows, and it's this much per day, and we need the spread versus, you know, buying via bank wire to be this, and so we're managing those stablecoin purchases and liquidations very rapidly for different types of companies now, and you're almost replacing the banking system for those companies, right? So they're using a prime to say, okay, well, I want a B2B payment flow, and I don't want to deal with the banks, which is why I'm using stablecoin in the first place. So our flows, and even our onboarding, kind of look more like a bank for them in that regard, but they're just institutions, not retail, obviously. And we're seeing a lot of that now.
And you're lending out, and
absolutely, absolutely. So credit is, as Josh said, credit is always kind of the key kind of driver for things in a prime world, meaning how much leverage can I get as a business in whatever I'm doing. And you know, we both run, you know, options and derivative and structured product businesses with slightly different focuses, and then, you know, we'll partner in different areas. But the street is getting way more sophisticated. That's a real key takeaway, I think, is that, you know, when I was having this conversation 4 years ago, and we were starting to do institutional services for some of our partners, it was very basic, right? I mean, we had deep liquidity because of our retail businesses and our wealth management businesses, and so we would funnel some of that, or vice versa. Now it's like, it's structured products, it's hedging, it's, you know, derivatives, it's, you know, advanced trade settlement, and, you know, it's...
Right. Of course, we've seen the crypto market balloon by several $1 trillion just on market valuation, but also the derivatives that are going on in the markets. We're seeing notional amounts, incredible size, and we're seeing premium in the options markets, futures, et cetera. Josh, what other kind of changes are you seeing?
Yeah, I think if there's a dominant kind of driving force in crypto, it's sort of this idea of like disintermediation and decentralization, right? So it's sort of incongruent with like most of the way TradFi works, which is just towards centralization and sort of like consolidation and more of like a winner-take-all type of market, whereas in crypto, what you constantly see is like fragmentation, like new venues launching, people getting displaced as like the most liquid venue for whatever asset. And that's really like what is driving the need for these prime brokerage services. It's basically the fact that like, you know, I mean, people weren't talking about hyperliquid like a year ago, right? But now it's sort of like everyone is talking about it, everyone's trading on there. And now you need to actually think about like, how do I margin a position across multiple venues, which might include hyperliquid. It might include more regulated venues like a CME, or, you know, it might even include like the new ETF that just listed options, right? So ByBit, things like that. I think another very prevalent trend is every firm in crypto, every trading firm, it's kind of like the opposite of what happened 5 years ago, where it's like every TradFi firm has to have a crypto sort of plan, right? How do I get into crypto? How do I build crypto products? Now it's sort of like, we're all these crypto native firms, all of these firms that grew up in crypto and have maybe started very small, but because the asset class blew up, we're all now very big firms like Binance, et cetera. We all now have to have a TradFi strategy, right? It's sort of like, how do we access ETF options? How do we access CME futures? And a lot of this is going through other service providers within crypto, and even sort of like TradFi firms like, let's say, Goldman Sachs and all these other firms that have started building crypto arms that can give you access to these other markets where inevitably, right, within a year or two, these markets are going to be bigger than the crypto native markets that we operate in. As much as we like to think like it's always going to be Binance and Uniswap, like basically a lot of liquidity is going to migrate to the ETF and other instruments, and so we have to be prepared for that. Yeah.
You know, Bill, going off of that, you mentioned, of course, that some of the traditional TradFi prime brokers are kind of trying to step into the crypto space now. How is that going for them?
So I think there's a lot of overlap with the traditional world, and I'll tell you where I think this is going that's very different than probably traditional prime space, right? So right now, we can price options, structure products that use kind of, underlying, puts, calls, strategies that look and feel very similar to what you would do in the TradFi world, and it works. It's fine. We have the expertise to do it. There's other firms that also have the expertise to do it. And part of the issue there, and that's the same issue that primes have faced for 30 years, is counterparty risk, right? And so we've seen in the TradFi world what happens when all of the primes have exposure to somebody who's wildly over-leveraged and fails. Right? There's been multiple instances over the decades where, a few banks have almost brought down the entire system of primes who didn't know that their largest counterparty was the same firm who was in the process of failing because they were wildly over-leveraged. So I think what's going to happen, and this may represent a tailwind because of the recent US elections, is that it's now going to become feasible for TradFi firms to access DeFi rails in addition to traditional derivative products. And that also serves a few purposes, but it allows them to trade 24/7. It eliminates a lot of counterparty risk in the systems, and it creates new product opportunities like some of the perps and kind of other derivative products that are based on smart contracts. And so now I think you're going to start to see mashups of traditional financial derivative products that we might work on versus also taking part in DeFi-based offerings that would have been off limits. Certainly with the current outgoing US administration that polices the world, unfortunately, it's been a big problem. But I think that veil's about to be lifted on TradFi to access DeFi rails.
Josh, along those lines, of course, we have this change in administration that Bill was just talking about. That's going to change regulation. And we might see that not just overlap. Do you think the buzzword that everyone's using, of course, real-world words, real-world assets, tokenization, do you think that ends up, how are the prime brokers, crypto prime brokers, positioned right now for that? Do you think that they're going to be able to maybe even step into the traditional finance roles? Are they capable, or is there a weak point there for them just maybe not having that institutional knowledge and age, so to speak? I'm not expressing my own age bias for being as old as I am. But do you think that not having that sort of institutional memory for the crypto prime brokers is a negative in this new world?
Yeah, that's a great question. I think so. TradFi has like a couple hundred years on us, right? In terms of just building an institutional memory and sort of like best practices on how to handle margining and risk netting and things like that. But I think crypto sort of did a speed run in the last 5 years, right? So like basically through all the things that happened last cycle with FTX and Three Arrows, like those were major milestones for crypto that really reshaped like the entire prime broker industry. So basically, like if you turn back the page, to 2020, 2021, what we would call prime brokers, a lot of those firms don't exist anymore, right? Like Genesis and BlockFi and Celsius. Those were the firms that people were relying on for financing and execution, market access. And this generation is very, very different from that generation, and I think they've learned a couple key lessons, right? Lessons around sort of counterparty diversification and concentration of risk, right? That's one big thing. The other big thing is just the nature of like, collateral, right? Like collateral ratios and how correlated different types of risks are and what types of collateral you need to hold against them. I think now if you look at sort of the lending market in crypto today, very little of it is unsecured, and very little of it is secured by low-quality assets. It tends to all be like Bitcoin or ETH or mostly stables, right? And so I think those are the lessons we learned. Now, what are the advantages that crypto has over traditional prime brokers, which I think is what you're asking. A big part of it is sort of the RWA angle that you're mentioning, which is if assets are tokenized, first of all, they can travel on rails that are, like Bill was saying, 24/7, right? So in terms of managing collateral movements and reducing counterparty risk and increasing capital efficiency between different counterparties globally, it's kind of unparalleled in terms of that. When you have a derivative position open with a counterparty that's halfway across the world, and crypto, first of all, is moving 24/7, so there's less risk of like a jump move that you can't hedge, right? Because like things are moving continuously. And then the second thing is when there is a margin call, that margin can travel across blockchains instantaneously. So that's a big advantage. And then the other thing is capital efficiency, right? Which is basically last cycle most stablecoins were non-yield bearing stablecoins, and Bitcoin itself doesn't have native yield. This cycle, a lot of assets have some sort of embedded staking yield, right, like ETH or Solana. And obviously, the stablecoins that do exist today, a lot of them are backed by treasury bills and are passing back yield to their end customer. And so that means I can post these types of assets as collateral against a derivatives position. I can use these assets on exchange to trade perps, and I will still get yield against my collateral assets, which means, let's say I'm borrowing at 10% to fund my Binance position. Like I might be able to get back 8% on the collateral that's sitting in there because it's a yield-bearing asset rather than it's sitting idle, which reduces my cost of capital by 70%, right? That's like a big deal.
So, but just comment on that. I think the integration of DeFi into the prime world is kind of the key. I think it's going to be the key driving force for why people would care about tokenizing real-world assets. And there are some examples already, because if you think about what a stablecoin is, or if you're using Ethereum-based marketplaces like Aave or Compound, right, they have what's called wrapped Bitcoin. The stablecoins that are in use there, not Athena or DAI, but like USDC, Tether, it's a physical real-world asset, dollars sitting in a bank. You've created a wrapper around that token, and that wrapped token is now available in a DeFi protocol. Same with Bitcoin, right? Ethereum has no concept of Bitcoin, so we've created this concept of wrapped Bitcoin, and now Coinbase is trying to take that over with Coinbase Bitcoin. Basically, you put the Bitcoin into custody, you create a new token which represents your rights to a piece of that Bitcoin, and now you can use those tokens to participate in the lending and yield marketplaces, right? Which makes a lot of sense. So now that we've proven that that works for other crypto assets that aren't normally fungible with Ethereum, namely Bitcoin and dollars, it makes a lot of sense to say, well, what other assets would we like to have fungible with all of the tokens that are sold and marketed and lent and generating yield against in Aave and Compound? Real estate, probably stocks, fixed income instruments, outstanding bank loans, right? All of these asset types are going to be converted and tokenized and made available in these marketplaces and will be fungible and tradable 24/7.
We hit on this a little bit just now when we talked about institutional memory. Of course, institutional memory didn't help stop the global financial crisis. And we also talked about a previous crisis, just the last cycle, where some of our leading institutions failed in crypto. Do you see, with this new world of tokenization, with this, not new world of course, but with the growth of tokenization and the embrace of crypto by institutions, but also the embrace of crypto, of that kind of tokenization, do you see any potential Lehman-like moment happening in crypto now that might echo what happened with counterparty risk a generation ago in the global financial crisis?
Yeah, it's possible in the traditional finance rails. I think less so in the DeFi rails, and that maybe is the advantage. Look, I think that what you're referring to as institutional memory, it's kind of a bullshit concept because human nature is human nature, right? And people have historically been driven by fear and greed. And my guess is that until we become Vulcans, we'll continue to be driven by fear and greed. And that's the way of things. And so I think DeFi, because of the way it works, you can't hide leverage excessive leverage in a DeFi system. You can't be under collateralized for a loan. You will get auto liquidated, full stop, to put you back in compliance on a loan, right? You can't hide being over levered like traditional primes have done, right, in the traditional banking space, right? That will happen again in the TradFi space as well. So my point is like, if you look at the emerging structured products that we work on, the traditional derivatives, other primes, the more primes there are, the more places you can go and repeat your leverage. You always have prime brokers who will do things like, oh, you seem like you have a great balance sheet, I'll give you a whole bunch of credit with no collateral. And if they do that same deal with 4 or 5 prime brokers and they all go out and buy the most volatile asset they can find in the crypto space, that's not going to end well, right? And if you get really big banks starting to do that, that's really not going to end well. And it will reflect on us as opposed to the kind of natural fear and greed inherent in a lot of the people making these decisions. That's why I'm very bullish on DeFi, because it doesn't eliminate the opportunity for the fear and greed that drives a lot of the markets. It eliminates a lot of the shenanigans that the public doesn't understand what the banks are doing with the money that they've lent them in the first place.
So no credit default swaps happening in...
No, put them on chain, right?
So Josh, jump in on that.
Yeah, I mean, I think what happens in crypto a lot, this happens cycle after cycle, is just you start with a really good idea and it works at a small scale, and then you try to scale it up to like $30 billion, and that's kind of where it fails, right?
Celsius and BlockFi.
Yeah, or Luna, right, is a good
Right,
example.
exactly.
Like you can pay 20% like incentivized yield to something when it's like $100 million, but when it's $20 billion, that's like not sustainable. But yeah, I think, so I mean, to answer your question, like I think eventually something will break in crypto, but overall, like right now things are in a pretty healthy spot, right? There isn't really that much like unsecured extension of credit as much in crypto. And I think people are still very like mentally scarred from what happened last cycle, so people are taking a lot of precaution about how they interface with counterparties. I think the one area that is risky is that because there are so many new venues, and all of these venues between TradFi and crypto take different forms of collateral. And right now, we're in a point in the cycle where things have run up a lot, and people are going to start doing basis trades, right? Like, oh, I'm long on this venue, short on this venue, and I think this is a riskless trade. It happened last cycle with like Grayscale, right? Like people did the Grayscale ARB. It's going to start happening again this cycle, and because there's different forms of collateral, some venues only take dollars, some venues will take Bitcoin, ETH, a basket of alts. You're going to get these mismatches, and then people will get blown out on that trade. The question is just how much will the prime brokers allow these types of trades to scale up? Yeah.
So we only have, unfortunately, 20 seconds left. This should have lasted 3 hours, as far as I'm concerned. Make a note of that, everyone. Next year, this will be a lot longer. What do you think was going to happen in the next 5 years? Let's start with Josh.
I think crypto will eventually be included as a reserve asset for a lot of countries, and who knows if that happens this year or next year or 5 years from now. But I mean, it's effectively just the version of digital gold that an internet-native world deserves, basically.
No.
Yeah, I think the biggest change that crypto is going to bring in the next 5 years is that as more institutions come in and you see that these services are being provided via smart contracts, crypto, DeFi rails, is you're going to have, for the first time, the same services available to retail consumers that you have to institutions and governments. And we've never had that in banking before or investment management before, and I think that's pretty exciting.
Well, thank you very much. That was Josh Lim of Arbellos Markets now, and Bill Barheit of Abra. Thank you very much, everyone, for coming to Emergence. This is the last event before the game show, so this is the last panel discussion in Prague. Thank you very much for attending. It's been a tremendous pleasure seeing everybody and talking to you all, and we hope to see you next year. But in the meantime, please head up to the Emergence stage and watch somebody win $30,000 of somebody else's money. Good night, everyone.